السلام عليكم ورحمة الله تعالى وبركاته والصلاة والسلام على سيدنا محمد وعلى آله وأصحابه وصحاباته أجمعين. أما بعد, welcome to this ninth ITS International Takaful Summit once again in London, and themed this year, rethinking the Takaful model. And one cannot but praise and commend the consistency of Afkar in providing what is actually the only venue and get together in the world on Takaful, on thinking about how to improve the Takaful model, and actually providing the only intellectual arena where we can freely discuss our success stories and our issues. Of course, we do have a lot of many others Takaful conferences in the world, in KL, in Dubai, in Bahrain, but certainly they're more commercial minded. Why rethinking the Takaful model? Because Takaful has some major issues coming to the forefront. We know that the growth of Takaful in Malaysia is at the best flat, and perhaps in the Gulf, in the GCC countries, is perhaps going down a little bit. So we do have a number of issues that we want to discuss today and tomorrow. And of course, we know that when we have a problem, there's always, almost by definition, an opportunity that we can grab. Before giving the floor to Iqbal Asaria, I just wanted to sum up yesterday. Yesterday we had a very interesting masterclass, once again hosted very, very generously by Norton Rose. And I just wanted to sum up 3 or 4 themes that emerged yesterday to the benefit of many of you that were not there. The first one was about pension funds in Europe. We had 3 key presentations. The first one by Iqbal on European demographic. The second one by Faisal, the CEO, Karbani, the CEO of Simply Sharia. And the third one by John Gilbert. The third one by Graham Peacock. And the 3 of them show how Takaful could provide a solution to the many issues that are besetting the pension system, not only in this country, but in all European countries, of course. And this is a golden opportunity, in my opinion, in our opinion, not only because it's business, and we are in business here, but also because it possibly will give us a way to disenfranchise Takaful vis-à-vis European societies, and show how Takaful could really provide a bit of benefit to the societies we are living into. One good example was given by a presentation of Samir Al-Ahmad of Rayan Bank, ex-IBB, on this student loan scheme based on Takaful. So this was the first area that emerged, the first topic, and we will have plenty of time to discuss it today. The second topic, the second area, was that the model itself has a lot of issues. And we had 2 key presentations, and all presentations will be put on the website of the ITS, of course. The model itself has a lot of problems. Perhaps the most evident is this hybrid nature, the conflict between the shareholders fund and the participant funds. we had a very clear presentations made by Zainal on the 5 issues that we have to resolve, actually, to progress the Takaful agenda, and by Suzanne, that presented 8 different jurisdictions in the world where Takaful is regulated in a different and sometimes contradictory ways. Zainal made a very important point yesterday. He mentioned problems and proposed solution. One thing that really, in my opinion, was quite important is that he said that the Takaful model should be locally, not nationally, locally based, and introduce the idea, and we can discuss it today, of Sharia-based Takaful against or vis-a-vis Sharia-compliant Takaful, which is actually a very important point because Sharia is not a petrified model, and Sharia always, by definition, whatever is said, it's always take into account local circumstances, local problems, local areas. So this is a comment made by Zainal that I think will deserve more discussion today. The third theme that emerged yesterday was that in a way, the Takaful propositions belongs to Europe, to our societies, since time immemorial. We had, of course, John Gilbert introducing, talking about friendly societies in this country, and the regulatory changes that may provide a way for Takaful capital to be injected into the friendly societies. But also we have, of course, the German mutual cooperative model that could be seen as a venue for the Takaful propositions in Europe. And also we had a presentation of Anas Patel from Paris on a Takaful product that has been developed nowadays by Anas in France. So pensions, the model, Europe and Takaful, how to progress Takaful in Europe. Last point was very interesting. Last presentation was made by Dr. Aksa Aziz on the first experience we had in Europe, in the UK, in Europe, on Takaful de Salama insurance. And he went into a very detailed analysis on why Salama didn't fly. And Bradley was there. It was a very interesting, discussion on the reasons why he went into very quickly into a runoff. Certainly, it is known that pioneers always fall in action. There's a reality of life. And I'm sure that when the history of Takaful will be right, the history of Takaful in Europe will be right, the first chapter will be for Salama, that open up a whole venue for Islamic insurance in Europe. So those were the topics discussed. And also, I must say, there was a stone guest sitting, perhaps in English you would say a elephant in the room yesterday. Times and again the question was raised how you can reasonably propose Takaful and Islamic finance in Europe nowadays with under the present international circumstances. We know that the Middle East is crumbling, is disappearing, is vanishing, is melting down. 2 states disappeared, 2 nations, Syria and Iraq. 2 others emerged. We have Kurdistan and we have these new things of the caliphate, which is a state. And we have now Libya and a new war starting nowadays in Libya. So the questions was raised yesterday by some members by some attendees. How can we propose these things here nowadays? The discussion is open, of course. The first thought that came to my mind, it's a line of poetry of Friedrich Schiller, the very known German poet of the 19th century, that said that against stupidity, the gods themselves contend in vain. But this, of course, is not a viable answer. My reading is that the present world situation, perhaps gives us a very good opportunity to show European societies that Islamic finance - Islamic insurance - Takaful can provide values, can provide workable solutions to some of the problems that are besetting our societies. But this, of course, is my opinion. It's open to discussion, and perhaps you can discuss it either today or tomorrow. This said, it's my good pleasure to ask the master of ITS, Iqbal, to please come to the floor and start this event. Thank you so much.
Bismillahirrahmanirrahim. Assalamu alaikum and good morning. Thank you, Alberto, for those kind words. I would just like to welcome all of you to the 9th International Takaful Summit. 7 of these have been hosted in London. We had one in Cairo and one in Abu Dhabi. And if everything is fine, we should host a few more in the years to come. We want to make this into one of the key thought leadership forums for the Takaful industry. That is our aim. And this year, as you can see, we have chosen the theme of rethinking the Takaful model in more ways than one. In your brochures, you will see a small introduction by me where I have put forward this theme and its implications for the Takaful industry. I don't want to take up much more of your time because one of the things we want to try to do is to keep as near the time in the program as we can, so we can finish the day in time, because we also have other events in the evening and we don't want to tire you out. I encourage you to come tomorrow for more. Our program is full, and we are very fortunate really to be able to have 2 or 3 of the key practitioners over the years to come and reflect over the industry and its shape to come. And I hope these will be quite challenging presentations which will follow this particular session. But to begin with, I want to bring your attention to a new development for the industry as a whole, Islamic finance industry, and for the Takaful sector as well. And this has been the formation and maturing of the Financial Standards Agency, the what we call Finance and Accreditation Agency of Malaysia. It was set up by the Central Bank of Malaysia, and I'm very pleased that the first director was appointed as Dr. Ahmad Mansoor. For the Islamic finance industry, Dr. Ahmad came from nowhere, but I think has taken the industry by the storm with the energy and dedication he has shown to developing these standards. The time has come where the industry needs benchmarking against credible standards so that we can measure both the training facilities, training courses, the caliber of the people in the industry, and so on. And now after a very intensive workload of over 2 years, nearly all the standards are ready. Of course, they will be developed further as time comes on. And when you go for your coffee break, you can go to the stand of this agency and see the standards actually on the table. So it's not something in the air, there is a physical presence. And what we want to do today is to try to see if we can alert you particularly to the Takaful standard. So without any further delay, if I can invite Dr. Ahmad to the floor to carry out this small launch ceremony. Thank you.
Thank you very much, Professor Iqbal. Assalamu alaikum and very good morning. Distinguished guests, ladies and gentlemen. As you can see that globally the Takaful industry has been growing rapidly, not only in the Muslim country but outside the Muslim countries. And the industry is expected to grow by 15 to 20% annually. And we would expect this industry contribute around 7.4 billion USD by 2015. Currently, there are more than 110 Takaful operators worldwide, and the potential for Takaful operators to progressively chart into the next phase of its growth need to be supported by a state of readiness in terms of the capabilities of the industry to venture into the diversification of such business offerings. And in preparing for the business landscape with different complexity, talent development in Takaful industry will need to be accorded a greater priority. Existing talent needs to be equipped with the necessary skills to support the expansion into areas of specialization that include Takaful principles and Sharia compliance products. There should be quality standard in training and educational programs to realize the vision of highly competent and performing workforce in the Takaful industry, and to raise the level of professionalism of Takaful operators. For your information, that the Finance Accreditation Agency, or FAA, as an international and independent quality assurance and accreditation body for the financial services industry, was formed and established in Malaysia in 2012. For the last 2 years, we have been working with more than 250 subject matter experts, practitioners from different parts of the world in developing the standards for the Islamic finance and as well as the conventional finance. So far that we have developed more than 280 learning standards for the industry, for Takaful, for Islamic banking, as well as for capital market. Last year, we have introduced the finance qualification structure with the intention to harmonize and integrate different types of qualification in the Islamic finance into a single structure. And today, we are going to launch the standard for the Takaful. The intention is to ensure more global consistency for learning, particularly the contents across the financial service industry in line with the international industry benchmarks. As I mentioned, that this standard been developed and moderated by a committee of international experts, practitioners and academics, and benchmark against best practices. The FAA Learning Standard is a reference document for financial learning and development in Islamic capital market, Islamic banking, Takaful banking, as well as insurance. It is a comprehensive guide to various stakeholders on the minimum level of acceptable practices in the design, development, and delivery of learning programs for the FSI employees. The comprehensive document serves as a useful resource for the training and educational providers that serve the industry, particularly in determining the learning needs required of employees at various positions and levels. This leads to the focused and structured learning interventions in the appropriate areas to minimize costs and maximize investment, whilst meeting the needs of the regulators and the financial services industry employees. For Takaful industry, the adoptions of learning standard will create consistency in planning, design, facilitation, and evaluation of professional learning. Ultimately, structured programs that have been received or have received FAA accreditation will provide clear and systematic learning path for Takaful practitioners, raising the bar for Takaful talent and professionals. Ladies and gentlemen, this initiative will be important contribution as the Takaful industry continues to develop and mature. I'm confident that the FLS generally and accreditation in particular will have a significant impact in the efforts to sustain a strong talent pipeline for the financial sector in this more dynamic and challenging environment ahead. On this note, on behalf of FAA, I launched the FAA Learning Standard for Takaful. Thank you very much.
Thank you, Dr. Ahmad. Just one thing about standards. I always tell my students that if you can't go to sleep, pick up any standards. That's better than any sleeping pill. Okay, thank you very much, and may I invite Mr. Safdar Jafar to start the next session. Thank you.
Ladies and gentlemen, good morning and salamun alaikum. Whilst our speakers are coming to the stage, I would like to give a preamble to the theme that the speakers are going to talk about, rethinking the Takaful model. It's only been 3 decades since the contemporary execution of Takaful manifested. And can you believe we are getting together today to talk about rethinking the Takaful model? Revival, rethinking, ahya are concepts that are embedded in Islam as it keeps us on our toes and it keeps us away from stagnation. But that typically happens after a period of time. But here we are talking about rethinking, re-evaluating, revisiting the Takaful proposition. Is this the right thing to do? Before I introduce the speakers on this subject, it is important to set a preamble. It's been almost 35 years since the first Sudanese Islamic insurance company was established by Faisal Islamic Bank. It's been almost 30 years since the Takaful Act of 1984 got enacted in Malaysia that led to the establishment of the first Takaful company in Malaysia, Takaful Malaysia. Around the same time, in the mid-80s, the Fiqh Council of the Organization of Islamic Conference approved the Takaful system as the correct alternative to conventional insurance in full compliance with Sharia. So we are talking of almost 30 to 35 years of experience out there. Contrast that to what we see in the Middle East, which only witnessed Takaful since the mid-2000s, 2005, when the SAMA, the regulator in Saudi Arabia, the Saudi Arabian Monetary Agency, and the Central Bank of Bahrain brought forward a proposition. Okay, we might debate whether that proposition falls within the mainstream, but the point is that Takaful companies and operators and Re-Takaful operators established themselves in the Middle East in the mid-2000s, 2005 for that matter. So the question is, why are we rethinking and talking about this today? What's very interesting are the facts and figures out there, because you cannot argue against data. Takaful space is still dominated. If you look at the numbers, the 11 billion, the 12 billion plus projections that are out there, 67% of the total comes from the Middle East, the contribution I mean. Obviously, because of this 11 to 12 billion, more than 50%, 51% just comes from the Kingdom of Saudi Arabia, that is considered as entirely Sharia compliant. So if you exclude Saudi, we're talking of the remaining pie shared between the Middle East, 16%, and then the Asian countries, Malaysia and Indonesia put together, 25%. But what is interesting, if you compare the top line to the bottom line and the return on equity, the 2012 Ernst & Young report is quite revealing. The average return on equity of Takaful operators in the Gulf was only 0.4%, compared to a negative return on equity in 2011 and 2010. Contrast that with Malaysia, where in 2012 the average return on equity of Takaful operators was 13%, and in previous years it was 9 and 5%, 2011 and 10. Still lagging behind the conventional insurance domain, but probably catching up. So the question really, the fundamental question really is that why are Takaful operators and Re-Takaful operators struggling after over 10 years of existence in the Middle East? And these are the questions that the panelists are going to answer. Is it that the Middle East is focused on the general Takaful proposition, whereas Malaysia and Indonesia and Asia have been relatively successful because they're focused on family Takaful? Or is it the habit of shareholders to burn their capital and allow for a perpetual curve that we continuously see year in, year out of Takaful operators and Re-Takaful operators in the GCC? Or is it too early to judge because we have only been through 10 years? Or are the more fundamental questions the same questions that apply to conventional companies: lack of management vision, lack of risk management, lack of a solid business plan out there, lack of enterprise risk management? Some of those ingredients that we saw, for example, in one of the companies that collapsed here, where the focus was mortal Takaful, whereas the proposition seems to be more on the family side. These are questions. Or is it the regulatory environment and the robustness of the regulatory environment? Or is the model fundamentally flawed? These are the questions out there. And to discuss this, we have two very distinguished speakers with a very diverse experience. You have Shakib Abu Zaid, who has been a pioneer and a champion of the Re-Takaful proposition for many years. He was the CEO of Takaful Re, with one of the early regional Re-Takaful players in the market from 2005 until 2013. And his focus has been on the general Re-Takaful side, his experience rather. And then on the other hand, we have Suhail Jaffer, a banker by experience, but with significant experience on family Takaful proposition. So it'll be interesting to hear both their inputs today. So without further ado, it's a privilege to invite our first speaker, Shakib Abu Zaid.
Assalamu alaikum wa rahmatullah. It's always a pleasure, to come to London, especially to speak on Takaful, and I keep always saying that it's very difficult, to say no to Iqbal. Again, I couldn't say no to Iqbal. Anyway, I would like, just, to jump on what Safdar was explaining. My presentation, or the focus on my presentation, will be on the MENA region. I prefer not to talk and to concentrate on the MENA region. This is number one. Number two, considering my background as a non-life underwriter, definitely you can see from my presentation that I will not focus too much on the life. I will not even talk about the life. I will do something general, a general presentation on the Takaful. I don't know how. Can I do the presentation in 20 minutes? Yeah. Okay, because I think we are running a little bit late. Anyway, before starting this presentation, just to set up the scene, I would like, again, to give you some numbers, but please don't take these numbers, always for the accurate numbers, because you will see plenty of numbers. Already this morning, I know I have seen, some contradicting numbers, but anyway, I'm trying to do something, or with some other colleagues here, to gather the information. One of the problems we have in this industry, in fact, we do not have exact numbers, and I will explain why. The agenda is very simple. I will introduce the MENA insurance industry and Takaful study, but briefly, honestly, I don't want to insist on this. And to assess the Takaful company's performance, I choose, 3 markets. UAE, because I think UAE is a very dynamic market, vibrant market. Saudi Arabia, because the Saudi model, it's something which is unique. There are a lot of talks about the Saudi model. Is it Takaful? Is it cooperative? Is it not Takaful? Etc. I will not talk too much about this. And Bahrain, for a very simple reason, because I think when we are talking about regulation, Bahrain, in my opinion, has a robust legal framework, and the Bahraini model now is the model in all the MENA region. And I will use one of a word which was used last week or 2 weeks ago by Safdar, the perpetual card. I like the sentence, the perpetual card. When you see companies, when we see the balance sheet of Takaful companies, especially in the Middle East, you have card every year, and it's accumulating. I don't know. One day we have to stop, this card issue, and we have to find a solution for this. I think it's in line with the theme of the conference, rethinking the model. If we are not able, to solve the qard problem, I don't think that we can go far. Definitely, every solution needs, to solve this qard issue before going forward. And I will, in my conclusion, I will try, to provide some of the suggestions or some of the solution. I feel free now and honestly comfortable, to talk about, to do a kind of self-criticism, because I am no more working as a Re-Takaful or a Takaful operator. Before that, when I used to come, and present a Takaful, I was a Takaful professional, and you cannot be very critical, especially my clients were Takaful companies. My clients are still Takaful companies, but I have more commercial companies. Now, what I am trying to present is a kind of, I'm trying to be objective, to tell what are the let's say, because I think in some areas we failed. Let's be honest, and we failed. If we don't know our failures, or we cannot find the solution. Anyway, okay, I will not insist on the definition. I think all of you know the definition, and because we have different definition, you will have different statistic. First definition is the very large definition, which was adopted by the World Islamic Insurance Directory. Now we are talking about something like $17.5 billion. A second definition, which is Ernst & Young definition, excluding Saudi Arabia. And you have a strict definition, and if my memory, from memory, I think this was Swiss Re definition, excluding Iran, Saudi Arabia, cooperative model, and very strict. If we see, I think the approach I'm following, in fact, is not to exclude, for example, a market like Saudi Arabia. We cannot consider that Saudi Arabia, because it's not a pure Takaful, it should be excluded. Anyway, when we see, the Takaful versus the world insurance, Takaful is very, very, very small segment of the insurance industry. This is something which is it can be perceived as something very negative, but definitely it means that there is a lot of things to do, at least to reach 1 or 2%, from the insurance industry. Today, Takaful represents something with around 0.4% of the world insurance premium, which is peanuts, which is nothing. Anyway, I think till now the impact of Takaful on the insurance industry is still very limited, despite our conferences, our talk, etc. It's very limited. However, Takaful now, I think it's perceived seriously by the major operator. If we are talking about Hanover Re, Munich Re, Swiss Re, the London market, we have Cobalt here, for example. We have a lot of operators. They are considering Takaful as a serious segment, and this is something positive, although the numbers are very small. Anyway, I cannot see the number, it's too far from here, but anyway, I will not talk much about this. This is just, to present you the Arab insurance market. Arab insurance market, we are talking about something like $29 billion US. 84% is non-life and 6% is life. The main market are mainly UAE, Saudi Arabia, followed by Morocco. Penetration is something around 1.2, 1.4%, with two peaks, Morocco and Lebanon. And you have very low penetration in countries like Saudi Arabia for very obvious reason. The first reason is not the insurance awareness, is mainly because the GDP. A country like Qatar, for example, has a huge GDP per capita, a huge GDP. Whatever you do, whatever is your growth in insurance, the penetration, it will be always very small. I think we should be very careful when using the penetration rate when talking about the insurance in the Arab world. If we exclude the main countries, let's say the oil producer countries, I think the penetration will be something around 1.4, 1.5%. It's still very low, but I think we have seen some progress in countries like UAE or countries like Lebanon, Morocco. We have seen some progress. Today, Morocco is 3.2, 3.3. Lebanon is around 3.3, 3.4, which is not bad. But anyway, but the more important thing, in fact, is Takaful is even lower. It's still if we are talking about how much, I don't think it's something like 0.2, 0.4. Anyway. The Arab market are growing very fast, especially because of countries like Qatar, like UAE or Saudi Arabia, because of the boom following, the oil prices. But things now are relatively stable. I think in the coming years, I don't think that we will see a huge growth in the insurance industry. And Takaful is following the insurance industry. When the insurance industry is growing by 10%, Takaful is growing by 10, 12%, 14% in the bestseller. And I don't think that it will be even the case in the coming years anyway. These are the Takaful statistics in the Arab world. As you can see, in 2012, we had something like $8 billion US Takaful business in the Arab world, out of 29 million. And the main countries, of course, is Saudi Arabia, because the whole market is cooperative, and followed by UAE. UAE today is exceeding, I think, $1 billion US 2014. The Takaful industries in UAE is growing. We have seen in the past 2 years some challenges and some problems with Takaful companies, and I will explain this later on. The current Takaful landscape, the models are almost the same since the beginning. We have almost the Sudanese model, which is fully cooperative. We have the Sudanese, we have this, something wrong with the screen. Okay. As I was saying that the models are almost the same. I will not elaborate on this because I think we have been, elaborating on this for many years. The CBB model, the Central Bank of Bahrain model, is the model which was adopted in UAE and other Arab countries. Saudi Arabia, as I said, is a different story. And we have seen the number of Takaful companies growing. Some people will consider that we have 120, 200 companies. I don't know what is the exact number, but as per the World Islamic Insurance Directory, we have 200 companies, including the Takaful windows in Indonesia. And I'm not sure if the number is 100% accurate. Anyway, SAMA, which is something which is very important to note, that SAMA is not considering Takaful, is not, SAMA is not recognizing the Takaful model. For them, all the companies must be cooperative and full stop, Don't talk to them about the Takaful, but this is their choice, their decision. However, few companies are pure takaful, like Rajhi, and because Rajhi is an Islamic bank having an Islamic arm, and Asij, Solidarity, and Tokyo Marina. I forgot to mention Tokyo Marina. Anyway, takaful regulation in the Arab world, Sudan, as I said, it was the first country. I think they have a robust cooperative model, and the companies by law are obliged, to follow the same. Bahrain, I think Bahrain is a very interesting market in terms of regulation. They had the first regulation in 2004, 2005, if I am not mistaken, and they keep always, improving the regulation. And the last amendment were done in 2014, April 2014, and we'll come to this later. Saudi Arabia, same model since 2004, and for UAE, it's a very strange story because UAE has a legal framework, but honestly, I don't know if it is implemented or not, because companies, it seems that for the time being, is not really implemented. The regulation is not well implemented. The funny thing is Morocco. We have Morocco is my home country, and it happens that we have new rules. We have a legal framework, but we don't have takaful companies. This is something which I keep always laughing about it, and I think it will take some time, to have takaful companies. In Tunisia, to the contrary, we have 3 companies, but we don't have a specific regulation. This is to show, the difference in terms of regulation between countries, and when we assess, the takaful industry, we have also to insist on the fact that we have a serious issue with the regulation. To talk a little bit about the number, in 2012, in fact, takaful was something like 8.5 billion US dollar. Sorry, 8.5% of the total premium generated by the Arab world. Is still very, very small, and takaful companies. Sorry. I think I cannot see, the numbers from here. Anyway, what I wanted, to say that takaful is still a small segment representing something like 8.5% on the insurance industry in the Arab world. Even if takaful started in 1979, I think we have a lot of things, to do. Takaful is growing faster. These numbers are clear, when we are talking about the growth. And this is something normal, because as a new industry, it has to go faster than the existing companies. This is a comparison between the growth of takaful in the Arab world and the rest of the markets. We have Africa, we have the East Indian subcontinent, we have the Far East, we have the GCC, and the fast growing market are the GCC market. Levant means mainly Jordan, for me, Jordan, Syria, Lebanon, and Egypt. The most interesting thing is the takaful is really growing in Egypt, and Egypt, considering the population, 80 million, 85 million, population, I think we can be optimistic about takaful because the regulator is a very strong regulator. The existing companies, most of them are doing very well, and this is, we have to mention. The last line, which is, the Middle East non-Arab, is Iran, but Iran, there is a big controversy about including or not including Iran because many reasons. Anyway, on the comparison, between the takaful versus the conventional, as you can see from this table, definitely takaful companies takaful in countries like Kuwait, takaful is growing by 10.4, while it's almost similar, while the conventional is growing by 9.73. If we are taking, the takaful in UAE growing by almost 30%, while the conventional is growing by 13%. Bahrain, it's not growing very fast, but for a very, very serious, very obvious reason, mainly because of the political situation. And as I said, Takaful in Egypt is growing faster comparatively to the conventional. This is the same, but presented the same statistic presented in a graph, and you can see that we have really serious growth in conventional, in Takaful comparatively to the conventional. By line of business, again, we have to insist on the fact that the growth we have seen in the past years in the Takaful and the cooperative business is mainly due to the medical, mainly due to the motor. And you see midlife and the medical is 51%. It's mainly because of Saudi Arabia, because in Saudi Arabia medical is compulsory, and while the life is almost peanuts. And the difference between Malaysia again and the rest of the Arab world is the importance, or let's say the share of the life business or the family Takaful. Family Takaful is yet to develop in the Arab world, especially in a market like Saudi Arabia. While in Bahrain or in UAE, now the family Takaful is developing, and I think Suhail can explain this better than me. This is number of Takaful operator, 77. We have 121 operator in the Arab world. Most of them are in the GCC, including Saudi Arabia, 35 companies. We have 36 in Africa, including Sudan, 20 plus. And the 9 other companies are mainly in the Levant and Tunisia. Now, coming, to the main, let's say, the main issue which we have to talk about is, in fact, the qard issue. Takaful has many issues, and first of all, we have unbalanced the portfolios in Takaful or cooperative. I was explaining that in Saudi Arabia we have more medical. I can see that now if we add medical and motor, we can reach something like 75% business, which makes our portfolios very unbalanced. And knowing the past performance of the medical and the performance of the motor, especially on the third-party liability, this is also a major issue for Takaful, which leading to a high loss ratio. If we add to the high loss ratio, the high wakala, which is perceived by the Takaful companies, will end ipso facto to the deficit. And Takaful companies, as I explained, are accumulating deficit. Now, we have also another issue which we don't talk much about, is the Takaful mindset versus the conventional mindset, and this is also a difference with other market. If you are talking to Takaful operator in Brunei or in Malaysia, they have better knowledge, and their perception of Takaful and their role and their duties are different from the perception in the Middle East. When visiting a Takaful company in UAE, for example, you can talk to anybody. Few people will know exactly that they are working on Takaful, and they have to act accordingly. Unfortunately, we have this problem in the Middle East, which we call, the lack of Takaful mindset. And one of the problems, which is the low investment income comparatively to the conventional. And again, return on equity for Takaful companies, it's lower comparatively to the conventional. This is, I took this from Ernst & Young comparing the return on equity in Takaful companies versus cooperative companies versus the conventional, and you can see from this presentation that definitely until now, especially in the Middle East, the return on equity for Takaful companies is much lower comparatively. This was explained earlier by Safdar, and it's still the case. And we'll come to this later on when talking about the UAE, because UAE is a good example. this, I think this was presented in 2012 or 2013 by Ernst & Young, and they keep updating it every year, you know. And they are presenting this in Dubai every April. Anyway, now coming back, you know, to our three markets, Bahrain, Saudi Arabia, and UAE. Bahrain Takaful legal framework, as I said, you know, is almost the base of all, you know, the Takaful regulation we can see in the Middle East. It was updated in 2014 to take into account, you know, or to tackle the card issue, and there is a specific treatment to Takaful, which is, I think it was taken, or it was inspired by the IFSB. How do you call this, directive on the solvency. And just, you know, to mention some of the amendment in 2014, now Takaful companies must have an actuary to be appointed for family, which is something very positive. And the capital adequacy, if a company is not meeting, you know, the capital adequacy, shareholders must inject the capital, and this is something very important, because in other countries, for example, like UAE, for the time being, shareholders are not requested, you know, to inject capital, although they have deficit. And one thing which is important, which is not very, I think, clear for me, at least for the time being, the wakala must be proportional to the cost of establishing. This is, I have a big question mark. To be proportional to the cost of establishing, to reflect the cost of establishing and maintaining the contract, or to be proportional, because when you say to be proportional, it means it can be higher. It can be higher. And one of the problems we are facing in Takaful, and one of the cause of the deficit, is the high wakala fee. I think this needs to be clarified. Just a quick comparison between the some of the Takaful operator in Bahrain. All the information is taken from their website, except the last one, which is Ta'azur from the World Islamic Insurance Directory. And definitely we have companies with a huge capital. Hanover and ACR are excellent companies having sizable capital. Their gross written premium is really increasing when you see, for example, Hanover 135 million, which is a sizable portfolio. However, the performance is still lacking in some companies, and the deficit is still, the companies are still accumulating deficit, and this is an example. And especially, although Bahrain is a small country and a small market, however, the number of companies and the name of companies there is making Bahrain really a platform for Takaful. Yes, I'm trying my best. Here is a comparison, you know, in UAE case between the loss ratios and Takaful companies versus loss ratios in the conventional companies. As you can see, net loss ratio for Takaful companies in 2013-2014 are better in Takaful companies. The question is why Takaful companies are performing less comparative to the conventional. I think it's mainly because of the wakala fee and the fact that we are, you know, we have to have two different balance sheets. And these are some quotes from a very interesting study made by Taha Actuaries, and I will pick one of them. For Takaful companies, return on asset, share capital, and equity for 2004 are all zero, and this is something significant. This is something which not acceptable for shareholders, or are 0% on a consolidated basis due to a net profit figure of slightly more than 3 million. It's nothing. i.e. Takaful companies are losing money in UAE. All of them, with one exception, I think, if I am not mistaken. 3 companies reported negative return for the past 2 years, and other companies are positive, but very small profit. I.e., in fact, Takaful is not performing very well in UAE. Now, 5 out of 8 Takaful companies are at higher risk as their equity is below their share capital level. This is, I think, something which is very serious, a serious issue now we have to. Anyway, I will jump to the next one, which is Saudi. Forget about the numbers, but this is 2013 performance. I don't have yet, the 2014 performance, but 2013 was a very bad in Saudi market. Losses were something like 1.3 billion Saudi riyal. We are talking about $400 million. Apparently, 2014 is much better, but this is to show that even in a cooperative models, performance are not always excellent. However, we have to be optimistic, because 2014 I have seen 6-7 companies, they are performing much better than 2013. There is a reason in 2013, because they were requested, to add reserves, adequacy reserves for premium deficiency in 2013. Here, just to explain, the perpetual card issue, and in fact is very simple, very obvious cause, to understand the high loss ratio, the high wakala, and the combined ratio, the high combined, and we keep accumulating deficit. Now, the card treatment, we have different treatment. The OFE is not clear about, how to treat, the card. OFE is working now on something, with one of the big four, and I think in 2015 they are supposed to come up with a standard, an accounting standard. IFSB, I think they were very quick, and they have done something very interesting in terms of principle, and their suggestion, in fact, is to commingle the two balance sheet, and especially to ring-fence part of the capital to service, to be, let's say, to be the cushion for the share, the policyholder fund. CBB, there is a new regulation, as I said, in 2014, Bahrain. Saudi Arabia is very simple. It's working like any conventional company. If there is a loss in the policyholder fund, shareholder must pay for it. Anyway, now we're thinking the model, and this will be my conclusion. I think we have the simplest way, in fact, is to go back to something like the Saudi model, although some scholars are not comfortable with this model, or to ring-fence part of the capital to be released, or to write off the deficit after some years. But I think we should work more on the risk management. We should work more on the capping the wakala, because the wakala, I think this is a serious issue. And one of the suggestions, which is, I think, the Waqf model was very innovative in this, in fact, is to, from day one, to have, let's say, 5 or 10% of the capital to be dedicated to the first 2-3 years deficit. And this is something I think it can help. If we combine all the solutions, I think we can try to solve the problem. But one of the most important things for me, in fact, is to prevent shareholders from taking any dividend as long as there is a deficit. This is something which is not ethical, not acceptable, that shareholders are taking, their dividend while the deficit is accumulating in the policyholder fund. I think I was maybe a little bit critical, but I keep always, positive, and I think there is always a possibility, to amend things and to improve things. And I think we have a long way, on the Takaful. We have to work and correct the existing situation. Thank you very much. Sorry for being long.
Thank you very much, Shakib. I guess you have heard the perspective and the challenges. Time is very short, so without further ado, I want to introduce the next speaker to give us a different perspective We clearly heard as far as Middle East is concerned, there is lack of definition, inconsistencies within various regimes, lack of regulatory framework in some jurisdictions, lack of focus on profitable business, joining the bandwagon of medical and motor, high wakala fees, perpetual qard, shareholders taking dividends whilst qard is still sustained, and hence that is a summary really of the issues that Shakib has flagged together with potential solutions. Now let's look at the other perspective, the family perspective, and we have one of the champions of family Takaful, Suhail Jaffer. Suhail Jaffer is a group partner and deputy CEO of FW Global Takaful Solutions. He has written extensively on a number of subjects within the Islamic finance domain. So please welcome Suhail Jaffer.
Bismillahirrahmanirrahim. Assalamu alaikum. Good morning, ladies and gentlemen. I'm still trying to wake up at the moment, but here I am. The one thing I liked about this brochure, I don't know if you've all had a look at it, is pages 4 and 5. I find that we're all looking 10 years younger, probably to capture the spirit of the industry as to where Takaful stands, which is still a young kid on the block. The other good news is that I've decided to skip my 550 slide presentation and decided not to actually use it today. I think Dr. Alberto and Professor Iqbal have correctly chosen the theme of rethinking the Takaful model. I think that whether the Takaful model today stands, or Takaful business globally is a very big word for it. The DNA of Takaful, as we all know, is Malaysia, and really a little bit of the Middle East, which Shakib has already pointed out is concentrated in Saudi Arabia and the UAE markets. And that really is the DNA of Takaful today. I mean, we include Pakistan, of course, as part of the thing, but then you can also include a number of other countries where Takaful has a footprint, but no scalable activity. And so I think the real question is that for Takaful to break out of its mold from the $10-15 billion business as it is today, to becoming something more significant, what does it need to do? And when we talk about rethinking the Takaful model, in what direction do we want to go? And what new markets and new customer segments and new products, or shall we say new customer solutions, should we be all talking about today? So it's a question of re-engineering or maybe retinkering the model. Takaful's footprint, even in Southeast Asia, the biggest giant next to Malaysia, Indonesia, where I've been a few times, and still no business, as Indonesia takes 10 times longer to break into, and I think Zainul would agree with that. And so we are still trying and struggling to get into Indonesia. But in the meantime, that's where the footprint of Islamic finance and, or shall we say, Islamic economy, and Takaful is still very, very low, below 5% in Indonesia. But I think that is a big market compared to Malaysia, where we have 30 million people, and in Indonesia we have 250 million people spread across 17,000 islands. Maybe that is the challenge, getting to the islands. So, then we take a look at Africa. We have many representatives from Africa here today. And again, Takaful's footprint, we have to say, is negligible in Africa, despite we talk about Sudan, where it started in 1979. But the reality is that countries like Nigeria, which is one of the biggest markets, or if we take North African states, 3 of them, let's leave some of the other states which have other issues, and we take a country like Egypt, which is in the limelight these days for different reasons. So the question is, the footprint of Takaful in all these markets in Africa is virtually zero. So have you all asked yourselves the question, why is it zero? And there are, in my view, I mean, we can give 1,500 reasons. There are only 4 real broad captions for Takaful to rethink. The first one is that Takaful needs to think about product innovation and the delivery mechanisms and the customer segments that it wants to approach. It can't be all things to everyone. It should now narrow down, prioritize what is it that it wants to represent. If you take the development of Apple, a smartphone, Apple was on death row some many years ago in 96, 98 or whenever it was. I'm not sure about the years. When I say death row, I mean, banks have been on death row and they've resurrected. I was at Citibank in 1990 when Citibank had issues. So I think what we're saying is that if Apple is now today the global smart set together with Samsung dominating the market, why is it that Takaful is still not there? It should be, in a way, relevant to all needs of all customer segments and not just the affinity group of Muslims. I don't know why we have this thinking that Takaful is only for the Muslim community. I mean, this is really the wrong precept. Takaful, when people look at Europe, they say 20 million Muslims, a country, or rather a market of 27 countries at the moment before people exit this European market. It has still got 27 countries with about 500 million consumers. So why should we not look at the 500 million consumers rather than focusing on 20 million Muslims spread across 7 countries, and Takaful again, no penetration in Europe? We have had 2 examples which was mentioned, one in London, a non-life Takaful or general Takaful company which has not been a great success, and the other one long time ago in Memory Lane, 1983 in Luxembourg, and also not been a success. Okay? There's a lot of debate about Takaful windows, and people have different views on it, and I'm not here to actually take any sides. But if we're going to build the scale, so Indonesia has given you the example, Pakistan Takaful windows are allowed. I was in Turkey last week, in Istanbul, where surprise, surprise, the word is not Takaful, nor is it cooperative insurance, but it is participation insurance, following participation banking. I picked up an Ernst & Young letter last week on Islamic finance, thinking it was about Islamic finance, and lo and behold, it talks about participation banking in the UAE market. So I was wondering where participation banking was coming from, but this label is gaining momentum. Anyway, I would coming back to my point about re-engineering, and I'll finish. One is product innovation. The second thing is the deployment of digital applications and social media. Insurance industry as a whole, compared to banking, has never been in the lead with IT applications. I mean, banking was far ahead. Insurance has caught up. I'm talking about insurance in general, not about Takaful. But I think insurance or Takaful still has a long way to go of how it does its business using modern technology and the younger generation, which are basically all IT skilled. Third aspect, Takaful, this was touched upon by Dr. Ahmad, is the search for human talent. Okay, you need to have the right talent and the right skill set in this industry, despite the fact that global brands have entered the industry, namely in Southeast Asia, whether you take Prudential, which is number 1, by the way, in Indonesia, it is not an Indonesian company, or you take Malaysia, where Sun Life, Manulife, and all these other companies are piled up. You know, I mean, there are a whole host of names. AXA is in. So what I'm saying is the global brands have entered this market, but they've only entered the market outside of their home jurisdiction. Yeah. So I think that the third thing is that is Takaful's hybrid model, I have to now be quite honest with you, is it the right model going forward? There's creative tension between policyholder funds on the one side, shareholder funds, and we saw the list of points in the last 2 slides of Shakib. Is it really the right model going forward? And when I talk to my French colleagues in Paris, which I've been doing, and Mr. Anas is here from France, it's a laugh, because the question is, what, Mr. Jaffer, is the value proposition of Takaful, and how is it different to cooperative insurance and mutual? Mutuals have been in France, UK, and many other countries since 1800s, if not before. So what is really the value proposition and the difference between Takaful versus cooperative insurance versus mutual? Is there any real difference? Yeah, show us the difference and we'll think about it. So far, the fact of the matter is that we've not been able to articulate the differences of Takaful to these other 2 industries in Europe, and hence there is no real activity of Takaful in the space. And I mean, we can go on to say a few companies using the window approach from Luxembourg, like Swiss Life, like VIII, like others have actually launched some products into France, but it's just scratching the surface. And again, they're going after the affinity group, which is what I said to you, 5-6 million Muslims is not the right way to go about things. If your proposition is really world-class, then go for the whole community. Why are we just looking at this affinity group? The last thing is that, you know, we need corporate governance and we need enterprise risk management. in Takaful. So all these are fairly obvious points, you can say, nothing new about it. It's a question of how you go about it. I mean, basically, before the arrival of Apple or smartphones, we were still talking to one another, maybe on fixed lines, maybe not as frequently, and not really babbling away when I'm in the spa for 1 hour listening to bad Canadian French. And so I think this is where, you have smartphones which have other excesses now. People talking in the toilets, people talking in public places about confidential deals, and so you get to listen to all sorts of things, or a divorce taking place. So I think this is where I find this really outrageous. But what I'm saying is we were still talking before the arrival of smartphones. We were still listening to music before the arrival of iPod. We were still browsing the internet before the arrival of iPads, or tablets. So the point is that Takaful now needs to get its act together and really think about how it's going to reach a scalable business of $250 billion, $400 billion, $1 trillion in the next 5 to 10 years. Thank you very much.
We want to begin on a much more positive note of how the industry will be re-engineered. Now we know that one of the key issues we have is that the number of, or the assets of the Islamic finance industry are growing rapidly. But the takaful for those assets is not growing as rapidly. There is a disconnect between the amount of Islamic finance assets and takaful assets. And some of the obstacles to that growth are something which we want to examine. And I would like to invite 3 of the people who have been thinking with us on these things. So may I invite Mr. Terry Masters, Dr. Terry Masters, Mr. Richard Bishop, and Mr. Cameron Murray to the podium, please. If you can please come. So as you know that for the last several years, there have been attempts to see if we can use the premier insurance and reinsurance markets of the world to work in tandem with Takaful. There were a couple of false starts in the sense of trying to do a syndicate within Lloyd's of London and so on. But I'm happy to say that we are now picking back some of those pieces, and the 3 gentlemen you see here are key to making this jigsaw work again. So I want to start by inviting Dr. Terry Masters of Aon, and he will try to do a bit of history of the position of Takaful in the London market. Dr. Terry Masters.
Good morning, ladies and gentlemen. Although I'm going to do a little bit of the history, I'm trying to really use the history to see what we've learned from some of those, and dare I say generally, I suppose maybe doing more positive, but generally failed attempts to get Takaful to work in London. I apologise for a few very quick numbers first, but the size of the sector to play for is very large. The problem, as everybody says, is that the Takaful part of this is tiny, although it is planning to grow fairly quickly. Now, the British government has in March 2013 created the Islamic Finance Task Force with a mandate to showcase the UK as preferred choice for business with an investment by the Muslim world. And a lot of progress has been made within the financial sector in general. But generally, Takaful in the UK has not been a success story in any shape or form. Principal Insurance attempted a Takaful motor insurer for a number of years, but sustained losses and ceased underwriting in 2009. It's still in run-off and still solvent, but did not prove in any way a success. And I'll apologise to Lloyd's here as well, in that there have been attempts within Lloyd's to create Takaful syndicates, and again those have been shut down. All of the attempts so far have really been in the personal line space. The major global insurers who reside in London with very large capacities have not really taken on board the opportunities from Takaful and continue to offer traditional insurance policies. And this has certainly been, a problem in trying to scale Takaful within London. Many of these companies have businesses in the Middle East, Malaysia, where they do look at Takaful insurance, but the brokers, of which I'm one, and in bringing the business to London, have only really had traditional commercial insurance to look at. And therefore the offering, and it was said earlier, has never in any way been scaled and never therefore succeeded. So looking at that short snapshot of history, what do I put together what I thought some of the keys to having success for Takaful in London. Now I'm being followed here by Cobalt and by Lloyd's, and we have recently launched an attempt to use Cobalt in combination with Lloyd's to try and harness Lloyd's capacity in a Sharia compliant way, and I'm sure the others will speak rather more about that in the next two short talks. As I mentioned, the ease of access for us, the brokers, is absolutely vital. Brokers are generally, dare I say, lazy beasts, and we will use the most available capacity at the best price. If it is difficult for us to obtain Takaful insurance, then we will probably say it's not available and will continue to use traditional commercial insurance. We also need to see a greater demand from the clients. Generally, I would anticipate that clients would demand Sharia compliant insurance, but that does not seem to have been the case to date, and we need to see more of that happening so that we, the brokers, will actually sort of work to the demands of our clients. On my very first slide, you could see that the vast majority of Islamic finance is really coming from the banks, and so I actually got a few of my interns to walk around the banks of London and see how easy it was to obtain any Islamic banking. And the truth of that was actually it was quite freely available. I'll do a quick plug for Lloyd's Bank here, in that you could pretty much walk into Lloyd's Bank on the Strand, ask whether you could open a Sharia compliant account, and the answer is yes. And not only that, you can do it and not have to pay the overdraft fees that you do for the non-Islamic accounts. So there's actually some incentive for people to open those accounts. And I think, within the insurance sector, we can learn quite a lot from the way the banks have pushed forward on this basis. To balance this view, some of the banks have actually withdrawn some of their Sharia-compliant mortgages, etc. But I think they do have a range of products which, are available, and they keep the more successful ones going and pull back the others. So I think it's absolutely vital that we have, Takaful, which is competitive with the traditional offering. Now, having watched some of the earlier slides and seen the returns, I'm sure that will be somewhat of a hurdle on that basis. But London insurance has been going for over 300 years, and I'm sure we will find a way of matching the expectations of the writers going forward. So it really needs to offer a real alternative to the conventional insurance, both in terms of capacity, price and terms. A quick plug again for Cobalt. They already have very large capacities for some of the major property risks, but it's in targeted areas, and we hope very much that the future relationship with Lloyd's will be able to mean we can give a larger offering to the clients. So we need to raise the profile of Takaful in London generally, and I think the launch of the Islamic Insurance Association of London, which Max Taylor is going to talk about at dinner tonight, will be one of those keys, along with the great support that Lloyd's is providing. Now, the earlier speaker said it's taken really 10 years in the Middle East to get to where it's got to. But let me just show you a company that those of you in London will know well, Direct Line, the motor insurer in the UK, with those who live here, the famous red telephone. If you go back to the early 80s, generally people bought their insurance via broker, and Peter Wood, who I used to work with, decided that maybe there was a different way of doing this, and you could ring up and get a motor quote. So here are his early numbers of premiums. It took 8 years for him to get £200,000 of income. Today, Direct Line have several billion for the largest motor insurer in the UK. It took 15 years to make it to a billion. So, innovation or requirements do take a long time. We all think of Direct Line these days and think, oh yes, very large company. But these things can take a very long time, and all he was trying to do was sell motor insurance on a telephone. So there's a lot to play for in Takaful in London. I don't believe that there's really been a successful example yet, not one that's created a true critical mass. From the banking sector and just from the brokers in general, I think that we need a product that's going to be competitive with the traditional offering. But the Direct Line example as one shows that this does take a lot of time, and I don't think we should beat ourselves up too much that company has been going 10 years or so and don't have critical mass. And we have great hopes that the Cobalt, trying to actually act as a transformer for some of the insurers and provide a lot of the Sharia compliant processes, will act as a catalyst in this process. So, thank you.
Thank you very much, Terry. So this is a good message to some of our more pessimistic operators that life is not that short. We have to be a bit more patient to build good businesses. Okay, so in order to build on that, we have the next presenter will be Mr. Richard Bishop, who is the CEO of Cobalt Underwriting. And specifically, this opportunity is designed to see if we can chase Islamic finance assets in the London market. Thank you.
Good morning, ladies and gentlemen. I think my presentation might have to be adapted because the previous presentations by Shakib and Sahil seems to have raised an awful lot of the questions that I was going to ask. But my presentation is titled Takaful Insurance, Time to Get Serious. The question is, should that be a question? This slide sort of highlights a number of the issues that have been drawn out of reports by people like Ernst & Young and Deloitte and various other commentators upon the Takaful industry. There is a number of ways that the Takaful industry has failed to emulate its conventional counterparts. And as a result, I think a number of the issues that it faces today are of its own making, and it really needs to stand back from itself and look at how can it improve the situation and try and derive a significant added value and essentially an advantage over its conventional counterparts. So the question is, how can things be improved? I think there is a lack of cooperation between various markets around the world, particularly when it comes to what is perceived to be a very narrow niche. London has taken upon itself the responsibility of trying to deliver its capacity and expertise throughout the world over the last several centuries, in fact. And why hasn't the Takaful industry come to London sooner in its development to seek the support and development that we have to offer? London is very much a market about mutual cooperation. London itself cannot hope to retain its position as world number one if it is going to stand back and try and compete with local markets that are slowly emerging in various parts of the world with their own expertise and knowledge. I think, though, if you take the GCC market just as an example, there's already acceptance that there is a lack of depth within its expertise and knowledge, and it needs to gain that from somewhere else. Well, London's here to offer that. Equally, I think that it is unhelpful for the Takaful sector to try and separate itself from its conventional counterparts by insisting that it has different regulation or different standards. The consumer ultimately is going to require the same level of security and expertise from the Takaful sector as it would from the conventional sector. So why stand it apart? If we work together and we try and remove these barriers, then from a regulation point of view, which is inevitably the way the Western world has developed, there has to be opportunities for us all to offer an alternative to the conventional product set. I've already mentioned what London has to offer. Lloyd's has recently engaged with Cobalt to ensure that the market, as it stands today, can deliver relevant products through a combination of Cobalt's underwriting agency to the Sharia world. However, as Sohail mentioned, we shouldn't be just limiting ourselves to those of the Muslim market. We should be offering these products to everybody. And inherently, I think that the depth of expertise that London has to offer can help the Takaful sector put itself on an equal footing. But you have to ask for that help. So, why get serious? Well, there are regulatory pressures that are coming down from on high. Some of them are not within our control. There is competition throughout the world now. The insurance market is a true global marketplace. And therefore, to limit yourself to just a domestic issue is probably a mistake that needs to be addressed. Sohail has already mentioned the reputational risk that comes from not acting in the highest possible professional way, offering risk management and expertise to your customers. If you fail to deliver that in a consistent way and in a form that really addresses both the customer's needs and, of course, the counterparties to the customer, and we're talking about, in London, the major risk exposures are, of course, commercial. Most large commercial assets have some form of finance attaching to it, and the bankers, of course, insist that the counterparty risk is protected through the insurance process. If we don't deliver a proper and considered risk management solution, then Takaful will always be at a disadvantage to its conventional alternative. And as Sohail also mentioned, the world population is enormous. If we limit ourselves just to one tiny part of that, then all we're doing is limiting our own ambitions. And so therefore the opportunity has to be taken, and London is here to try and help in that way. So I hope that you'll understand that my last comment is really one of optimism rather than criticism, but it is about time that we all start taking this very good and solid industry to the next level. Thank you.
Thank you, Richard. So we are very pleased this year that Lloyd's of London itself, the international section, has decided to come on board as one of the key supporters of the summit. It took a little bit of persuading, but I think we have them back on track. And I'm pleased to welcome Mr. Cameron Murray, who is the head of UK, Ireland, Middle East and Africa for Lloyd's, to come and make his presentation on Takaful today and tomorrow, Lloyd's Market View. Yes, Mr. Cameron Murray. Whilst Cameron is coming to the dais, I just want to tell you that Lloyd's of London is also going to open an office in Dubai in March, and so that shows its intention to be in the key markets which matter.
Thank you, Iqbal. We actually jumped at the chance. I'm delighted to be here, delighted to be representing Lloyd's at this 9th Takaful Summit. And it's a great pleasure to see so many of you here today. I'd like to tell you a little bit about why I believe the Lloyd's market is perfectly equipped to provide Sharia-compliant insurance and reinsurance. Indeed, structurally, the similarities between the two models are striking, which is fascinating given the long histories and very different histories of the two. Before I get into the detail of their compatibility, I want to explain why Takaful and Re-Takaful are of increasing interest to the Lloyd's market. The insurance industry is undergoing great change. As emerging markets open up, London, while still the top market by some margin, is facing increasing competition. Last November's Boston Consulting Group report showed that London is tracking global growth in commercial insurance and is actually losing market share in reinsurance. We are, it said, at a tipping point, and it went on to set out the significant future risks if we don't change and respond to the challenges this market faces. At Lloyds, we prefer to think of this as a crossroads, one that leads to vast opportunity. We don't regard the challenges as threats. We need to face up to the challenges and tackle them head on. At Lloyds, we read that report and saw a host of exciting opportunities. A chance to expand our business into emerging markets, develop innovative new products, and ensure we maintain our leading position in the sector. Let's be clear, we don't see this as a nice-to-do option. It's a must-do, an approach we have to take if we are to continue to thrive and prosper in an increasingly competitive marketplace. That's why we've enshrined our international growth aspirations within our long-term strategy, Lloyds Vision 2025. They sit at the core of everything we're doing and will continue to do over the next decade. And we see expansion into the Takaful and Re-Takaful markets as an essential part of this strategy and a natural next step in many ways. In terms of the scale of the opportunity at stake, the figures speak for themselves. In 2014, boosted by the estimated $2 trillion global Islamic finance markets, the global Takaful market was projected to grow by about 14%. An impressive number, and if it keeps growing at that pace, it could be worth more than $20 billion by 2017. Yet, as we've heard this morning, despite this strong double-digit growth, insurance penetration rates in these key markets average just 2%. Although these are slightly higher in Malaysia, Singapore, Japan, and Hong Kong, where penetration rates vary between 5.1% and 11% respectively, there's clearly substantial potential for growth. There's likely to be even more long-term potential in rapidly expanding markets, such as Turkey and Indonesia, where there are large, young populations and stable economic structures. Deloitte's latest annual report on the Takaful sector states there are, and I quote, enormous growth prospects in the Middle East, South Asia, and Africa. And it singles out 3 key countries in particular, Saudi Arabia, the UAE, and Malaysia, which have thrived despite the recent volatility of global financial markets. The analysis then shows there's a substantial business opportunity to be had by providing Takaful and Re-Takaful in these emerging markets, and one that's going to grow rapidly over the next decade or so. I believe Lloyds is well equipped to provide Sharia-compliant insurance and reinsurances. Why do I think that? Well, for 2 main reasons. The first is the compatibility of the Lloyds structure with Sharia finance principles, and the second is the political support behind moves to position London as the global centre for Sharia-compliant finance. To understand the former, I'll quickly go over these principles. You will of course be more than familiar with them, so do bear with me, but I feel outlining them with the Lloyds structure front of mind really brings to life how well Takaful and Re-Takaful models sit within the Lloyds market. Sharia principles prohibit certain concepts, including uncertainty, gharar, gambling, maisir, and dealing with or investing in products that generate interest, riba, all of which may be present in conventional insurance. Takaful provides a means of protection that avoids such concepts. In a Takaful setup, participants at Lloyds, we call them policyholders, pay a donation, at Lloyds a premium, into a pool operated by a Takaful operator or insurer. The theory is that the risk is shared between the participants rather than transferred to the Takaful operator, so in that respect, it's akin to mutual insurance. The Takaful operator or insurer is responsible for, among other things, collecting donations, investing them in a Sharia-compliant manner, dealing with claims, administration, and distributing any surplus. The level of donations or premiums is generally calculated in the same way as a conventional insurance premium, and claims made by participants are then paid out from the pool of donations. To the extent that there is a surplus in the pool at the end of a policy period, the principle is to redistribute that surplus to the participants, in a similar way to mutual insurance, subject to business requirements. If there's a deficit in the pool at the end of a policy period, the Takaful operator provides an interest-free loan, a Qard al-Hassan, to make up the shortfall. If there is then a surplus in the pool in a subsequent policy period, it's used to reimburse the Takaful operator for the interest-free loan it previously made. that differs from the mutual insurance model, where participants would be asked to make up any deficit in the pool. Each Takaful operator has a board of Sharia scholars that oversee the business to ensure it is complying with Sharia finance principles, and the interpretation of these can vary from country to country. In theory, Lloyds is well suited to the operation of a Takaful or Re-Takaful syndicate, as our unique market structure makes Sharia compliance possible. Sharia principles prohibit the funding of certain classes of investment. Since investments made by conventional insurance may involve elements prohibited by Sharia principles, the Takaful pool of participants' donations has to be kept separate from conventional premiums earned by conventional insurers and reinsurers at Lloyds. At each level of the Lloyds chain of security, the term commonly used to describe Lloyds' financial structure, it should be possible to ensure such segregation takes place. First, there are the syndicate level assets. Premiums received by Lloyds syndicates are held in premiums trust funds and are the first resource for paying policyholders' claims and syndicate expenses. The funds are held for the policyholders' benefit until such time as a profit or loss is declared. These premiums are generally held in liquid assets to ensure liabilities can be met when they are due, and profits are only distributed to beneficiaries after all outstanding liabilities have been cleared. Given the Lloyds market structure, there would be little difficulty in segregating funds if a Takaful or Re-Takaful syndicate was established. The Premiums Trust Fund is much like a participant's fund and is where donations would be placed and from where claims and other expenses would be paid. And as they are held at syndicate level, the funds would be ring-fenced. Furthermore, the assets in the Premiums Trust Funds could be invested in a Sharia-compliant way. Next, we have the funds at Lloyds. Each syndicate member must provide adequate capital to support its underwriting. Again, there should be no issue in principle with segregation of funds within this framework, as each member has to put up its own funds at Lloyds. These can be held at syndicate level and can therefore be kept separate. And finally, there are the Corporation of Lloyds central assets. These include the Central Fund, which is funded by members' annual contributions and subordinated debt issued by the Corporation of Lloyds. It is used to pay a policyholder's claim when, for whatever reason, it cannot be met by the members involved. It's an extra layer of security, again unique to the Lloyds market. These central assets are held in bank deposits and other short-term securities with maturities of up to 12 months in order to maximise current income with low risk. Although each member's levy is pooled together in the central fund, which means that a Takaful operator's levy will be commingled with levies from conventional insurers and reinsurers, the central fund is not really considered to be an asset that members own. In the case of a Takaful syndicate, payment from the central fund would only be made as a last resort to ensure participants' claims were met if their syndicate fund could not meet it for whatever reason. Although this may in theory mean participants could be paid out of funds that may have been commingled with levies from conventional insurers and reinsurers, this may not actually pose a problem from a Sharia law perspective. For example, it should be possible for a participant in a Takaful arrangement to receive compensation from the Financial Services Compensation Scheme, within which the levies of both Sharia-compliant and conventional financial institutions are commingled. There is ultimately no practical difference between a Takaful operator paying a Financial Services Compensation Scheme levy and members paying a central fund levy at Lloyds. The accounting system at Lloyds operates on a 3-year cycle, which allows enough time to pass to assess the claims experience. Theoretically, it's possible for surplus releases to occur in a Takaful context, in other words, after the annual policy has ended, before the lapse of the 36-month period, as Lloyds allows profit releases after 12 months, subject to audit sign-off. Even if surplus could not be distributed until after 36 months, as long as this was made clear to participants in the policy wording, it should be acceptable from a Sharia law perspective, depending, of course, upon the particular Sharia board's view. The fact there is an underwriting deficit in the Takaful pool wouldn't be an issue either. In the case of conventional insurance at Lloyd's, it would request additional funds from the corporate member to offset any deficit. This is not materially different from a Qard Al Hassan loan that I mentioned earlier, which is required from the shareholders of the Takaful operator to fund any deficit. There are obstacles to overcome. We're not saying the Lloyd's market is Sharia compliant exactly as it stands today. And there could also be various interpretations of Sharia compliant principles in different countries that we would need to be mindful of and work to accommodate. But there are currently exciting and innovative initiatives being developed that are looking to leverage the synergies I've described and provide Lloyd's-backed Sharia-compliant products. We're excited by Cobalt's initiative, and we are hopeful that it will be the first of many ventures that seek to use Lloyd's capacity in a Sharia-compliant way. We'll be working closely with our underwriters and with brokers to ensure that collectively the market is ready to step boldly into this space. And our opening of a representative office in Dubai on the 11th of March could not be better timed. This will be an underwriting hub for Lloyd's in the MENA region and will comprise 7 syndicate service companies on the platform, writing specialty insurance lines such as energy, marine, construction, political risk and trade credit. But it's not only the structure of the Lloyd's market that's conducive to London becoming a global centre for Sharia-compliant finance. There are some inherent advantages of the centre being located in the UK. Our time zone means we sit at the centre of global capital markets. English is the international business language. There is a deep well of existing expertise in Islamic finance in the professional services industry to draw from, including more than 25 law firms. And our world-class academic institutions offer related training courses and qualifications, including, starting last year, 10 new Chevening scholarships for Islamic finance. The UK is also blessed with a talented, highly educated, multilingual and multicultural workforce. I'm pleased to say too that the UK government, recognising the importance of the emerging Takaful and Re-Takaful market and acknowledging the huge investment in the country by Islamic companies and funds, has thrown its weight behind efforts to attract Islamic finance business to London. There's no doubt its efforts are helping to build momentum behind the capital's aspirations to become a global centre. Recent related developments include the creation of an Islamic index on the London Stock Exchange. In June last year, Britain became the first country outside the Islamic world to issue a sovereign sukuk, which was 10 times oversubscribed, raising £200 million on orders totaling more than £2 billion. The government is also looking at setting up Sharia-compliant student and start-up loans. In 2013, London hosted the first World Islamic Economic Forum outside the Islamic world. 1,800 political and business leaders from over 115 countries attended. In April last year, the Global Islamic Finance and Investment Group met in London, chaired by Baroness Wasi, which brought together premiers, ministers, CEOs of major Islamic banks, central bank governors and regulators to discuss the key global opportunities and barriers facing Islamic finance. And as we've heard, a new trade body, the Islamic Insurance Association, has been established to look specifically at developing UK expertise in Islamic insurance to cope with what is expected to be increasing demand. Finally, a very brief word about regulatory frameworks. Some changes to the Takaful market, which has different regulations around the world, would also be helpful. Currently, Takaful operators have to spend a lot of time and money tailoring their products, their distribution approach, and statutory reporting to ensure compliance within each market's interpretation of Sharia principles. This introduces an unhelpful level of inefficiency into the market. Global regulatory harmonisation would benefit everyone. What Lloyd's looks for in any market is a robust regulatory framework. As things currently stand, there is a need for a more consistent regulatory framework for Takaful. There is an increasing onus on Takaful operators to be more transparent too, as different regulatory and self-regulatory organisations seek more comprehensive reporting and self-disclosure. We welcome this development. The more transparent the market, the more robust it tends to be. And we look forward to greater investment in technology and information management systems to make it happen. There is too a shortage of expertise on Takaful, particularly Re-Takaful. The market would need to work to address this, but again we place great emphasis on attracting the best global talent into Lloyd's, and this could be another vehicle by which we could do this. As I hope I've demonstrated, Lloyd's fully supports making London the global centre for Sharia-compliant finance. For us, this is a good fit structurally, as our market is able to accommodate Islamic finance principles, but a move into Takaful and Re-Takaful aligns with our international growth strategy and core business plans for the next decade and beyond. The combination of our growing expertise, London's inherent trading advantages, and the positive political backing behind the development of the market, allied to positive changes to Takaful and Re-Takaful markets as they develop and mature, is a powerful one. We need to harness that power. Now is the time for Lloyd's to be proactive, to get out into the Takaful and Re-Takaful markets, and to ensure Islamic business leaders and others know that Lloyd's can provide high-quality Sharia-compliant insurance solutions and capacity. These are indeed exciting times. Thank you for listening.
Thank you, Cameron. So the message I take from the three gentlemen here, that London is open, available for Takaful. The challenge is for the Takaful world to take it up. What Lloyd's will bring to the floor is Lloyd's own credibility. You solve your rating problems at a stroke, and therefore you can offer capacity which is really easy to market once you have it there. Now that the door is open, we will make sure that we work hard enough before it shuts again for whatever reason. I'd like to thank the three gentlemen and just give them a show of hands for their nice presentation. And I would like to invite Daud Wikari to chair the next session. Thank you very much.
Assalamu alaikum and a very good morning to everyone. Thank you, Iqbal. If I could ask the four discussants or panelists to come to the stage. It's Dr. Amartap Mansoor, Susan Dingwall, who I saw earlier, but I can't see her now. Oh, she's there. Hi, Susan. David Anthony and Mahesh Mistry, and they're coming up to the stage. We're going to try and keep fairly strictly to time. I think we're running slightly late, but we've got an hour's session here. Echoing the words of a former speaker, it's always difficult to say no to Iqbal. He's the person who I've known the second longest in this industry. The person I've known longest sadly isn't here because he has been suffering some ill health, but we wish him well. This is Mustafa Hamad, who is recovering from pneumonia, but I'm sure he'll be here for the 10th anniversary next year, and I wouldn't be here if he hadn't held my hand many years ago. So you can blame him, not me. Anyway, we have an eclectic session, or what I thought was an eclectic session, looking at regulatory rating and HR challenges, and we've got some experts in this area. I'm trying to join the dots here, and it is fairly eclectic, but whenever I'm asked about how different countries approach Islamic finance and how they try to develop an industry, whether it is banking or Takaful or asset management and so on, I always talk about, and here's an acronym, STARS, S-T-A-R-S, and it's extremely important that you actually understand where each country or where each jurisdiction stands with regard to STARS. And the first S is the Sharia and legal framework, which you need to have there. The T is the tax framework, the A is the accounting framework, the R is the regulatory framework, and last but not least, the second S is the standards framework. And with the panel in front of you today, we're at least going to be tackling some of the aspects of regulatory and standards. So that is the linking part of this brief introduction. So without further ado, I'm going to pass over to Dr. Amartap, who you've already been introduced to this morning, who's going to talk about enhancing the quality of talent in the Takaful industry. I'm trying to keep strictly to time, so they have about 10 or 12 minutes each, which they've agreed to, and I have my self-made 2-minute warning sign up here, which I'll start waving around when the 2 minutes are approaching. So let me introduce to you Dr. Ahmad Tal. Thanks.
Thank you very much, Dawood. Assalamu alaikum again, and very good morning. I think that this particular session is a bit challenging because while we are talking on certain other things, that we have also talking about the human resources in between. Yeah, I think that in earlier discussion that the panel was also talking about how critical. I think I remember Sohail talking about this, how critical is the element of talent in the development of the industry. While that many reports, research that have been produced earlier of this year, even last year, over the last 2 years, have shown that a very critical shortage in certain specific areas when we talk about the Islamic finance, and particularly in Takaful. Yeah, for example, that in Malaysia alone, that they are looking about 20 over thousands of talent for the industry for the next 5 to 6 years. In Indonesia, they're talking about close to 20,000, and UAE alone is that they're talking about 7,000-8,000 people are required to support the industry. Yeah? And interesting also that the recent surveys that we have conducted last year have shown that the most affected sector is insurance and takaful. About 80% of the CEOs that we have surveyed saying that they are having difficulty to attract talent into the industry for many reasons. Yeah, one of the reason mentioned was very critical, is that the image of the industry that could appeal or attract the talent into the industry. Yeah, and the survey by PwC has also shown that takaful as well as insurance again is the most affected when it comes to talent shortage as compared to the other sector, banking or capital market. Yeah, and it's very alarming that 80% of the CEOs saying that they cannot do much expansion due to the shortage of talent. Yeah, so when we look into the shortage of talent, it's very much on two things. Number one, that we are talking about the quantity as well as the quality of talent required by industry. As what I mentioned earlier, that we do not have so much problem when it comes to the quantity, because we have more than enough when it comes to supply. Yeah, universities are producing thousands of graduates every year. But the main issue is that it's very much on what you call it, the quantitative gap and qualitative gap. Yeah. So when we look into the numbers, it's very much not at the entry level, it's very much on the second level, which is at the managerial level, and above we call it specialist level. Yeah, many research or studies have shown that that is the most critical part when it comes to the quantitative in terms of numbers. Yeah, we are shortage at the middle level, not so much on entry level. Yeah, but the focus is very much on the qualitative issues, whereby that there is a major mismatch between what we produce and what is expected from the industry. Yeah, we produce thousands of graduates every year, but still there is an issue of an expectation. Yeah, the graduates that we produce are not able to fulfill the expectation or the requirement of the industry. Yeah, maybe not so much on the technical capacity, but very much on the other aspect. Sometimes we call it like a soft skill requirement, the ability to understand the business very well, and they understand to make the right decision, and also understand to put perspective of the business perspective in their career. Yeah. So secondly is that we are also facing with the issues or problem of the quality of professional programs offered to the industry. Globally, there are more than 500 over institutions offering Islamic finance related programs. Yeah, the three main countries that are offering this program are United Kingdom, Pakistan, and Malaysia. Yeah, so they are the most, the top three countries that are offering both academic and professional based qualification. Yeah, But when come to the professional certification or qualification, that there are more than 650 institutions globally offering various type of qualification or certification at different level. Our issue here is very much on consistency in terms of standard when come to the content. Yeah, so we would expect that it is quite a significant variance when come to the contents of learning. For example, that we come across that a program in London or in Dubai or in Kuala Lumpur have shown that a clear what do you call it, differences in terms of the standard or the content. I give you an example of the a specific program in risk management, for example. Yeah, some program they call it advanced risk management certification. Yeah, they call it advanced risk management certification, offered in different part of the world. But when you look into the content, it's very much basic. They cover basic or introduction to risk management, but the qualification they call it advanced risk management. That really confused the market. Yeah. And we realize that certain programs are significantly different when come to the coverage of the content, the one that offered in London or in Dubai or in Kuala Lumpur. That again, make the standard varies from a jurisdiction to a different jurisdiction. So what I'm trying to say here that there are three important issues that we need to work on. Number one is that how we could reduce the gap between the graduates that we produce by the universities or by institution of higher learning as compared to the expectation of the industry. That's very important, number one. Number two, that how are we going to address the current professional program or training or certification that we have in the market. This is very much involved with the development of the current talent in the industry. While we have the fresh one, we're also having problem with the current professional that we have within the industry. Yeah. The third one, how we could or should be able to ensure that a certain consistency when we talk about the content of the learning or the development that offered in different jurisdictions. These three things that need to be addressed carefully. So for the first one, I think that is always critical for what they call it a very close collaboration or partnership between the industry and the institution of higher learning. It's very critical in many ways. As you're aware that many universities now having what they call it industry advisory panel, whereby people from the industry involved in the development of curriculum in the universities. But practically, in reality, that is very, very minimum. The involvement of people in the industry is only at the decision level rather than at the working level that involved in the designing or developing of the curriculum. Yeah. Number two is that not many industry people involved in the teaching or co-teaching at universities. There are, but the percentage is very, very small. Yeah. The third one is that although there are so many research that have been done by universities, but again, the application of that research into the industry is also become an issue. Yeah. So I think moving forward, that there is a strong need for the industry and the institution of higher learning to work together in order for us to produce a more so-called relevant people or graduates that we produce for or to service the industry. That's number one. Number two is that how are we going to address the issue of the current professional programs or certification that are offered to the market? Yeah, this is where we thought that at FAA, what we have done for the last 2 years is that we have developed what we call it integrated and coordinated approach to global quality of talent development. Yeah. Number one is that by having a well-established quality assurance framework. Yeah. So the moment you have the established quality assurance framework for the professional program, that can be used as a benchmark or reference point for any providers worldwide, that you know for sure that this particular program has met certain qualification or certain standard. And number two is that we need to have a well-defined finance qualification structure. Unlike in the academic world, we have a very established structure. You know that it's a certificate level or diploma level, bachelor level or master's or PhD level. But for professional program or certification or qualification, we do not have such structure in place. How you know that certain professional qualification is equivalent to certain other qualification? How we know that certain qualification will have a different level of qualification? Yeah? I give an example. We have accredited CFA qualification. Whether a CFA qualification is equivalent to a bachelor degree? Is it equivalent to a master's degree? It's very difficult for us to ascertain that, because there's no such framework or standard that we can compare. Someone that have completed CFA level 1, can they progress to a bachelor degree in academic program? Vice versa. Whether someone that completed in diploma in investment can move into second level or third level of CFA program. So this requires some level of harmonization and standardization. Yeah. The third one is that we need a professional standard. For Islamic finance or even for Islamic finance or in Takaful specifically, we do not have any specific professional standard, unlike in other professions like accounting, medical or nursing, pharmacy and that kind of thing. So there must be some kind of a guideline. You know, what kind of professional standard that we would expect in the industry, because through the professional standard that we can link that into the competency requirement of a profession in the professional in the profession. Yeah, and that somehow linked into the requirement of learning and development, because the moment we define what is specific standard for the profession, we can link to the required competency and link to the learning of development standard. Last but not least, we need to have international connectivity and recognition. Yeah, as the issue of Sharia is very similar to the qualification standard. We need some level of recognition in different jurisdictions. Someone that have qualified like CFA will be well received in other part of the world. Someone that qualified in Islamic banking or finance or takaful will also be well received in other jurisdictions. So that's that kind of what you call it system or recognition is required for the industry, so that we be able to benchmark some level of requirement. Yeah. So in this respect, that what we have done for the last 2 years is that we are working closely with regulators, professional bodies, institutions of higher learning, and the standard we have developed so far that we would like to share that with the universities so that they can be used as a benchmark for the industry-based or practical-based curriculum. Yeah, the standard can readily available and can be somehow used by any university globally, and can be incorporated in the system. I give you an example. Recently, even in the case of INSEAF, we have been working with them for many certification programs. As for the UK University, we have accredited Nottingham University, and we are working with them to incorporate some of the industry-based curriculum into the academic curriculum. So we hope this kind of initiative in the long run will help us to reduce the significant gap that we have within the industry. With that, I end my presentation. Thank you very much.
I'd like to thank Dr. Ahmad for keeping strictly to time, and I also state that it's a great privilege to work with him on this important initiative for the last 3 years. Ultimately, the transferability of personnel with a recognized standard will really help all aspects of the Islamic finance industry to grow. Without further ado, I'd like to introduce you to Susan Dingwall, who probably needs no introduction. She's going to give us a regulatory update in 10 or 12 minutes, and all I've got to say to Susan is good luck on that. But it strikes me as it's always a bit of a challenge, where for 200 years we've had regulations which have been based on the concept of risk transfer, and we're trying to move into an environment of risk sharing. So the challenges are deep and profound, and I'm sure Susan will tackle it admirably in the next 10 minutes.
So good afternoon, ladies and gentlemen. I think it's just about good afternoon. We couldn't be talking about Islamic insurance in London at a better time. As Terry and Cameron have said, the government has made it clear that it wants the UK to be the Western hub of Islamic finance. And the Labour Party have said that if they get into power in May, that aspiration will not change. So whatever complexion of government we end up with, there's going to be a continued push towards Islamic finance. The government have also gone on record in the Treasury's UK Insurance Action Growth Plan to say that it's committed to developing London's expertise in Islamic insurance. And the government have said that they're going to work with insurers in order to develop and grow the market in commercial Islamic insurance. And therefore the focus is very much on commercial lines. The regulation of Islamic insurance in the UK is very straightforward. It's exactly the same as the regulation of conventional insurance. New Islamic insurers need to apply for authorisation to the Prudential Regulation Authority, and thereafter it'll be the Financial Conduct Authority that will supervise their market conduct. And as we've got no specific regulations for Takaful operators, the regulator's policy on Islamic products is that there should be a level playing field for everyone. So Islamic insurers and their products will be treated in precisely the same way as conventional insurers and their products. I think it's also important to appreciate that the regulators are secular regulators, they're not religious regulators. So it's not their job to determine whether a product is Sharia compliant or not. Rather, that's the job of the Islamic Insurers Sharia Supervisory Board. And the board will supervise the company's operations to ensure that they are Sharia compliant. It'll review all of the products to ensure that they too are Sharia compliant, including reinsurance arrangements. It'll monitor financial transactions, and it will look at the company's investment policy to make sure that there are no prohibited investments. It'll advise on the calculation and distribution of surplus, and it will also oversee a regular audit to ensure that its rulings are actually being complied with. So how do you start to underwrite Islamic insurance in the UK? Well, there are two main routes. First of all, you can establish a fully fledged Islamic insurer, which will need authorization from the regulator, or you can establish what's called an Islamic window. And a window in this context is part of a conventional insurer which conducts Sharia compliant insurance. So what's the authorization process for establishing a window? Well, if the conventional insurer is already authorized, the Islamic window will not require separate authorization, and the activities of the window will be covered by the existing authorization and permissions. Separate authorization would only be required if the conventional insurer is actually setting up a separate legal entity to conduct the Sharia compliant activities. Most importantly, the window's assets and its activities and cash flows must be kept separate from those of its conventional business. It's very important that there's no pollution of funds from the conventional activities, for example, investment returns from a prohibited investment. And quite often, the window will have separate branding just to, again, emphasize the very separateness of its operations. The advantages of establishing a window are obviously that it's a bit cheaper to do because you're not going through the full authorization process, and you're not going through what's required in order to establish a completely standalone operation. You can also take advantage of the existing resources of the conventional insurer. So what about underwriting Islamic reinsurance, or Re-Takaful as it's otherwise known? Well, in the past there has been a lack of Sharia compliant reinsurance, which meant that Islamic insurers were forced to purchase conventional cover, and they could do that by invoking the principle of necessity. Well, the Islamic reinsurance market is now becoming a lot larger, and as a result the principle of necessity is likely to be harder to rely on. And I think Sharia boards are going to get much tougher in making clear to Islamic insurers that actually they should purchase Islamic reinsurance if that is available. So some common questions that people have about Islamic insurance. Who can participate in the Takaful pool? Well, participants can be Islamic or non-Islamic entities. The important thing is that the risks that are being underwritten are Sharia compliant. How does an Islamic insurer rate risks and determine the appropriate contribution or premium? Again, very similar to the way that a conventional insurer would do so, based on actuarial principles and considering the usual factors, such as the nature of the risk, the period of the risk, etc. So the only thing is that the risk must not be a prohibited risk, for example, insuring a pub. So turning to the policyholder's obligations on placement and renewal, again, they're very similar to what we would expect in conventional cover. The policyholder must give full disclosure on placement and renewal, and if they fail to do so, then the usual remedies under English law apply. When should payment of a contribution be made? Well, again, it should be paid timelessly in accordance with the policy terms and conditions. Failure to pay on time at all is likely to allow the Islamic insurer to terminate the policy. So just looking in what circumstances a policy can be terminated, well, again, this is not going to come as news to you. It can terminate on the natural expiry of the policy, or on notice if the policy provides for it, or, as I've just said, if the policyholder fails to pay premium. One of the key differentiators between conventional insurance and Islamic insurance is the potential for policyholders to secure a surplus. And if a surplus is declared, a number of options exist. Firstly, part or all of it can be retained in order to boost reserves. Secondly, it can be distributed to the policyholders directly by way of a payment. Thirdly, what can happen is, rather than getting a direct payment, the policyholders can get a discount from the next year's renewal. Or, lastly, it could be donated to charity. So how much do you decide that a policyholder should get? Again, there are a number of options in relation to that. It can be distributed in proportion to their respective contributions, irrespective of whether they've received a claims payment or not, or it could be distributed in proportion to their contributions after deducting any claims payments that they've received, or it could be distributed solely to those policyholders that haven't received a claims payment at all, or the Sharia board could decide on another method. Turning to a deficit in the pool, where claims exceed contributions, the Islamic insurer will be required to cover that deficit with an interest-free loan from the shareholders fund. And that loan will be repaid out of future surpluses, and the Islamic insurer will have a first charge on that so that he is repaid before any future surpluses are distributed to participants. Are the policies any different in terms of their wordings? No, not dramatically. There will be changes. For example, interest cannot be charged on late payment of premiums, and the Sharia board will need to be satisfied that the policies are fully Sharia compliant. In addition, you would expect each policy to contain an explanation of exactly how the structure operates, including how the fees are calculated, and also how surplus is intended to be distributed. And what's the governing law of the policy? Sometimes there's a confusion that it must be governed by Sharia law. Well, no, it's not. If the policy provides for a governing law as being English law, then it will be English law that will govern any disputes under the policy. Notification of claims. Is that any different? Well, no. Notification of claims should be made in accordance with the policy terms and conditions, or if the policy is silent, within a reasonable time. And if a claim's paid late, then ordinarily the policy will provide for the Islamic insurer to set off against any claims payment any actual loss suffered as a result of prejudice in relation to late notification. Turning to exclusions, again, Sharia law allows an insurer to include exclusions in the policy. However, the exclusions must be clear and transparent to the policyholder so that upfront they can clearly see exactly what is excluded from cover. And the insurer must also observe justice, not impose unreasonable conditions, and not seek to deprive the policyholder of their rights. And lastly, as with conventional insurance, the Islamic insurer can also subrogate against a third party who causes loss. So that's really all I wanted to say at this stage, and hopefully I've left you with the impression that so far as the operation of the policy is concerned, Islamic insurance really isn't so far removed from the types of policies that you see in the conventional market. Thank you.
Again, my thanks to Susan for keeping very much to time and also giving us a very clear and concise walk through the state of regulation for Takaful here in the UK. As was mentioned by an earlier speaker from Lloyd's, I think next week the second meeting of GIFIG, the Global Islamic Finance Investment Group, which was set up by the UK government and met about 10 months ago here in London, is meeting in Kuala Lumpur. And one of the topics for discussion on the agenda, I'm aware of, is actually how we can develop the Takaful market further in the UK. So hopefully I can represent the cause at that next meeting. Let's move on now to David Anthony from Standard & Poor's Rating Services. He's going to talk a little bit about the prospects for Sharia-compliant insurers and reinsurers in the GCC in this present year as oil prices fall, although I think oil prices have probably come up a little bit, so maybe you've got the right to change your topic, but I think we're all interested about the stress and pressure we're under when something that we've been used to at a very high level has been reduced to a low level. So David, we're interested to hear your thoughts.
Hi, good afternoon, ladies and gentlemen. I'm David Anthony with Standard & Poor's, and it was suggested that I speak about falling oil prices. Fine, it was a good idea in January because oil prices were falling, but as has just been mentioned, they're up again now, but not quite as much. I was going to talk about the oil prices, but then this is a Takaful summit, so I thought it seemed reasonable then to draw a parallel from the oil price to the Takaful sector. Then it seemed reasonable that I, rather than have the big picture for Takaful, I focus in on Saudi Arabia, because Saudi Arabia is the dominant, as we heard from Shakib earlier, the dominant Sharia-compliant insurance market in the world, 50% of Sharia-compliant premiums. It's also the market I know best. And then finally, the theme of the conference is rethinking the Takaful model, so I thought I'd at least do you the courtesy of addressing that topic, which means I have 4 presentations to give you in 10 minutes, so it's going to be fun. So keep up if you can. Right, starting with the oil price. The oil price has fell in January when I was writing the slides, by about 60%, 59%, from a recent high in the middle of last year down to a recent low towards the end of January 2015. Down 60%, it's now up 30% from that low. I was looking at the FT this morning, and the spot price at the opening market today was $62 a barrel. That's for Brent crude. So it's coming up a little, but it's much lower than the levels that were prevailing previously. So in terms of revenues to the GCC governments, they're still substantially down, if not quite as far down as some might have feared recently. And the reasons for this, it's not just speculation, as some I read in the press occasionally. It's basically the old story of high supply, low demand. The high supply, basically, it's new production, it's revived production. So it's, as people have been hearing about, it's US shale, new technology allowing to recover new sources of oil and gas. Canadian oil sands. Oil is not a scarce commodity. There's an awful lot of it around in the world. It's just very difficult to extract at a low price. You've got Libya, which is, despite all the problems there, is now producing levels of oil which are surprising the market. Iraq is also producing oil, again, to some extent. Russia is producing oil as if it's going out of fashion. So the United States now is producing, on average in 2014, was just over 9 million barrels of oil a day, which is the highest it's produced in the last 30 years. And again, that's basically the shale. But Russia is producing about 10 million barrels a day, which is the highest that Russia's been producing at since the time of the Soviet Union, basically. There's also weak global demand. The economy, it's not in recession. It may be picking up a little bit in the US. It may be picking up a little bit in sort of the Anglo-Saxon world and Germany to some extent. But relatively speaking, there's weak demand. You've got the strength of the dollar. It's the old stories you saw with gold in the past. Gold went up as the dollar price went down. Gold went down as the dollar price came back up again. And you're seeing the same with oil as well. So in third-party currency terms, it's actually fairly stable. The Russians are still earning in ruble terms what they were earning before now on their sales. And the sustained OPEC production as well. I think everybody, or the market, was expecting OPEC to maintain a stable price for oil by reducing its production, which is what it's always done in the past. And what has changed is that at the end of November last year, the OPEC leaders, particularly Saudi Arabia, decided to maintain market share, to maintain production at about 30 million barrels a day. And I think in January they're actually producing at 31, 32 million barrels a day. So they've maintained the volume market share, but with a consequent hit to pricing. S&P makes some forecasts. It's not that we're the only experts on the sector, but it does seem to be in line with the consensus. So we're saying that we see on average oil at about $55 a barrel in 2015, on average at around about $65 in 2016, and on average at about $80 a barrel in 2017. The important thing is we do see the oil price going back up again to some extent and beyond the increase which we've seen since January. So it's getting better. And then on the next point, you see, looking at most of the GCC countries, they require, if they're going to pay their budgets without a deficit, fund their budgets, they need about on average, they need about $80 a barrel. So it's interesting that our own estimates within Standard & Poor's see oil returning to that $80 a barrel level. The only problem is, of course, that $80 a barrel is also the price at which the US fracking becomes economic. So that magic number of $80 a barrel, it's probably going to be something of a plateau, because at that level of price, all of the new producers come in, all of the new technology, the oil, the fracking, the oil sands, etc. So it will be very hard to go above the $80 a barrel level. The winners from all of this, of course, it's the oil importers. So it's China, major oil importer, it's Japan, it's Europe. Europe excluding Scotland, perhaps, but anyway. It's Egypt. I have a soft spot for Egypt, so I'm pleased to see Egypt as a winner. It's Jordan, Lebanon, Far East. But I think it's unlikely to expect that the lower oil prices will be passed on to the population. Governments are just going to find it too attractive to take this opportunity, I think, to reduce subsidies. 60-70% of all the subsidies in the Middle East are energy related. So basically, they're also subsidizing bread in many countries, but that's fairly economical. What they're doing is subsidizing car ownership and air conditioner users. So they're subsidizing the middle classes. They don't need it, frankly. Losers, there are always losers, aren't there? It's mainly the high-cost, high-spending oil producers, basically. So it's Oman, Bahrain, Dubai, Iran, Iraq, Libya, Algeria, etc. All of these. It's the new producers in the US who are hoping to get over $100 a barrel from the produce from fracking. Now they're getting much less than that. So the economics of that fracking has perhaps fallen away a little bit. It's also the beneficiaries of GCC largesse, countries that were receiving perhaps subsidies, the Maghreb countries to some extent. Poor old Egypt is back again as having been a winner on the one hand, it's now a loser. It's possibly going to find it more difficult to raise subsidies from the GCC countries, particularly if the president gets himself recorded making comments about them, which was unfortunate. Just to put things in perspective, Abu Dhabi, Qatar, Kuwait, they have fairly low minimum oil price requirements, 75, 65, 54. And we Standard & Poor's, we've affirmed those sovereign ratings in the last 10 days or so without change. They're not really impacted by the oil price fall. At the other extreme, you've got countries like Bahrain, Oman, which need a much higher level of oil price to make their own production viable and economic. And they need that money for the spending in the economy, for public sector worker salaries, etc. Saudi Arabia also needs that high level of oil price, not because its oil is expensive to extract. It's not. I've heard say that they can extract oil at $3 a barrel, so it's really seriously cheap to dig out of the ground there. But they spend so much on the population of 30 million. They need the revenues to fund the infrastructure spending, and so these sort of loser countries to some extent, I suppose. You have seen rating actions, so we have downgraded Bahrain, BBB- with a negative outlook. We have downgraded Oman, A- stable, and we have changed the outlook on Saudi Arabia. So it's still in the AA range, very strong, but it's got a negative outlook now, just given the magnitude of government spending there. The good news for Saudi Arabia, as per the bottom line, though, they've got an awful lot of public assets. They've got just about $730 billion of savings sort of sloshing around the global financial markets, which they can use to bridge the deficit between revenues and expenditure over the next year or two. So they should be okay. Okay, how will the falling oil revenues likely impact the region's Sharia-compliant insurers? This is the second part of my presentation, and where we actually catch up with Takaful here. So to summarize, basically what the governments are going to do in the GCC region is they're going to cut back on their expenditure to some extent, some of the more flamboyant prestige expenditure. They're going to liquidate some of their foreign assets, their savings. And some countries, like Oman, Bahrain, perhaps, are probably going to borrow. It'll be interesting to see whether there's more sukuk issuance, but we shall see. But there are things that they can do, so it's not just one issue. As discussed, I suppose, earlier during the course of the morning, many of the Takaful, Re-Takaful, Islamic cooperative companies that we see in the region, they're still relatively recent startups, they're still relatively small, they're still relatively new, and frankly they're still tending to concentrate on the retail market, and retail in this context means motor, or else they're moving slightly into the commercial lines sector, but that's meaning group health, compulsory group medical insurance. And both of these are driven more by demographics, the number of people driving cars or the number of people who need a work permit, therefore they have to have the medical cover to allow them to get the work permit in Saudi Arabia, etc. So demographics are driving them. Their concern is not really the oil price, it's just the marketplace. And we'll see this a bit when we come on to Saudi Arabia in a few slides' time. So net, and it's a bit of a damp squib, I suppose, as a conclusion. I think having talked about the change in the oil price, I think we're suggesting that the impact on the Takaful sector is going to be relatively modest, frankly. Okay, there'll be one or two companies that do lose. Some companies, and particularly Takaful companies, I was going to say particularly in the UAE, but in the UAE and other regions, a number of Takaful companies have sought to adopt a fronting strategy. So they, as local national companies, they front the big ticket infrastructure projects which are being sponsored by government, and then they cede that business to the global reinsurance market in exchange for some inwards reinsurance commission. So to the extent that that infrastructure spending is going to reduce, presumably that might mean some of these companies are going to have less business to cede and therefore less reinsurance commission. But those are specific companies. We know who they are, but I shan't name them now. The good news, I suppose, there's always some good news, is given the strong dollar and given that GCC currencies are essentially linked to the dollar, that means car repairs, and that's where the Takaful companies are particularly strong, motor, car repairs are going to be cheaper. The spare parts are going to be cheaper in dirham terms, in Saudi riyal terms, etc. For the European, Japanese cars at least. So just don't buy an American car, I suppose I should say. And say the capital markets have already reacted. If you were a shareholder in an oil producer or in one of the oil industry service companies at the end of last year, you lost a lot of money as the oil price came down. So in a sense, it's already historic fact. The oil price fall has already hit a number of insurers who had investments related to the oil sector already. Maybe they're looking to those stocks now as a recovery stock. We shall see. Perhaps the big issue for 2015, rather, it's not really the oil price, it's whether interest rates on the US dollar will increase mid-year, later on in the year, in which case there might be, again, disruption, turmoil, panic on the stock markets globally or regionally. That could have an impact on property markets, so heads up Qatar, heads up Dubai, etc. And it might have an impact on borrowing rates, terms and conditions. We shall see. But say maybe it's interest rates which is the big issue, not oil price. Let's go to the case study, Saudi Arabia, because it's what I know about. It's a big market, and Shakib, you said you didn't have the latest numbers. Let me give you the latest numbers for Saudi Arabia. At least you will appreciate how difficult it was for me to get these numbers prepared in time for this for this summit. So in 2014, for the whole of 2014, the 34 insurance companies and one reinsurer in Saudi Arabia, all of which are Sharia compliant, they wrote 20.9% more premium, gross premium, in 2014 than they did in 2013. So that's a big increase. And all the people talking about the growth in Takaful business globally are going to say there was a huge increase in business in Takaful in 2014. A lot of that huge increase in Takaful is actually a huge increase in Saudi Arabia, as the regulator imposed actuarial pricing and market rates hardened. So that's a big increase in 2014, after a fairly big increase, 19.3%, in 2013. Saudi Arabia is a great market to be in. Or is it? If you look, I shan't go through all the numbers because you're going to be waving, it's coming, okay, waving bits of paper. So net, if you're in an insurance company in Saudi Arabia, what really strikes you is that the top three companies, Tawniyah, Bupa and Medgulf, wrote 55% of all the premium in the marketplace, and they generated 81% of all of the profit. They're dominating the market. So these are, you should be pleased. These are all cooperative companies, so they're Sharia compliant. The problem is they're very successful, but at the expense of the rest of the market. If they're taking all of the cream, what's left for everybody else? And as you'll see on the next couple of slides, not very much. So, that's it. Go back to the good news. I'm always trying to think of the good news. The good news in Saudi Arabia is that 50% of the cars are uninsured, approximately. 50, 40, 60. So again, the issue for insurance companies in Saudi Arabia isn't should we worry about the oil price. It's that they should get out into the marketplace and convince all those car owners who don't bother to have insurance. Maybe many people in Saudi Arabia just don't believe in insurance. It's not a question of it being haram or whatever. They just, who cares? The Takaful sector needs to sell itself, that it's selling a good service that people should want and be prepared to pay for. And boy, is there a lot of sales work to be done in Saudi Arabia to convince the man in the street in his car to get some insurance. If they could bring in that other 50% of cars, it would be a huge bonanza in premium terms. Anyway, I'll just go through, again, for Sheikh Eve's benefit, the latest numbers. These are the companies in Saudi Arabia, 34 insurers, as I say. Someone's taking a photo of my slides. You can have a copy if you wish. It's no problem. You see the divide. Tawniyah, Bupa, Medgulf. Say these are ranked in terms of 2014 gross premiums. So I've put it. They're in a different league to the rest of the market in terms of size and substance, and if you look at the far end, profitability. And this is it. This is what we're saying about the Takaful sector. You need to be big, well-established, critical mass of business to be profitable, because it's very competitive out there. And Tawniyah, Bupa, Medgulf are big, competitive, well-established, and profitable. It's all the other ones, the startups, the new entrants, which are finding it difficult to make a profit. So that's the sort of the top 12 on the first slide. The middle market is the middle 12 names. Again, there's some quite well-capitalized companies here. But you're starting to see more red ink in terms of profitability. So they've got the capital, they've got the premiums, but they haven't really got the critical mass to make a reasonable return. And there's one Takaful company here, Al Ahli Takaful. So the Takaful sector isn't particularly present. These are all Islamic cooperatives, unless highlight. And then you get to the bottom third of the marketplace, and there's a lot of red ink in terms of profitability. And also, this seems to be the popular part of the market that the Takaful companies are populating. It's probably just a coincidence, in fairness, because there's nothing wrong with SAB Takaful. HSBC's in-house bank, effectively, doing very well on the life side. But the companies like Solidarity, they've got tons of capital. Capital is not the issue. They're just not writing any profit, or not writing enough profitable business. Wakaya, Al Jazeera, Takaful, Tauni, sort of hedging its bets between Takaful and cooperative there, I think. But even companies like Saudi Anaya there, writing health business, that's owned by Munich Re. So the people in Munich are not going to be too happy about what's going on in Saudi Arabia. But then it's just a question of critical mass. You can be owned by Munich Re, but it still doesn't guarantee you're going to be successful if you can't access the business. So there you are. Anyway, so there's a lot of premium in Saudi Arabia, worth about $8 billion. It's a big market. So do we need to think or rethink the Takaful model? Well, everyone else has said yes, so I shall say yes as well. Every year I sort of stand here and say, well, Takaful, there are too many moving parts. You've got wakala fees and mudaraba fees, and you've got qada hasans, and they're coming and they're going forwards and backwards. Anything which is complex, it's hard to be efficient, really. And your moral hazard creeps in. So the managers of the company, are they trying to support the shareholders by having a higher wakala fee, or are they trying to support the policyholders by having a lower wakala fee? I really have a soft spot for Egypt, but also a soft spot for Islamic cooperative structures, frankly. It works. You have a normal, in effect, conventional insurance structure, and then you get an operating result. And then that operating result in Saudi Arabia, at least 10% of that operating result has to go to policyholders. It could be more, it could be 100% if the company wishes. But it's like in UK life with profits, 10% at least goes to policyholders. And it works. May not make a profit, but it works structurally. And there's a common interest between the shareholders and the policyholders to maximize the operating profit, because that's what they share in, that's what they both share in. So, I don't know. Islamic cooperative, if you bolt on a Sharia board onto the top of that, in my opinion, you've got something interesting. So, yes, there are lots of models for Sharia compliance, but don't ignore Islamic cooperative. It does work, and it is up and running in Saudi Arabia. Again, the other thing, the real issue is there are too many, too small Takaful companies, frankly. How many big Takaful groups do you know of? Not many. The Salama that was mentioned in the UK context, but Salama group of the UAE, it's the only one I can think of. There may be others, so shout out if you can think of them, but I can't. None? Solidarity. You're talking about the big losses or the big company? Okay, well, you saw the numbers. Okay, fine. Yeah, okay, solidarity. Yeah, it's true, actually. Commercial lines business, I think one of the sub-themes of the conference was perhaps Takaful companies, how can they get into commercial lines? Well, hey, be careful what you wish for. Now is not necessarily the time to be going into commercial lines, given what we've just been saying about the oil price, cut back on infrastructure spending. And I'll just reiterate what was said earlier today. If you're going to be successful in commercial lines, you need to be well established, so you need time, 10 years. 2 minutes, I know, yeah. You need size, capacity. You need a rating, A range or better, and that doesn't come quick, I'm afraid. And you need service, so you need management. So you need the good ERM for the internal structure of the company, and you need the good service quality for the external side, for the customer service. So it seems to me a little bit that with rising US dollar interest rates, with falling oil revenues, life is going to be tougher in the future. And so it's perhaps the business model of Takaful companies that needs to be reviewed, not the Takaful model as such. And net, if you're too small in a highly competitive market, you're not going to make money. And so many of the Takaful companies are too small in a highly competitive market, so they're not making money. Surprise, surprise. And the fact that they're young and things, it's tough. It's not going to be easy. And perhaps some of them, what they have to do and think about is not changing the wakala fee or whatever, it's merger with some of their peers and competitors also in the Sharia compliance sector. Come together, unite, cooperate. That's probably the way to go, in my humble opinion. Finally, I'm not going to bore you by talking about our sort of criteria and stuff, but 37 insurance ratings, that just shows a little bit of the background. So when we do talk at Standard & Poor's about the insurance sector in the Middle East, we do know what we're talking about, actually. We have quite a bit of coverage there. And if you have any questions about any of these ratings, just ask. Thank you very much.
David, thanks so much for a very comprehensive review, slightly over time, but I won't be critical because I think there's some very important data and analysis there. Our last speaker before lunch is Mahesh Mistry of AM Best, who's going to talk about their approach to the rating of Takaful entities. So without further ado, Mahesh, over to you.
Thank you, Dowd, and good afternoon to everybody here. It looks like David from S&P has covered most of my points, so I'll just touch upon the main issues that we see from a rating perspective and what we see on the Takaful side. But I'd like to start in terms of rethinking the Takaful model. As a conventional, traditional company, the shareholders' interests are always at heart. It's always about trying to get a return for the shareholders as high as possible. When we're talking about Takaful, we need to consider both the policyholders' interests and the shareholders' interests. And those interests need to be aligned together, because if there aren't, then that's where the problems and the challenges do arise. So when you have the model, it can't be skewed towards the policyholders and it can't be skewed towards the shareholders. There has to be some compatibility there between the two. Now, when we look at companies, I think it's always interesting to understand why insurance companies fail, or why Takaful companies could potentially fail. So, the following slide is taken from AM Best's impairment studies, and it is indicating, the main reasons why insurance companies fail. And without doubt, it is mainly down to the underwriting side. So, inadequate pricing, deficiencies in reserves building up over time. And these are key challenges for Takaful companies. As we've seen during the course of this morning, it is a highly competitive market. Companies are competing on price. When we look on the reserving side, companies are adopting unsophisticated approaches to their reserving methodology. Sometimes it's just a basic approach as a percentage of the contributions that a company is receiving. So these do need to be very much robust and priced in the appropriate manner. And as we've seen, these companies are small, so they are growing quite rapidly, and that's another reason why companies fail. If they're growing too fast and their pricing isn't correct, then there could be an issue there. Just to touch upon a couple of other important aspects on this slide. First is the reinsurance failure. In emerging markets, retention levels are very low, so they are very much dependent on reinsurers, so they need to make sure that the reinsurers or Re-Takaful companies that they are using are of good and sound credit quality. Terms and conditions are in line with the reinsurers so that there's no dispute risks arising there. And also in terms of the investment side, we do see companies and Takaful operators having quite aggressive investment policies and a high concentration of, say, equities and real estate in their portfolio. So as a rating agency, we're not interested in how Sharia compliant a company is. We're interested in the financial strength of an insurance company and the protection that's afforded to the policyholders. And that's what we look at as a rating agency. So here, this slide just depicts the key components of AM Best rating criteria. It should be noted that we have a specific rating criteria dedicated towards Takaful companies. We do believe they are unique and that the model and objectives of Takaful companies are different and should be different to that of a traditional insurer. So, the components are balance sheet strength, operating performance, business profile, how those elements are tied together with enterprise risk management, and country risk also forms a part. A lot of the Takaful operators are in emerging markets, and we need to understand how they are navigating through the environments that they are working and operating in. Now, in terms of how we look at companies, is that a company's balance sheet strength can be at a particular level at this point in time. But what's going to drive it going forward is going to be the operating performance and the business profile. And this is where some of the key challenges lie for Takaful and Re-Takaful companies. If you've got the capital, it allows you to build a franchise in the market. If you do that by writing profitable business and you have suitable retained earnings, then that again feeds into capitalization, and over time the company will become stronger, which can equate into higher ratings over time. But if one of those elements is not working correctly, then we could see a deterioration in a number of those aspects, and we could see, say, a fall in some of those ratings over time, or capital adequacy. So going into a bit more detail, so I'll take those components and I'll run through them very quickly. I'm not going to go through everything on these slides. It's there for your information, but I'll just try and pick up on a few of the main issues that we see are pertinent and important to Takaful companies. Now, generally on a combined basis, companies are well capitalized. Takaful companies are well capitalized in the region. They have unleveraged balance sheets, which is very good. Now, a key component to AM Best's analysis is regulation. Now, when we consider the model, we consider both the shareholders fund and the policyholders fund. Now, on the policyholders fund, that's where you have a lot of the underwriting risks, but there's no equity effectively there. On the shareholders fund, you have a lot of the asset risks, and that's where the shareholders' equity is. So when you look at the capitalization of the shareholders fund, it's extremely strong. When you look at the policyholders fund, it's extremely weak. And that's because a lot of these companies have not developed themselves in the market. They haven't built up surpluses over time. So at AM Best, we have a two-tier analysis, and regulation is an important part to our analysis in terms of the credit that we give for capitalization. So when we look at regulation, what we're more concerned about is policyholder protection. So ideally what we'd like to see is a self-sustaining Takaful fund, a company that is generating good profits and they're keeping it within the fund so that they have sufficient capital to support the risks that the company is underwriting. Then we'll also consider the level of regulation that is in these markets. So is it clearly defined that in the event of distress to the Takaful fund or winding up the company, that the shareholders are going to be responsible for any underwriting obligations that are sitting within the Takaful fund. So, we've studied a number of regulations across Asia. You've also got the cooperative model, which is very distinct in Saudi Arabia, the CBB in Bahrain, Jordan, in addition to the UAE, which has just introduced some new regulation through the insurance authority as well. So we're looking at the regulatory aspects and seeing, what is afforded to the policyholders fund in terms of protection. And if we do believe that protection is there, then we'll give the fund credit for the shareholders' capital and surplus that they have in place. We can also look at the Cardasan, whether that's going over and above what's required to cover the deficit as credit for the fund. And where we perceive there is weak or unclear regulation, we'll also give credit where the shareholders have ring-fenced part of their assets in favour of policyholder liability. So that's quite critical from a capitalisation point of view in our assessment of companies. Also, just on the point at the bottom there, insufficient Re-Takaful capacity. There are very few Re-Takaful companies there. Most of the business, if you look at it, ends up ultimately with the big reinsurers or Lloyd's at the end of the day, and they have their own subsidiaries, windows, etc., so they can make it work. In addition to that, when we look at the Re-Takaful companies, they don't have the ratings that some of the other traditional reinsurance players have in the market. So when we look at moving on a little bit more in terms of operating performance, we look at both investment performance and underwriting performance. I'm not going to talk too much about investments. I think underwriting is where we see the crucial issues are. Now, a lot of people have discussed that the profitability is not good. But first we need to understand the way that companies are reporting. Sometimes when companies are reporting the wakala fees, they're not the same as the operating expenses of the companies, of the Takaful and Re-Takaful companies that are there. And that can distort the view, that can distort some of the numbers that are coming into place. So we've looked at a number of Takaful companies. So when you look at their financial statements, they're showing losses every year, but that's because the wakala fees are extremely high. And that the model that they're adopting is probably less favourable to the policyholders, more favourable to the shareholders. So that definitely needs to be considered, and we do that when we are, say, comparing a Takaful company across to a conventional company to strip out the wakala fees and make sure that we're using the actual expenses so we can compare them like for like. Another issue with the wakala fees is based on GWP, gross, or say the gross contributions, and with the low level of retention, if a company is writing a high amount of commercial risks, then that's going to obviously increase the fee that's being charged across to the fund as well. So it's important that companies get the right balance in their model. It's not that sometimes the model is incorrect or wrong, it's just that they need to be looking at both parties and adopting a suitable model there in place. Now, there is an issue with CARDESAN. A lot of companies do have CARDESAN, and we do say it is ever increasing, but we are finding that companies are paying back the CARDESAN, and they are now starting to generate surpluses within their funds. We've even seen a couple of companies, for example, Takaful International and Qatar Islamic, distribute surpluses back to policyholders, and this is very critical in the Takaful model. We talk about value added in terms of Takaful, and when you're distributing surpluses back to policyholders, that to me illustrates that there is something there which is working, which is unique, and it is adding benefit to the Takaful players. And hopefully with time, and as things develop, more people will start to see that, and it will be for the benefit of the industry going forward. On the investment side, we do see a higher degree of concentration. There is less opportunities for Takaful players in terms of the investments that are out there over the traditional market, and as a result of that, they do tend to end up with greater concentrations in their investment portfolio and slightly lower returns on their investments. So I've been shown about the time, so I will move on very swiftly. So in terms of business profile, Takaful players are finding it difficult to establish themselves in the market. They are small companies. When you look in, say, in Saudi Arabia, it's an even playing field, but as David pointed out, it's dominated by the few. When we look wider in the GCC, as soon as you're competing with traditional insurance companies, the playing field becomes less level, and it becomes harder for companies to establish themselves. With Takaful companies with their higher expense base, it does make them harder to build that profile over time. So a key market challenge is trying to create your profile, but creating that profitability at the same time. In terms of enterprise risk management, so this is how companies should manage all of their risks together at the end of the day. So I won't go through all of these. It's there for your information if you want to read it. But ultimately, what we're after as a rating agency, we don't expect companies to have the best ERM approach. The ERM approach should be suitable to a company's risk profile. So if you are a Takaful operator operating in one market, you should have a good ERM strategy, but by no means should it be something like Munich Re, who are operating across the globe in many, many jurisdictions. So the risk management capabilities need to be relative to the company's risk profile, and it should be something which the company can use to make their organisation better. A lot of the time, we see companies getting consultants in, having a very good framework of their ERM approach, but they don't understand the input parameters or the output parameters. So to us, it's not a box-ticking exercise, it's more what are you creating to make your organisation better over time? Ultimately, it should feed into your numbers. If you come with the best model, but then your loss ratios are moving in the wrong direction, then there's something wrong with what you're doing. So ERM is important, and it will continue to be integral to our analysis going forward. So just a few final comments. We have a number of ratings of Takaful companies. They are in the secure category, which means they are doing something right. So a lot of the time during this morning, sometimes you feel it's doom and gloom, but things are heading in the right direction, and there are Takaful and Re-Takaful companies that are making it work. In terms of regulation, it is heading in the right direction. It would be nice to have uniform Takaful regulation across all the jurisdictions, but it's good to see that regulators are active and trying to make things happen. So, what do companies need to do to make their model more robust? Does it need a complete overhaul? Personally, I don't think it does. I think the alignment needs to be there between the policyholders and the shareholders. The Wakala fee should reflect actual expenses plus the cost of capital and not be aggressive or too high. And as a result of that, there is a lower dependence on the card Hassan. We are seeing surplus distributions taking place, and as we've seen, there are a number of markets, for example, the UAE, which are pushing Islamic products, etc., which will help the variety of investment opportunities that are available for companies as well. So I think a key challenge is the sustainability of the Takaful model, trying to balance profile and performance, creating that value-added proposition, and making sure that the two parties' interests are aligned. So with that, I will finish the presentation and let everyone have lunch. Thank you.
Mahesh, thanks very much indeed. I won't attempt to summarize four, as I said, eclectic topics, but I think there is a common theme emerging that we've had four presentations which were largely fact-based with some relevant analysis. Overall, there is a sense of optimism, but we've got work to do. And I think to echo in the first session, Richard Bishop said it's time to get serious. It certainly is time to get serious, and I always like to close out with a catchphrase of mine that there's much to do and not a moment to lose. So if you could show your appreciation to the speakers and panelists for an excellent session.
Thank you, Brother Iqbal. Just like the other speakers, you cannot say no to Professor Iqbal. So here I am. Ladies and gentlemen, welcome back after your lunch. I hope you didn't eat too much and you can stay awake, but we have three distinguished speakers. This session is session 3, taking a fresh look at mutuals and their potential role in the Takaful provision. Being Malaysian, so I'd like to quote the Malaysian Islamic Financial Services Act, the definition of Takaful. Under the Part 1 of the Section 2, Takaful Act, Islamic Financial Services Act 2013, Takaful is defined as an arrangement based on mutual assistance under which Takaful participants agree to contribute to a common fund, providing for mutual financial benefits payable to the Takaful participants or their beneficiaries on the occurrence of a pre-agreed event. So really, going by this definition, Takaful is mutual. But never mind, we'll take a fresh look at the mutuals, how it can be fitted into Takaful. Maybe we should go back to basics. The original Takaful definition in Malaysia, we use the word solidarity, brotherhood. It's all very mutual. So, ladies and gentlemen, I think this is what we need to do, a relook not just at the model, but the fundamentals of mutuality in Takaful and how it's fitted in. Yeah, we have three distinguished speakers. They are veterans at the ITS. You see them every year. So without we have Mr. Zainal Kasim, Senior Partner at Actuarial Partners Consulting Sdn Berhad. We have Azman Ismail, President IIFN Consulting Sdn Berhad, and we have Brother Ajmal Bati, CEO Alinma Tokyo Marine from Saudi Arabia. So we'll start with Brother Zainal Kasim, who will talk about how the mutual model can be adapted for Takaful, addressing the weakness of the current Takaful model.
Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everybody. This is the second time in 2 days that Iqbal has asked me to take the graveyard shift immediately after lunch. I'm not sure whether he thinks that my talk will be sufficiently interesting to invigorate the mind, or whether in fact I'm just going to warm up the audience for the next speaker. Okay, I've been asked to speak on this on the mutual model in terms of how we can actually use the mutual model to actually do Takaful. And I've basically used this title, how the mutual model can be adopted for Takaful, addressing the weaknesses of the current Takaful model. the title at the top of the slide presentation, you should see it either as a complaint that the consumer has for Takaful, or basically what an observer of the Takaful market might comment in respect of Takaful. I'm going to basically go through the points in terms of how it relates, if you like, or why is it that this observation might be taken as valid. So Takaful is expensive. Now, as most of you would have gathered from the morning session, the reason why Takaful perhaps has not been as profitable as other entities, other insurance companies, is because most Takaful companies are basically startups. They are new, if you like. And you have to also remember that the Takaful is considered as part of the insurance industry, and insurance is a regulated industry, and the cost of compliance is expensive. In addition to that, there are also additional compliance costs. For example, the cost of maintaining Sharia compliance. You need to have a Sharia board, and you need to have to actually ensure that your business is continuously in compliance with Sharia. Next is that most of the Takaful expenses are overhead costs. When you start up a business, you have overhead costs and you have marginal cost. In Takaful, in any insurance business, initially anyway, most of the expenses are actually overhead costs. You can't do without incurring those costs. So unless you reach a particular volume of business, you're going to incur expense losses. You call it expense overruns in actuarial jargon. In order to address these expense overruns as soon as possible, as fast as possible, you need to actually increase your contribution rates to actually reduce your expense overruns, and this could make Takaful expensive, or will make Takaful expensive. The third point is that the Takaful operator has got to maintain minimum capital levels. In Malaysia, it's 100 million ringgit. In Saudi, it's 100 million riyals as the minimum. This is determined by the regulators. So that's a minimum. Even if you write very small amount of business, you still have to maintain 100 million worth of ringgit worth of capital in Malaysia and Saudi. In addition to that, it has also to maintain a solvency level. So what you need to maintain is the greater of the solvency capital, if you like, and the minimum capital. Okay. So these are what we call tight capitals. Capital with which the shareholders have got to leave in the company. And these tight capitals needs to be serviced. Service means you need to actually earn profit, to allow you to actually pay the shareholders for the use of the capital. Now, this earnings that you need to actually generate to service the capital has to be put into the computation of the Takaful contribution rate, and therefore this also increases the cost of Takaful. The fourth point I'm making is that Takaful is a with profits model. And we do understand that under with profits model is usually more expensive than a non-profit model, because ultimately down the road you have the opportunity, if you like, to share in surpluses. So that's another reason why Takaful is expensive. Another observation could be Takaful does not provide a comprehensive product range. The point was made this morning that management works for shareholders normally, and management's job is to maximize profit to shareholders. Therefore, the Takaful products that you see in any market that are being sold are those that optimizes the utilization of shareholders' capital. These are not necessarily the products that consumers need. Okay, so products which are capital intensive normally are not actually sold by the Takaful company, because it does not achieve the purpose of maximizing shareholders' capital. Return on shareholders' capital. In addition to that, in terms of what goes into the computation of the premium rate itself, you have cost of the expenses itself, the cost of the operator. You got that, which is basically what's the word for it? Which is basically reflected in the wakalah fee. You got to also pay for the Re-Takaful costs, and of course you got to allow for claims payment. Now, you might say, why don't we just put it together? You can let it actually put all this together and go to the market and sell on that basis. Of course, it does not work that way. It works the other way around. The market basically determines what's the price for it, and you got to ensure that everything fits into that price. Now, if it does not fit into that price, the thing you should do, of course, is not to sell that particular product. So the product range of Takaful can be restricted because of that. The third point is that some large risks cannot be undertaken by Takaful because there's no Re-Takaful support for it. Or if there's Re-Takaful support, it is not at the price with which the Takaful company can actually package together and actually compete in the market. The third point here is that Takaful is no different from conventional insurance. This could be something that observer might make or a consumer might make, someone who actually uses Takaful and compares it with conventional. Now, the main point in terms of Takaful is, or the main selling point that people would put forward in terms of Takaful was that you're able to distribute surplus back to the participants. Now, this is something quite unique if you apply the general Takaful. I think in respect of family Takaful or life insurance, if you like, you already have the with profits products whereby there is a return, there is actually a bonuses, if you like, that's given to the policy holders if the experience is good. But in general insurance, normally you don't have that, not when it comes to personal lines, individual insurance. But for Takaful, that's something that you can expect or reasonably expect. So the point here is that the consumer experience with Takaful, if you don't have even that surplus sharing, is not very different to buying conventional insurance. So if it's not very different from buying conventional insurance, then what is the product differentiator between Takaful and conventional insurance? Second point here is that, like conventional insurance, Takaful products are sometimes missold. Now, sometimes it's not really missold, but just perhaps the intermediaries or agents don't understand what Takaful is, and they tend to overpromise. And the problem is that when you've got religion, in business, if you like, people tend to look at the product and say, okay, effectively, do I trust this agent? Well, no, the guy basically is a Muslim like me. He's saying something here. He must be telling the truth. He must be being quite honest in terms of what is it that he's trying to offer me, basically. But sometimes the agents themselves don't actually know what they're selling, and therefore we could have issues whereby products are missold. This is something I only learned actually recently. I mean, this is fundamental, if you like, as far as Sharia compliance is concerned. There's actually a 2013 Fiqh Academy ruling on Takaful. We all know about the 1985-86 Fiqh Academy ruling on Takaful, but this is the most recent Academy ruling on Takaful. This was a meeting on 18th to 20th of November 2013. It was actually done in Riyadh, and it reaffirmed the cooperative insurance as the model of choice for insurance for Muslims. Now, this cooperative insurance is not the same cooperative insurance that you currently have in Saudi. It's very, very different. Okay, so this cooperative insurance is cooperative insurance in its sort of basic concept. Okay, it specifically defines cooperative insurance as a new contract that by itself is a contract. This is very, very earth-shattering as far as I am concerned, because we know the Wakala contract, the Mudarabah contract, Murabaha contract, but here the Fiqh Academy is actually coming up with a new contract specifically for Takaful, and it is based on the Tawani or cooperative cooperation principle. Okay, so it proposes that the management of the cooperative be outsourced to a licensed independent entity that operates on a compliance basis, compliance with Sharia rules, which is in compliance with Sharia rules, if you like. And that management services be outsourced to this independent management services. That proposes the management of this cooperative be outsourced to a licensed independent entity that operates on compliance with Sharia rules. Okay, and then in respect of these services, you can actually receive agency fees or even a mudarabah sharing basis. Now, the interesting thing about having this as a new contract is the fact that you can actually have sets of rules to determine how this fund is actually governed. One of the problems with the current model where you have tabarruk contribution is the issue about the set of rules that governs a particular fund is not very clear. And that's why in some markets you have the waqf model being used, because waqf by principle is a trust, and because you have a trust you can have a set of rules.
But what this ruling says is that you can have a predefined set of rules within this cooperative principle, like this fund, which is run on a cooperative basis. So because of the fact that all rules, all the way in which the fund is governed is set up in advance, it does promote transparency. Next point here is that the cooperative fund is solely responsible for bearing any financial loss other than losses based on the misconduct and negligence of the managing party. So it's clear on that. If there's any losses, the policyholders are responsible, not the managing entity, unless, of course, the managing entity was negligent in terms of doing the business. Any surpluses that arises of the fund can be distributed partly or wholly back to the participants. So that's also something which we tend to actually accept of Takaful. Discretionary mutuals, something again which I learned only recently, something that you have got here in the UK. Can this be a basis of a new Takaful model? A discretionary mutual pays claims at the discretion of the board. The board has discretion whether or not it pays any claim. And because of that, it is not, I underline that, not an insurance company, and therefore it is not subject to insurance supervision. Okay? Claim payments are not guaranteed. However, claimants can expect sympathetic claims handling and response, because basically the members of the board are elected by all the participants in the fund. Who manages a discretionary mutual? Well, you have independent service companies. They service discretionary mutuals. These service companies are responsible for underwriting, claims processing, policy documentation, sales and marketing, basically all the things that a company, a standalone company has to be responsible for. They can actually, these sort of services can be outsourced to the independent service company. Okay. The board of discretionary mutual will basically select the service company, and then it will execute a contract with the service company. And the beauty of this is that if the service company, because it's external to the discretionary mutual, if the board is not happy with the services of the service company, it can fire the service company. Now, if you are basically a policyholder, a participant of a Takaful company, you cannot fire the board, you cannot fire management. Only the board of directors can fire management. Okay, so basically this is something which is very good because of the fact that it means that the management will have to actually look after the policyholders. So there's alignment, if you like, between management and policyholders' interests. What are the advantages and disadvantages of a discretionary mutual of a hybrid proprietary Takaful setup? I described the current Takaful setup as proprietary, but it's also hybrid because you've got shareholders fund and you've got policyholders or participants fund. So if you go through it, the first part of it is that claim payments, well, first I'm going to go through the events if you like and describe what happens in discretionary mutual and what happens in Takaful operation. Claim payments are guaranteed, not in discretionary mutual. Okay? However, you can have a wrapper of Re-Takaful to provide some form of certainty that the benefits will actually be payable. As far as Takaful operator is concerned, it is guaranteed by shareholders' capital through the payment of card. And regulators will try to ensure there's enough capital in the Takaful operator to actually provide the card to the policyholder or to the participants fund. The next one is exposed to expense overruns at setup. Now, this is up to the board of directors. You can negotiate the fees, as it were, and you can negotiate the fees based on perhaps a percentage of the premium income or the contribution rate. Therefore, on that basis, the service company takes on the risks of fees being less than expenses incurred because you actually contract the service out. Now, normally the service company will not have only one mutual, they have several mutuals, and therefore they will have some form of a scale, if you like, in terms of business. You don't have, if you've got 5 Takaful companies, you have the 5 different systems. But if you've got one service company with 5 discretionary mutuals, for example, you need to only buy one system. And of course, it means that the service can be provided at more optimal costs. There's no need to duplicate functions. It's so good for the industry at Takaful because we do not really have that many in terms of trained human capital. What happened in Malaysia, for example, the first 9 years, you got one Takaful company, And the stalwarts, if you like, in terms of Takaful industry these days, at this current point of time, basically were formerly employees of Takaful Malaysia, the first Takaful company. But as you got more and more Takaful operators in the market, what happened, of course, only salaries goes up because there's a big demand for this kind of skill sets. But not necessarily you've got sufficient people with the expertise to actually do Takaful. For Takaful operator, the Takaful operator would actually incur expense overruns because you have to actually come to size, the critical size, and that can take 10 years and upwards, for a new Takaful company. Expensive compliance costs. Discretionary mutual, no, because it's not subject to insurance regulation. And also Sharia compliance, that could be outsourced to the service company. But for Takaful operator, regardless of whether your premium is $1 million or $100 million, your compliance cost is not much different. You need to have the compliance, all the things, the risk management, the CRO, the actuaries, everything in place, as it were, which will add up, if you like, in terms of costs. Where at the point of time when you start up, but you don't have the income yet to service this kind of costs. So this compliance cost is independent of the volume of the business. Sharia compliance business model. Now, this discretionary mutual concept is very much within what was described by the FIC Economy ruling of 2013. The hybrid proprietary Takaful model has been in existence for over 30 years, but it's not yet universally accepted by Sharia. It's very funny, but that's the case. I'll give an example here. Tabarruk. Some Sharia scholars question the use of tabarruk as a means of actually doing the risk pool, being built up by tabarruk. This tabarruk loosely means donation, basically. I mean, here you have a situation where you need to actually pay this premium every year, if you like. Can we say that this contribution that you have to pay every year is actually tabarruk when you have to pay it? Then there's the issue of surplus distribution. What's the basis of surplus distribution? Hibah. Hibah means a gift. Does it mean that the operator has got absolute, power to determine how much is it that you give away in terms of surplus distribution, or who is actually entitled to it? So hibah is a gift. Because it's a gift, you can do that. It's not very satisfactory from the perspective of managing a business. Business. The next one is in terms of product range. For a discretionary mutual, it's only limited by demand. As long as you've got demand for a particular service, you can actually create a discretionary mutual. You can even combine family and non-family products in one pool. Now, for a Takaful operator, you need to have a separate pool. You need to have one for life or family, if you like, and one for P&C. So if you were to do that, you have additional cost. The good thing of having life in general in one pool is that of the fact that you have some kind of a balance. You have the word for it, I suppose, is diversification, which is good in terms of making sure that or not making sure, but being relatively sure that your results year to year is not very different, volatile. So what is the business structure? You have this Sharia compliance. Okay. Yep. One company, many discretionary mutuals. Yeah. The Sharia service company, compliance service company, can also be a Takaful operator. They can provide the service because they've got the systems. They can actually provide this kind of outsource give the services, if you like, to discretionary mutuals. In terms of managing risk, you have got this kind of structure, whereby going up, you've got individual losses. So some of the risks are retained in discretionary mutual. The excess is Re-Takaful, where you have accumulation of losses. You have arrangement whereby where the losses accumulate to much more than what you can retain. Then you got Re-Takaful. This is an example of discretionary mutual in the UK, the military mutual. It's managed by a company called Regis Mutual Management Limited. It provides home, contents, motor for individuals who are part of the military family. The military is quite big in the UK, we take into account as well the veterans. So it also covers the veterans, servicemen and servicewomen, and their families. Currently, it's a new one, so it basically just provides, the basic home content and motto, but it intends to roll out like 16 other classes of cover, which includes life as well, not yet pension, but life. And also other services, which is something interesting. It also provide banking services. It also provide legal services, conveyance sort of services, even matrimonial services. I'm not sure what that means, but something that also they provide. They also are able to sell some insurance products on a white labeling basis. So they have a provider somewhere and they white label it and then they sell it to their members. The mutual is owned by the members themselves and is controlled by a board of directors which are elected by the membership. So what's the conclusion? The first one is this. This is very important. If the regulators in the country were to conclude that Takaful and insurance are basically the same from a risk-carrying perspective, you might call it whatever you want, but from the regulator's perspective, it's not what you call it, it's what actually is implied by what you're doing and what you're selling. Then the solvency requirement for both insurance and Takaful will have to be the same or very similar. Otherwise, you have arbitrage, which a regulator would not want. Now, as Takaful is very recent, very new, and we have Solvency II coming through, and that Solvency II will be the gold standard globally. What's likely to happen is that it will squeeze the current Takaful operating model out of business because it's capital based, if you like. Second point I'm going to make is that from the other perspective, if the Takaful products are indistinguishable from products of conventional insurance, from a consumer's experience perspective, the key word here is consumer's experience. What is it that the consumer experience? Okay? Then Takaful operators are at a competitive disadvantage because they're small. Most of them are small to the bigger, more established conventional insurance companies because the older companies are more established, they've got lower cost, you can't compete. It's David against Goliath here. But in this sense, the Goliath probably will win. Third point here, after 30 years, there's still no universal consensus among all Sharia scholars that the current hybrid proprietary Takaful model is Sharia, fully Sharia compliant. That means there's something not quite right in terms of the current Takaful model from the Sharia perspective. And as Muslims, we have to you must take cognizance of that. Something's not quite right yet as far as the model is concerned. Last point, Takaful needs the version 2.0 now. The regulator in Malaysia basically, in one of the conferences recently, did actually allude to the fact that there could be a rethink in terms of the Takaful model. Of course, he's not referring to discretionary mutual model, but what it would sort of imply is that even the regulator in Malaysia feels that there's a need to actually relook at the model. The last couple of years, the growth of family Takaful in Malaysia on an annualized premium equivalent basis has been slowing down. 2012 to 2013, the growth was about 6%. 2013 to 2014, the growth was 3.5%. Thank you very much.
Thank you, Brother Zainal, for that revolutionary introduction to a new model. Discretionary mutual, you call it, as an alternative to the proprietary hybrid Takaful model. Okay, ladies and gentlemen, the next speaker is Azman Ismail, and he'll be talking on the topic potential role of mutuals in providing Takaful services. Brother.
Okay, bismillahirrahmanirrahim. Alhamdulillah rabbil alamin hamdan syakirin. Asyhadu an la ilaha illallah wahdahu la syarika lah ilahu awwalin wal akhirin. Wa asyhadu anna Muhammadan abduhu wa rasuluh khatamul anbiya wa mursalin wa nusalli wa nusallimu ala Muhammadin nabiyil karim wa ala alihi wa ashabihi ajmain, amma ba'd. Cik Tarmizi and ladies and gentlemen, assalamualaikum warahmatullahi wabarakatuh. When this just now, Shabir, he's dozing off now. But he was asking me before I came up here, and yesterday some friends also asked me what jokes I'm going to crack this time. So I told them I'm here to speak and to share and not to make jokes, because this is a serious matter. Takaful is a serious matter. So today I promise you I won't be making jokes. having said that, when we talk about the rethinking the Takaful model, what we mean by a model, we do not mean by Kate Moss or those kinds of models. What we mean by models, is it? Okay. What we mean by models is the concept that will bring the actual thing. That's what we call a model. So, okay. Before we talk about a model, we must understand the Sharia first, because I've been sitting on the Sharia committee of many companies, and we talk about Sharia. What happens is that we must understand that the Sharia is very, very flexible, but there is also some inflexibility. So the Sharia is dynamic, at the same time it is also fixed. In certain areas it is fixed. So we have many rules. For example, on the right hand side, which is I would estimate at 2 sigma, above 2 sigma, the rules cannot be changed, whatever happens. So under the circumstances, when you have a Takaful ruling, certain rules cannot change. But fortunately for us, the rules that cannot change are mostly related to worship to God. For example, now fasting month this year, and as it was 30 years ago when I was in London, it's in summer. The fasting month for Muslims is summer, and you have exams in June, and the fasting month in summer would be 20 hours per day. So can we say like this, why don't we change the fasting month from June to December so that we have a shorter time? No, this is not allowed. The rules cannot change. Or, Azman, I built a big mosque in London, but nobody comes for Friday prayers, because it's not like in Malaysia, you have 2 hours break, but here there's only 1 hour break. So how do we ask people to come for Friday prayers? So why don't we do the Friday prayers on Sunday so that more people can come? So these are the things that cannot be changed. But there are also rules that can be changed only if it is indispensable, only if you're going to die. If you're not going to die, you cannot change the rule. For example, you are on an island, and you feel that there's only pigs and monkeys, and you have to eat pigs and monkeys to keep yourself alive. Otherwise, you will die. Okay? But once you find fruits and so on, you can no longer eat the monkeys and the pigs, although you like them very much. So this is the second one. So in Takaful also, there are certain rules that you cannot, and only under, for example, Re-Takaful, you have to take with Re-Takaful. But under certain circumstances, you are allowed to take out with conventional reinsurers under this principle. And the next one will be, can only be changed if there is hardship. That means you feel that, for example, we had, I experienced with Zainal with MEA Takaful. We had one case on the asset share method when we, want to determine the surplus. So they asked me, I said, okay, in this case, we can change, and we may not be so accurate because we will be unfair. But for example, A is supposed to get $3, £3, and B is supposed to get £5, but instead of A getting £3, we are giving A £5 and B £3. So this is not Sharia compliant. But because the amount is so small, it is allowed, because it is difficult to come up with a system or to change the system and so on. An example is like this. For example, you have money here. I have £5 here. This £5 is soil, Soil is what we call impure in Islam. So if it is impure, or like my shirt, if it is impure, if I want to pray, I cannot use the shirt or jacket. I have to take out the jacket and pray. So similarly, I cannot put my money in the wallet. If I want to pray, I should put my money or my wallet outside. So if I want to pray, I will do like Allahu Akbar, and every time I have to look at the money. So I have a problem here. But it is allowed. Therefore, it is allowed to put soiled money or impure money inside the wallet. So similarly, from a Takaful viewpoint also, if the methodology is difficult, or if you need to change the system, but the system will cost another £500,000, so you don't need to change the system if the unfairness is very small. So I always tell my programmers in the Takaful, I'm a consultant to them, I tell them, yassiru wa la tu'assiru, fabashiru wa la tunafiru, and they like this very much. Make it easy, then don't make it difficult. Okay, this is the way. But for models, okay, we are talking about models now. may change according to time, place, and conditions. Because different models last time, what happened is our scholars suggested the mutual model, the cooperative model, but it did not take up because the people with the money are not the scholars. The shareholders, they have money, they don't want to follow the mutual model. So they come out with the commercial model. But the model can change, and this is in line with our principle. We say تغير الحكم بتغير الزمان والمكان والحال. It means changes in ruling follows changes in time, place, and condition. So if the condition like in UK is different, you can use a mutual. In Malaysia, maybe, I'm suggesting also a mutual. But different times, different place, different conditions, different rules and different takaful rules. We cannot have same rules for everybody. And of course, it's difficult. I always recommend you to memorize this legal maxim. Even last year in Abu Dhabi, I recommended the audience to memorize the legal maxim because it is very appropriate. Changes in time follows changes in ruling follows changes in time, place, and condition. But if you remember the Arabic one, it is better. So I'm going to quote a little bit, an easier one. It says تغير الأحكام بتغير الأزمان. That's why I like that Islamic legal maxim very much. Changes in ruling follows changes in time. So this is by ICMIF. I'm copying Sabir here. Is Sabir here? No? So I'm using your mutuals, and you see what happened is that the trend initially people going for mutual. In Malaysia, we have always been one mutual company among the rest, and mutuality seems to be the right word. But after the 1950s and 60s, the regulators tend to go for demutualization. So we can see that in Malaysia, in many other countries, in the 1990s, the regulator allowed demutualization, and in Malaysia we have the Insurance Act 1996. What happened in the Act is that we have MCIS, Malaysian Cooperative Insurance Society. They can no longer operate under a society. They have to change, and we don't have a cooperative insurance anymore in 1996 onwards because the regulators change in line with the times. And in the States and Canada, in the States, we have 1992 started with various insurance commissioners, and culminated in the Graham-Leach-Bliley Act. I don't know how to pronounce it. I only know how to pronounce the second one, which is Leach, similar to Leech. Okay, and then why they have this demutualization? Because it is felt at the time that it is a better way to expand the business by raising equity capital and so on, and it's supposed to benefit existing policy holders at that time who receive immediate tangible benefits, either in the form of cash, policy, credits, or common stock, and they can subscribe to purchase a portion of the company. But what happened is that we have a dark side to demutualization, and we have this allied group, allied mutual. They set up allied group, the people inside there, so they can control the allied group instead of the allied mutual, which they cannot control. So we had a problem here. If you see that the surplus of the mutual initially was higher, but at the end of 12 years, the surplus is double. The surplus of the group is double the mutual. And similarly, the percentage of the pool has quadrupled over the years. So that means you are killing the mutual with the group. So this is a problem with the demutualization. And the allied group, as you can see, in 1996, 10 years after, it is double in terms of premium value. So we have the palm of power, we call it, the allied companies, then and now. So after about 15 years or 13 years, it has changed dramatically. So we have a problem with demutualization also. So why don't we go back to mutualization? So this is where ICMIF, I'm borrowing their videos. Just 1 minute, don't worry. This is Kitaro. If you don't know who he is, a Japanese guy. there. It has been there for over 100 years. Sorry for the commercial break, but ICMIF did not pay me anything actually, or neither did Kitaro. But I just want to show you the mutual market share by ICMIF. You see that it is still quite substantial, and maybe we should, go back to the drawing board and look at this mutual again. Now back to the Sharia. The Sharia, as I said, is very, very flexible. But which one to decide? Whether mutual, it depends on the country. It depends. The regulator has got to, look at the situation, different countries, different situation. So what is important is that you have to go for the lesser harm. This is a concept of a lesser harm or lesser evil. Which is more harmful, you don't do. Which is less harmful, which is more beneficial, this is where you go for. This is where everybody needs to think out and so on. So in this case, we have a monkey here. This is a special type of monkey. It is the only monkey, it's the only animal in the African sub-Sahara that knows where the water is. And the Africans, it's difficult to get water, so they have to take out the root and wash they don't have water to wash, they have to wipe, and they have to cut small pieces and press the root to get water. But this monkey knows where the water is, and he won't tell you where how can you ask a monkey where the water is? So what you do is you have to torture the monkey. So but torture is not allowed in Islam. But as I said, you can do a little bit of harm, like in the case of the surplus just now. You are harming one person. Instead of 5 pounds, you are giving him 3 pounds. That means you are harming him by 2 pounds. But because of the benefits for overall, so it is allowed. So in this case also, I don't know whether it works. Yeah, it works. You can see that the monkey, what happens is that this guy, he catches the monkey and he tortured the monkey. But as I said, torture is not allowed in any regime. Even in Africa, it's not supposed to be allowed actually. So what happens here is that the guy feeds the monkey with salt, rock salt. And by feeding the monkey with rock salt, the monkey will be very thirsty. And when the monkey is thirsty, what happens? He will have to find the water. And he runs for the water, and this is where when the African guy chases after him, okay, to get the water. So this is how you are allowed to do something that is a bit harmful, but if it brings benefit, it is allowed. So in the context of takaful, okay, so that's how we can find the water. So in the context of mutual or takaful, for example, you don't have laws in Europe or in England, you are allowed to, for example, to put money in interest banks if there's no interest-free banks, for example. So what happens also, we talk about mutual, as Zainal said, how do you treat a mutual? Is it like an insurance company? So if it is like an insurance company, you have a problem, because then it will be disadvantaged. So here, fortunately for us, about 5 years ago, the IAIS is International Association of Insurance Supervisors. Okay, so they have an issues paper on the regulation and supervisions of what they call MCCOs. MCCOs are mutuals, cooperatives, and other community-based organizations. And I think the supervisory authorities in every country, including the FCA here, can have a look at this, and they define and what are the roles and the review. And in many countries they have the ICP, the Insurance Core Principles. So here the regulators, okay, give me 1 more minute, sorry, I didn't see your 2 minutes. Okay, the word takaful is kafala. Takaful from the word kafala in Arabic, or takafala. When you have the word ta in front and a at the back, it means mutual. For example, in Arabic they say daraba, you hit him. That means if you say tadaraba, they hit each other. So takaful means mutual. Okay, so one is guarantee, is mutual guarantee. So it is very much like the mutual. So it is how we have the maqasid, the objective, which is the higher objective we want to achieve. And what I have done, give me this one, the last slide. Okay, me quickly. What I've suggested to the regulators, what we can do is the capital requirements, as Zainal said, if it is the same, it is a disadvantage. So we have suggested that you reduce the capital requirements. In terms of licensing, Zainal also mentioned that you have the family and general cross-subsidy and so on. So we have recommended that the licensing be, the license be given to both life and general rather than only one. This is the trend nowadays. And also we have recommended to Zainal's disadvantage that the actuary need not, now he's looking at it, need not be by Zainal, but it can be by the regulator. You know, they have their own actuary. And the treatment of surplus, I also recommend that because the surplus is so small for micro takaful and so on, then we need not give back under the Sharia, but we pull it back. That means you purchase maybe another small portion of term so that it will run off. And then the Sharia governance also will not be so strict. Otherwise, it's difficult. In Malaysia now, you need to have 5 Sharia scholars in one company, which is very, very difficult, and the cost is very high. And also, some of the coverages we can extend. And with that, wabillahi taufiq. Wassalamualaikum warahmatullahi wabarakatuh.
He promised no joke, so when you laughed, that was not a joke. It just happened to be funny. And no animals were hurt during the video, right? Okay, I'm glad to hear that. Ladies and gentlemen, the next speaker is Brother Ajmal Bati. He'll be speaking on the topic, the ethics of friendly takaful societies.
Bismillah ar-Rahman ar-Rahim. Actually, the last two speakers covered everything that I wanted to say. That's the disadvantage of being a third speaker. One thing I wanted to correct is that I was introduced as CEO of Alinma Takaful, Alinma Tokyo Marine, which is something that I was part of about a month ago. So I have actually changed. I'm now a CEO of Tokyo Marine Middle East, based in Dubai. Coming back to the theme of taking a fresh look at mutuals and their potential role in takaful provision, the thought that immediately came to my mind was how would or how should takaful companies operate in markets where for friendly societies and mutuals, their concepts, their operational structures and regulatory environment are very well known, and they are very well accepted and conducive. And yet thus far, takaful doesn't seem to have the same facilitation of acceptance in such jurisdictions. And you know, when we actually say ethical, takaful is ethical, mutual ethical, it doesn't really mean that conventional proprietary insurance is not ethical. Far from it, really. But it is about that dimension of the social impact that is much more focused and is the driving force of the mutuals and takaful than the overriding driving force of shareholder profits and returns in the proprietary conventional companies. Ever since I actively started the journey in takaful some 30 years ago, I regularly came across the notion that takaful is the same as or similar to mutuals, cooperatives, friend societies. This notion actually helps us to quickly understand at least the risk sharing part of the takaful. But in reality, I think takaful is not quite the same as mutuals, as we have heard other speakers saying. The ethical part of the two in many ways is the same, but there are still some differences. just to sort of refresh and put things in the perspective, I just always try to, look up the internet to see what everyone can see as definitions of various things that we are involved in. So the mutual insurance company is an insurance company owned entirely by the policyholders. Any profits earned by the mutual company are rebated to the policyholders in the form of dividend distributions and reduced future premiums. Friendly society, mutual association, composed of a body of people who join together for a common financial or social purpose. And Takaful is a cooperative system. That's the main thing, a cooperative system of reimbursement or payment in case of loss and so on. So what are the ethics, the ethical part of the mutuals and the friendly societies? I looked up ICMIF website, and it says self-help, equality, solidarity, openness, social responsibility. And these principles are no different really from what Takaful is all about, what the cooperative principles of Takaful are all about. The Takaful principles, based on the commercial laws of the Sharia, which is the muamalat part, not the religious aspects, but the commercial, the Sharia aspects, muamalat aspects, are designed to provide just reward, encouraging the distribution of wealth through savings and insurance protection based on equity, justice, and fair play. The cooperative principles are part of a caring and transparent system for the welfare of society, encouraging economic activity in businesses that are both socially responsible and eco-friendly, avoiding social ills that can otherwise arise from the creation of money from money, and linking deposits and investments to real underlying assets for a sustainable economic proposition. Now this begs the question, if the Takaful system is so supportive of the social goodness, then why is the Takaful still a small subset of the insurance industry? If the ethical aspects of mutuals have worked well for them, then why is it that even stronger socially, environmentally, economically driven ethics of Takaful are not doing the same for Takaful? What is evidence over the last 30 years is the genuine pursuit by the Takaful industry to embed these ethical principles in a financial system or a market, is that it did not really fully succeed in what it had set out to achieve in the first place. There are certain critical issues that are actually pulling it back. It's impeding its penetration into the insurance industry. And this has been the theme, I think, of this conference. Have a relook at, what are these issues. Takaful, as we know, is very much an integral part of the Islamic financial system. And yet, Takaful's growth has been far from being commensurate with how the Islamic finance has grown. The economic losses in the general Takaful side especially, resulting from insured events, have continued to be financed by monies from conventional insurance, and more so by conventional reinsurance. So there are gaps in attaining the ultimate ethical goals of Takaful. Take the dispensation, for example, on the Re-Takaful side that exists for reinsuring the Re-Takaful on Re-Takaful basis until the system has credible Takaful-driven reinsurance solutions. The dispensation was intended for a period when Takaful and Re-Takaful companies were few in number and limited in the capital that they could actually provide. This means that the industry has still not reached that critical mass where it can command self-sufficiency in its own reinsurance capacity. So this begs the question, will it be another 30 years? or perhaps more, or never, before the industry can do away with this kind of dispensation? Or can the industry find ways much faster and earlier to overcome the issues impeding its growth in attaining the self-sufficiency that it needs? It needs to move away from certain dispensations and allow others without compromising on the overall goals of enlarging the ethically based financial services system. So I would think that, as other speakers have said, that the Takaful proponents need to really recognize and accept that there are issues that we need to deal with. We need to critically examine these issues and find solutions in fixing them. And the critical issues confronting Takaful practitioners largely relate to the processes that have proven to be difficult to be put into practice. So these are the roadblocks. Sorry. So these are actually roadblocks. Confusing or misleading terms, definitions, processes. We have tabarru, donations, surplus distribution, benevolent loan curve. We have misalignment of the expectations and the substance of the underlying concepts, such as basically really giving lip service to the ethical dimension and not being able to handle the commercial or the tijari nature of the Takaful itself. We have complacency to adhere to form more than to the substance, and that creates serious gaps between the theory on the one hand and the practice on the other, which is, the practice itself is driven by the logical mathematical realities of the business of risk that we are in. I mean, why should an investor invest in Takaful and get poor returns? Why? And this is a dilemma. How can Takaful companies also compete in the big ticket business in terms of the general insurance I'm talking about? Zainal has really come up with a very good solution on the discretionary mutuals, and that perhaps is a good solution for maybe the life side, the retail life business. But we actually, what do we need from Takaful industry? We actually need to insure assets and businesses into property, marine, and so on. So we also need to actually look at that aspect of the business itself. So we do need to rethink, and we need to have an approach, and we need to come from a different angle, where unlike the mutuals and cooperatives, participants and the shareholders, we need to actually recognize that they are two pieces of the same string intertwined to make Takaful work. One cannot really exist without the other. As we know, Takaful is not just proprietary, it is not just mutual, it is a bit of both. The cooperative principles embrace both the participants and shareholders as one body of cooperation to bring prosperity to society and environment through channeling wealth and capital with social conscience, responsibility and fairness, and the risks that are undertaken and shared. So there is a need to look at these roadblocks. We need to re-examine the models, yes, and the processes to bring about changes in the ways that we can break the shackles that are impeding the growth of Takaful. It is these mathematical solutions that are actually needed. And these are the realities of doing business, insurance business, mathematical solutions that has to be brought into the juristic realms of Sharia compliance, and to re-evaluate the current approach of fixing fees and the returns, be it to the operator or how it affects the participant or the shareholder. The future growth and the success of Takaful is very much dependent on this mathematical or the mathematics of cooperation in finding durable solutions. If the level of fees and reserves is kept within the parameters of mathematics for finding the best fit, built on mutual cooperative principles, embracing not just the participants, but also the shareholders as one big, friendly, cooperating community, then many of these unwieldy issues disappear. Sorry, I think I'm... Yeah, we need to find ways where the interests of the participants and the shareholders are aligned without upsetting the core values of Takaful, which is avoiding and minimizing gharar, maisir, riba. The shareholder's role as a lender of last resort needs to be recognized as an obligation. This is about technical nature of the business within the overall juristic parameters and should fit in well with the regulatory requirements of capital backing. The wakala fees could be capped. If a wakil is running a high expense bill, then that can be due to high startup costs in a new company, or it may reflect mismanagement in a more established company. Earlier, we saw one presentation about Saudi companies, and you see a lot of red figures there. And I can say, because I've been part of that market, that a lot of companies actually ran a high expense bill because there were delays in getting the license from the regulator in the first place, and then there were delays in getting the products approved by the regulator. Now the company has got all the expense bill there, sitting there and clocking up, but there's no top line coming through because there are no products coming, and a lot of companies have actually been running into a big expense bill on that, and that has generated a lot of problems for the industry itself. So it's about the wakala fees and all that, that needs to be sort of looked at, and the returns to the shareholders, for example, are then, if we were to actually cap the fees, then the returns to the shareholders are then not entirely dependent on the wakil's management fees that come from fixed and known amounts paid by the participants or as contributions, but they are linked more to the variable sources of surplus or the deficits of the business in the spirit of the risk and reward going hand in hand. And then, of course, there are sort of things that need to be sort of looked at in relation to the wakala fees and how much extra can be added to this when we come to the Re-Takaful side. Can the Re-Takaful company actually add a little bit extra to the wakala fee in terms of looking at the irrecoverable qard aspect of the business? I'm not sure, but these are the things that one can actually look at. And then there is also this thing about the performance incentive fee for the shareholders. It should be recognized perhaps as a just reward for the risk that they take in putting their capital to that risk of the business. So, already? The ethical dimension of the Takaful system is what that matters. It cannot, however, be brought to the benefit of the participants effectively if the roadblocks remain. The industry is estimated to be 12 billion, 2013 going up to 20 billion. This number is large, but really it's not so large when compared to the rest of the insurance industry that we are working in. In countries where Takaful is needed and life insurance penetration is very low, in places where it is less than $1 per capita, but the GDP is very high, there is huge potential for Takaful. In general insurance, large risks in oil, chemicals, energy, aviation engineering, they actually don't get insured as Takaful. due to the lack of security and capacity of Takaful and Re-Takaful providers. Perhaps we actually, the practitioners, the scholars, the regulators, there's a need for us to actually have a Takaful reform group of some sorts to look at these issues confronting us as an industry. And that actually can actually do a lot to unlocking the real potential of Takaful that can actually lead to not just maybe 5% of the market share, but maybe 50% of the market share in years to come. The last slide, sorry, is it running? This slide is basically really saying that the providers of the conventional insurance have not really effectively penetrated the 1.6 billion Muslims. But perhaps the ethics of the Takaful industry, the friendly society, mutuals, with its social and environmental ethics of seeking financial protection, and the durable capacity that can be created by the financial strength of those who bring their capital into this ethical dimension, they can penetrate perhaps the 7 billion Muslims and non-Muslims. Thank you very much.
Thank you, Brother Ajmal. Thank you, all three speakers. Yes, Takaful is mutual, very close at heart. It's just the problem of we have some roadblocks, and Ajmal was talking about we also have to take care of the shareholders. Without them, they will not be Takaful either. So we'll have to end here because we're running out of time. I would like to close with saying thank you very much to all the speakers. I will give them a big hand.
This session is about the reinsurance, and as we were talking much on the about insurance industry, I think it's time for us to talk a little bit about the reinsurance. We have here three specialists. Please have a seat. The first one is Mohammed Aqoub. He is very well known to you because he was, I think he attended almost all the International Takaful Summit and almost all the Takaful conferences. He is an excellent speaker, and he is the managing director of Hanover Re-Takaful. And Hanover Re-Takaful is the most successful Re-Takaful operation until now. Next to him we have Mr. Omar Gouda, the managing director of Africa Re-Takaful. Omar Gouda was my ex-colleague within the group of a long time ago, and he has a direct experience and reinsurance experience. Next to him we have James, and James, he's an accountant, chartered accountant. I think you can see his biography on the website. And James has a very interesting experience because he is coming from the banking industry. He knows almost all the Middle East. He was traveling everywhere. And today I discovered that he was also working for Arab Bank. Now he's working for Cobalt, and this morning we had a very nice presentation about Cobalt. I will ask first Mr. Omar Gouda to come and present his paper. And just one thing, if we can go quickly, because I think I took a lot of time this morning, at least we have to give the opportunity to the audience to ask some question. If we can do it quickly, please, all of us. Thank you.
Okay. I just very quickly, because I believe that my presentation is containing general overview about the global Takaful market, features of global Takaful market growth from our point of view, Takaful growth challenges, and how Re-Takaful operators can assist Takaful growth, which actually is the main subject, and then Africa Re-Takaful as a response to market challenges, African market challenges. I believe most of the presentation talked about the global Takaful market and how the growth is 2 digits, 14% or 15% expectation, but still very high compared to the conventional, and a lot of expectation for the success of Takaful market, global Takaful market. We have some features of global Takaful market growth that it is the growth is 2 digits. The technical margin and surpluses are better than the conventional markets. However, still very wide deviation between Takaful markets across the globe, and there is intense competition between the Takaful operators themselves and between the Takaful operators and the conventional companies. We have challenges for Takaful growth: absence of appropriate legal framework in many markets, absence of clear operational framework, absence of clear regulators framework also, lack or weak customer awareness, anyway, I believe that there is something wrong, but no problem. Yeah. As reinsurance is very important for the growth and development of insurance industry, still Re-Takaful is very important for the growth and development of Takaful industry. We know the traditional role of reinsurance, which is almost the traditional role of Re-Takaful. We can add to the capacities, to the technical assistance, that it is not only a legal requirement, but also it is a Sharia compliance requirement. Having a Re-Takaful operator or placing the business to a Re-Takaful operator is a condition to be very close to Sharia principles. And if at the beginning it was out of necessity, where Takaful operators were allowed to place some of their business to conventional reinsurers, because there was no Re-Takaful operator at that time. But at the time being, we have a lot of Re-Takaful operators with huge capacity, which can meet almost all Takaful operators' need for capacity and support. But still, we believe that the Re-Takaful operator can assist the Takaful operators in many areas, not the traditional ones. We can, which especially at the time being is more required by Takaful industry. Re-Takaful operators can assist Takaful industry by enhancement of Re-Takaful and regulators or the supervisory authority and and share of responsibility. It is very important for a Re-Takaful operator to support the regulators and to assist in the development of the Takaful regulation. It is important that the Re-Takaful operator play an important role in formulating an effective channels of communications with regulators, because regulation nowadays is the main driver for the development of financial markets, and the Re-Takaful operators has to give part of their sources to support regulators and to develop the legal frameworks of Takaful industry. Of course, the distribution of surpluses can also enhance the ability of Takaful operators to compete with traditional or with conventional industry. Training and technical assistance to Takaful operators in all aspects is a vital role. It is not, there is no Takaful, I can't imagine a Takaful industry to grow without the technical assistance. We talked about, discussed this morning that most of the Takaful operators or Takaful staff are conventional mindset, where they do Takaful in the same way as conventional business is done, while we believe that this has to be a little bit changed of the normal conventional way to have a unique Takaful industry. Re-Takaful operator has to play an important role in developing and improving the level of public awareness of the Takaful and insurance industry in general. Re-Takaful operators can assist the industry by enhancing the standardization of the industry. This will reduce transaction costs, will make it very clear for the client's rights, customer rights in disputes, and also this will minimize the marketability problems across borders, because when we have standardized products and marketing approaches, this means that our customers will easily accept the products and understand it. We believe that also social responsibility is an important part in Takaful industry. Actually, this is the main fundamental concept of Takaful, which make it a little bit different from mutual or cooperative or other insurance business, that supporting each other, being in crisis time, being with each other is the main concept. And this means that social responsibility has to come on top of priorities of the industry, and we believe that Re-Takaful operators can assist in this by collecting sources and by looking for the different markets' needs and assist in this. We can talk a lot about how can Re-Takaful operator assist developing the Takaful industry, but we believe that the main and the core of this role is to be dedicated to the industry, to the customer's needs, to the client's needs, and to look forward how to develop this by giving training, by going in deep communication with regulators, with industry people, trying to train everyone to prepare them for the real concept of Takaful. We believe that achieving this, focusing on the merits or the morals of Takaful is the core for the success of this industry. We believe that, for example, in Africa, we succeeded to build a regional successful Re-Takaful operator who is at the time being behind the development and the creation of many new Takaful companies. And for example, in Africa, we almost see every month new Takaful operators. This is not a big achievement on its own, but if we compare it to the current situation where we just started from nothing, and when we find that in many countries at the time being we have Takaful operators, this with the assistance of the Re-Takaful operator, this reflects the importance of the Re-Takaful operator role. Thank you.
Omar was insisting on the Takaful or the Re-Takaful as essential to the development of the Takaful, and this is something, we keep repeating it, but this is the reality. Without Re-Takaful, definitely we will not have any Takaful. And in fact, the Re-Takaful is really newer comparatively to even Takaful. It started only in 2005. And also the Re-Takaful can assist in non-conventional lines. And also Omar insisted on the social responsibility, and we should never forget that we have also a social responsibility. Before asking Mohammed to come to the podium, I want to ask him to try to answer at least two questions. One, which is a provocative question: is there any future for the Re-Takaful operator, especially the regional Re-Takaful operator? This is one. And number two, do you think that today the existing Re-Takaful are really serving the Takaful industry, or is the Re-Takaful are still lacking experience, especially when it comes to specialty lines? For example, the PV, I do not recall seeing Re-Takaful operator working on this line of business. Thank you, Mohammed, if you can answer this.
Bismillah ar-Rahman ar-Rahim. Good afternoon, ladies and gentlemen. And Shakib, thanks for putting me in the spot. I have a problem with my shareholders because you said that you see me at all conferences everywhere in the world. I'm sure they're wondering, does he work at all? So, anyway. Okay, thank you. Yes, the subject is thoughts on Re-Takaful partner selection, and at the same time you've put two questions. I'll try to answer them in between, if that's okay. That's just my disclaimer. You could do that. And Re-Takaful and reinsurance. Are they the same? And this is one of the issues that Shakib, you probably was thinking about. In my view, they are similar but not the same. And the more we think about it, the more important it is that we accentuate on where it is not the same rather than look at similarities. On a risk management basis, they have to be similar because a risk underwritten within the Takaful or Re-Takaful space or underwritten within the reinsurance space has the same dynamics. I mean, it's the same risk. Risk has bad or adverse features. They may have it and they may not. It doesn't matter whether it's Re-Takaful or reinsurance. However, the important fundamental difference is the basic difference is that of Sharia compliance. And I think this is where the differentiator has to be looked at. There are compliance issues on Re-Takaful which are different to that of reinsurance, and we need to look at those and understand them very clearly to really find the differences between Re-Takaful and reinsurance. The contracts in particular has a lot more transparency than a conventional one would have. They would have to declare the wakala fee, they would have to declare the operations of the surplus distribution. They probably would have to also, and this is not in, to discuss how the current rasan has to be repaid. I think these are issues that come to the fore when we talk about Re-Takaful. Risk management features probably the same. And then in terms of who are the players, I think, Shakib, you've done a lot of research on this, and to date I've counted about 14 or 15 Re-Takaful companies already in operation. So the question is whether there is capacity or not. I think having gone through a very rigorous renewal process in January, I would say that there is enough Re-Takaful capacity currently. There may be certain shortages on specific niche classes. You talked about political violence and terrorism. I suggest that there is enough capacity there too. We've seen that in January. There is many Re-Takaful companies who are actually playing in that arena. So it depends on countries. Of course, if you are an astute reinsurer or Re-Takaful, then volatility has to be part of your game, and you need to understand risk and reward. Recent case was, more recently was in Egypt, where the demand was substantial, and I would suggest that my Egyptian colleagues would confirm that there was enough capacity to satisfy the decedents even during the most volatile times. In terms of who are the players, yes, there are worldwide Re-Takaful players being subsidiaries of major reinsurance companies, but there are also regional players. And my view has always been that if we really want to have a successful Re-Takaful environment, then it is absolutely essential that the regional players play their role and complement even the larger players. And I have a hobby horse on here is that I think we need the assistance of rating agencies also to try and assist us in encouraging the regional players to also have a meaningful role in the Re-Takaful space. Otherwise, you'd be left with whatever, the major players and no space for smaller players. So from my perspective, I have been a strong proponent of encouraging regional development of Re-Takaful because I think it's healthy and it also supports the industry to give more capacity, and also regional players have a dynamic role in understanding the markets. They probably even understand them better than the international players, and they are able to perhaps even react more faster and more elegantly to the demands of Takaful companies. Question of selecting the right partner. I'm sorry, this is a plug. We don't need to go further. Omar, I'm sorry about that, but couldn't resist. I think, when we talk of Re-Takaful, we also have to look at the serious issues. I've just highlighted 4 large losses that occurred during 2014, and those total approximately 960 million within the Re-Takaful arena. That equated to approximately 25% of the total contributions in the whole of the GCC. So, if we pause there and realize how dynamic the market is and how much exposure there is, you can well imagine what the current Re-Takaful companies have to put in to support that type of losses. The question is not the fact that there are losses occurring. I think it's the issue of how competitive the market is. Are we pricing our products correctly to be able to sustain losses of those nature? And that's the crux. Do we know the cost price of our product? And the answer is certainly no, we don't. Yes, we do know what competition is, but we don't know what the bottom line is. And these are the issues. We talk about Re-Takaful, and I always get calls at the year end is how much surplus distribution are we going to get as a cedent? And I always laugh and I said, that's not an entitlement. It'll come when it is. I said, ask me the question, how much Kardasan you owe me? Because that's another issue that you should also think about, because I said, come the day of Qiyamah, I'm going to come and look for you. You're not going to go away, because that's the rules. So it's said tongue-in-cheek, but I think it's important that if we are really serious about these issues, then we need to think about them as well. They're not in your financials, certainly, but what is the Sharia issue of Qard Hasan? They have to be paid back someday, and so you need to ask the question. Ask your Re-Takaful, how much Qard Hasan do you have in your pool? What do you think my share is, if at all? And I think these are the dynamics that needs to be, if you really want to be vibrant about these issues, and try and really or instrumentalize the Sharia aspects within this, and then we differentiate ourselves from the traditional, conventional ways of methodologies. Coming back to the Re-Takaful, I think these are risk management issues. Is the Re-Takaful willing or has the ability to pay? And with large losses such as this, it's obviously an important aspect to understand who your Re-Takaful player is, to what extent they are able to pay these. And at the end of the day, this is where regulators come in and rating agencies come in and want to look at the capital provided by the operator, Takaful operator. I'm suggesting that you also need to look at in what way is the cedents looking at that as well? Because technically the rating agency should be looking at the cedents and saying, will they be able to pay the Re-Takaful on the current? Converse. I mean, that's not looked at because obviously the regulator has a different view on it. But my point here is that what are we trying to do? We're trying to create an industry which is robust and vibrant. And if we have to do that, then we need to do things in a correct manner. I cannot quote the Quranic ayah which you did, but it embodies all what you have said. And these are things that we need to look at. And hence, the type of Re-Takaful partner you need to look at is you need to ask more questions about them. You need to ask what type of expertise is there, how do they manage their risk portfolios, have they got actuarial valuations about the pricing, a lot more questions because you have skin in the game as cedents. You have definite skin in the game, because outside of the operator, everything else belongs to the cedents, not to us. I'm not going to go through this slide because I think it's self-explanatory, and over the day we've heard about most of these issues. They are really capital management and balance sheet management, solid financial rating, healthy, steady top-line growth, strong retentions, more underwriting income than investment, sufficient capital and technical reserves, liquidity. These are all the aspects that a cedent has to look at in considering the counterparty risk of a reinsurer. These are the more important questions that I feel, in my view, that needs to be looked at in selecting a partner. The Sharia compliance. Are we giving priority to Re-Takaful? We all heard about the issues for Durura and the need, but the question is, do we seriously take this into consideration when selecting a reinsurance partner or a Re-Takaful partner, or do we say, oh well, we have a reinsurance partner who's been with us for 30 years, so we have to continue? You may well be right, and I have always answered that question by saying is that I would not want to have a cedent who deals with us as an organization because we are Re-Takaful. I think the Re-Takaful conversely has to prove that they have the ability to compete equally with reinsurances. So there has to be a symbiotic relationship, but at the same time I think the reinsurance buyer also needs to look at that, and applying just the Durura, I think perhaps is not going the extra mile in trying to find Re-Takaful. A second point that is not happening and should probably happen is Sharia board dialogues across the markets. In other words, the Sharia boards of cedents talking to the Sharia boards of Re-Takaful. I don't see that happening. And why not? Since there are differences of opinion, why can't we put them together? We have allowed our Sharia boards direct access to the ceding companies, and we've given the numbers to our companies to say, please call our Sharia board on any question you may have, because this will deepen the understanding of the business and also understanding why a Sharia scholar is saying something which is acceptable to another. I think we need to encourage this cross-fertilization across regions as well, so that there's a better understanding of what are the interpretations, because we get the final analysis, but not the depth of the understanding and the interpretation of why a decision has been taken. The expertise and experience of the Re-Takaful is an important issue. And the fourth bullet point, IOFI standards. I have honestly not seen any, with the exception of my own company, Re-Takaful operators publishing financials on an IOFI basis. So there is no comparison. You cannot. There isn't. I have one in Malaysia, which follows the Malaysian model. That's the only two. There are no other Re-Takaful operators who have that IOFI standards where you could actually see how the policyholder fund is operating, how is the shareholder fund operating. And these are important issues as well if we really want to attack the dynamism of Re-Takaful. Whether we agree with all the IOFI standards or not is a moot point. The point is that we don't have that. So if I want to do a comparison with my peers or competitors, there is no. And I'm not sure whether that is how we should do, how we should act in the industry. The pool structures, is one-on-one pool still acceptable? Should it be acceptable? Why is it acceptable? We have many instances where people have said they've got Sharia approval for that. The question is, on what basis? I don't know. And I think we need to understand these issues. Is that akin to a conventional policy, or conventional reinsurance rather? Surplus distributions and profit commissions, how is it done? We see profit commissions across and sometimes turned incentive for color. But these are questions that need to be asked. We need to attack these issues so that there is no arbitrage on issues of no clarity. The brokers, are they Sharia compliant? I'm not sure. We haven't asked reinsurance brokers. Are they compliant? They are in the market, and maybe we should ask, are they Sharia compliant? To what extent do they add their Sharia compliance in the value chain? Regulation, this is an issue of convergence and harmonization. I'm not sure, but the fact of the matter is they are different. They are different in the GCC, they are different in Malaysia, they are different in Saudi Arabia. It makes it difficult for an international Re-Takaful to operate in all these markets and have a Sharia board which has a certain line of thought processing. And therefore, our view there again is that we will not have convergence or harmonization, but at least we should have understandings and where the differences are and why and how you can work on them. Final words. As the markets and business develops, we need to pay close attention to our partners' ability and willingness to honor their obligations. The assessment does not end with financial aspects, and Sharia compliance and commitment to the industry is as important. Thank you.
Thank you, Mohammed. Concerning, the brokers, do we have a Sharia compliant broker? I remember, 6-7 years ago, I think Aon and some other brokers, they were establishing a kind of Re-Takaful broker. But honestly, and today I'm working as a broker, I do not see why a broker should be Takaful or Re-Takaful. Especially, I think what we are doing, what the brokers are doing is only they are acting as intermediary. I think it needs some elaboration. Mohammed was talking, he started by comparing, the reinsurance versus the conventional, and I like he say similar but not the same, and this is something, which we should remember. Definitely the Re-Takaful needs to have more transparency, especially because we are managing the pool, and the Re-Takaful must be accountable, especially when it comes to things like the surplus distribution and the wakala, which is, I think, the key. Mohammed answered, the question about the capacity, and I fully agree with him that we do have today enough capacity, at least on the treaty side. We don't need any, on the Takaful, we don't need any additional capacity. And regional reinsurers are complementing the international rate. This is true. Mohammed spoke about major claims. I think he was talking about Saudi Arabia. My question today, who are the final payers on the claims? Are they really the Re-Takaful or the international market? i.e. today in the chain, in the reinsurance chain, we have Takaful companies, we have reinsurers, but we don't have retrocession. For example, if I take Sugar United claim, or if I take, this Al-Mara'i claim, we have a company like Swiss Re. I don't think that this is the, which is leading, one of this account, and it is not even, their Sharia division, it's the Sharia company, it's Swiss Re conventional. Today, I don't think that we can sustain $300 or $400, million claim net retention for the Re-Takaful operator, i.e. we are still using the retrocession market, we are still using, the London market. I will not elaborate much on that. I will ask James, to come to give us his London perspective. Thank you.
Ladies and gentlemen, thank you very much for inviting me here. I feel very much like the new kid on the block, so if you'll just bear with me. Now eventually my slide coincides with the speaker, so that's great. What I'm going to talk about is bringing simplicity and transparency to the insurance process. This is directed mainly at the London market, and it's critical that any process is as efficient and as effective as possible. So I'll just take you through the various elements. So the first element is bringing Re-Takaful up to speed to meet emerging challenges through simplicity and transparency. We've talked a lot about transparency. The regulators in this part of the world are highly keen on it. It ensures that all parties are fully aware of what the contracts are saying. Simplicity as it relates to the process, and transparency relates to regulation, compliance and fairness. The critical importance of clearly defined, joined up processes that can be audited at all stages, and that's not just from a regulatory and financial point of view, but also a Sharia. We have to make sure that the processes are easy to check from all points of view. There's a lot of overlap, obviously, and it's something that a lot of parties will be looking at. There are related incentives and investment opportunities for a number of parties. And my final point is we're going to focus on a large commercial segment. This is what London is all about. The London market is a specialist or a syndicated market for large risks. To give you a bit of background, these processes that Cobalt have developed with the London market cover both the company side, and specifically AIG, QBE and XL, and indeed Lloyd's. The position Cobalt has with Lloyd's at the moment is that we're in the final throes of cover holder status. To get there, we've had to ensure that the processes are Sharia compliant. And the support for the capacity within Lloyd's comes from XL Group. So we're very close to ensuring or taking our first risk through that process. Now, the operating model we're going to use, the trick here is to ensure that there are no frictional elements to the process. So transacting business in the London market in a Sharia compliant way is not difficult. Essentially, the London market, as we've all heard, has grown up over a number of centuries. There's an awful lot of overlap with the principles of Sharia, and so we just build on that. From a practical point of view, we've had to build a process that is capable of dealing with very large volumes, both in terms of monetary size and amounts. And we've engaged a couple of partners. One is Capita. Capita provides all our back office. It's a massive multinational back office provider. It provides a lot of support to the insurance industry banking industry and others. So we've had to develop a model that is easily transportable into the capita process. The other is our front-end system, the end-to-end risk processing system. And we used a company called Morning Data, who are a UK IT specialist specializing in the general insurance market. And again, it had no Sharia experience whatsoever, and with them we've developed a Sharia compliant model. So both Capita and Morning Data are critical to this. The roles for all the parties have been clearly defined, so you can't have any form of greyness. So we have the client, the broker, what Cobalt does and what the insurer does, and that's probably a good thing to have the discipline of who does what. So again, defining who does each activity is critical. We've mentioned that monies must be properly segregated in Sharia compliant non-interest bearing accounts. Now obviously if we're in the large corporate end, then we have to use large multinational banks. They're the only ones capable of dealing with the complexity and volume that surrounds these types of risks. So again, we heard that we can go into Lloyds Bank or Citigroup or HSBC, any of them will provide us with Sharia compliant commercial bank accounts. We have clear rules on contribution, payment and collection. The interesting thing on claims is that because brokers are generally not Sharia compliant, certainly in the London market, the way the claims process works is that the insurer will pay any claim directly to Cobalt, who operate the Sharia compliant process, and that claim is then paid directly to the client. This actually makes the process more efficient and avoids complication and delay. In my opinion, the way we've designed it is that the process, the Sharia compliant process in the London market is more efficient and cost effective than the way the market currently operates. It's been a very valuable exercise to be able to take things from the basis and go back, but actually Sharia provides an opportunity to actually make a more efficient model than the conventional one. So that's been a benefit to all. I'm not going to go deep into regulatory and compliance. Susan Dingwall gave us a good briefing, but obviously in the London market we operate under the regulatory regime of the UK and the European Union. But under Sharia, treating the interests of the customers first is something that the regulators here talk about a lot, treating customers fairly, and it's therefore inherent in all our processes. I won't tell you or dwell on the various guidance, but just suffice to say that we have taken on board the International Islamic Fiqh Academy's rulings of November 2013, the IOFI standards and the IFSB. In terms of how we deal with risk, and the critical thing is the risk itself has to be Sharia compliant, we make sure that all risks are approved by a Sharia scholar who has to be in-house. There are regular audits throughout the whole process. I mentioned the process has to be auditable in a cost-effective way, both within the insurance company, Cobalt, and the money flows from the underlying client. There's clear reporting and monitoring of the participant risk fund. That has to be critical for transparency to the policyholders. And there's full disclosure and all deductions and allocations prior to the risk being taken. So we talk about the investments, and this is where the insurance industry and the banking industry join. At the moment, there's very limited Sharia compliant liquid products which exist to support the investment of the Premier. It's fortunate in some respects that interest rate cycle is very low and therefore is in our favour. where the differences between the conventional products and Sharia compliant are minimal. But the Islamic finance industry is going to have to start thinking about producing product that is suitable for the insurers to invest the premium in. As we said, that funds can only be invested in Sharia compliant products. They must comply with international regulations. So Solvency II, which has come up a couple of times, can't be ignored. The Islamic finance industry is going to have to be engaged for its benefit. Profits resulting from such investments must be shared according to the contracts. And I talk about the Sukuk market. Obviously, the Sukuk market is a large and growing market and involves an asset which should be insured in a Sharia-compliant way. But it is an illiquid market. The UK government Sukuk, the 200 million, is effectively highly illiquid. It's a take and hold for a lot of banks. There's a lot of pressure, therefore, to encourage government AAA countries like the UK to issue more Sukuk and to actually start having a flow and a liquid market that the insurance industry can rely on. It's a challenge, but one that will at least kick-start the Islamic finance world. Incentivization. So this is something actually that the conventional market would do well to take notice of. Participants and policyholders certainly have a vested interest in the outcome of the insurance program. That goes back centuries when Lloyd's first started, so it's not a new concept, and it's a concept I believe the conventional market would do well to take note of. The underwriting surpluses, where contributions exceed claims after expenses, are distributed to the participants, and we heard from Cameron Murray how the Lloyd's system works with the 3-year accounting periods. That can be audited. Obviously, the participants will have an interest in the profits from the participant risk fund, particularly on the returns from the Sharia-compliant investments. And in our model, or the London model, the Wakala fee is deliberately kept at a low rate to ensure the participant risk fund is strong enough to meet the interests of our participants. It's in all our interest to make this as an attractive as possible product, and something that we wish to encourage as many people to participate in.
Just to summarize what James was talking about, today's discussion is on the large commercial segment, especially for Cobalt from London, and the Cobalt transaction or the London transaction are easier for the Sharia business comparatively to the conventional, as per James' presentation. And the way of transatlantic business is more efficient. But I think there was something which is, I think, at the end very interesting, is the fact that the Wakala fee is capped, and this is something important. I think all the regulator must cap the Wakala fee, otherwise, you will see a lot of deficit accumulating. Now, if Iqbal can allow me, I would like, to just, to ask the audience, at least to give, the audience the opportunity, to ask few questions, if we can take 2 or 3 questions. Please, if you have any question. The gentleman on the right, please. If we can have a mic for the gentleman, please. If you can present yourself, and the mic is coming, don't worry.
Yes, a very good session and a lot of good information. This question is for Mohammed at Hanover Re. Could you just elaborate a little bit more on you use the term Sharia compliant broker, and this is new terminology, I think, for a lot of us in the room, and so if you could just say a little bit about that. Thank you.
Yes, you can.
Thank you. I think the point I was trying to make is that at the practical level, neither does the Re-Takaful operator nor does the seeding company actually ask the broker, are they Sharia compliant? And it may be a small issue, but
in terms of the process of transparency, we need to understand the flows of funds, the flows of claims, and how it goes via the reinsurance broker in this case, and whether they actually have a separation of these funds, if they are a collective broker where they are conventional and Sharia compliant, what are the aspects that they utilize to ensure that the business that flows from a Takaful company to a Re-Takaful company is absolutely shrink-wrapped within the Sharia compliance, whatever that means.
Are there any guidelines that you know for a broker, guidelines that a broker could look at to see in terms of are they complying? For the Takaful operator, there are clear guidelines. For the Re-Takaful operator, but for the broker, are there guidelines that they could look at to see that they are complying?
To be honest, I'm not aware of any compliance guidelines applicable for that sector in my practical experience.
Okay, the gentleman in the second row, please.
That's because you said some people.
It's not working.
Now tell us, the people contribute to mature country markets.
That one?
Yeah.
So it takes over from Marshall Sarur.
Yeah, just one more so that at least there is some.
No problem. Another mic is coming.
My name is Tariq Mahmood. I'm Executive Vice President at Pak Qatar Takaful Group, Pakistan. My question is to Mr. James of Cobalt Underwriting. It's regarding that you have mentioned in your presentation client broker Cobalt Insurance. Can you please explain this? And claim directly settled to clients. Suppose I'm working for an insurance company, Takaful company, and I'm placing a business to an ex-broker, and that ex-broker is coming to you, and then you going to insurer. Is that right?
Yes, sorry.
And then you're not settling the claim to that broker, but you are settling the claim directly to the client.
Yes. The way in the UK, Cobalt Underwriting was formed as an underwriting agency, so it has no broker authorization. So the business flow is that the client is serviced by a broker, and the broker, the client asks for a Sharia compliant solution to his insurance needs. The broker then will come to us for a Sharia compliant solution. Cobalt Underwriting is fully supported by one of three insurance companies, AIG, QB and XL, and this is the larger risks. So Cobalt Underwriting itself doesn't carry the risk. It offloads 100% of the risk to one of AIG or a number of AIG, QB, XL, and soon to be Lloyd's. When a claim is paid from the participant risk fund that is sitting within either AIG, QB or XL, the money flows comes out of the participant risk fund, which is Sharia compliant investments, comes into a Cobalt Sharia compliant bank account, and in order to keep the purity of the flow, the money is then paid from a claim point of view to the client in a Sharia compliant way. So we maintain the purity.
So your role is making sure the Sharia compliant.
Yes.
That's it. Okay. Thank you very much. Thank you.
There is another question there, please, gentlemen.
Mushtaq Parker. Just on the guidelines for brokers, Malaysia, the Bank Negara Malaysia has got a set of guidelines for the Takaful brokers. So if you go onto the website, you'll get some information regarding that. I think it was mentioned this morning by one of the speakers, I think it was Muhammad, about 14, 15 Re-Takaful companies. But when you research the market, there's no data for the size of the Re-Takaful market. And We've got plenty of information on the Takaful market, but there's no current or reliable information about the size of the market. Why is that? I mean,
I think, Mustaq, the issue there is that many Re-Takaful companies or operators are branches of larger groups, and therefore, unfortunately, there's no transparency in their numbers because they consolidate within the group. So there's no publicly available information on these. As I said, save with the exception of ours, one and two other companies who are sort of corporates with their own capital, we are able to look at that. All the others are consolidated within a larger group, so they get lost in the numbers. What we do, of course, measure, and that is an internal measurement, and Shakib used to do that during his days with Takaful Re, was to see whether there's enough capacity available. And that is fairly easier to work out internally, because we can then see how much business is going to non-Re-Takaful companies. So that's again, admittedly, an internal computation, not necessarily available for public consumption.
Just to add to Muhammad's comment, in fact, I was working for the past, let's say, 10 years on the Takaful statistics, the Re-Takaful statistics, and it was a very hard task, in fact, to find numbers about the Re-Takaful. For Hanover Re, it's published, you can just, on the internet you can find. Some other companies, either they are not publishing, their statistics, they find their information, their financial information, or, as mentioned by Mohammed, they are part of the large groups. One of the problems we are facing with Takaful companies is to know exactly their gross retention, the net retention, but the worst is to know how much is the wakala fee, because it shouldn't be confidential. As per Sharia law, it should be public. Normally, you should send this information to all your clients and tell them, my wakala fee will be for the group life X%, for the fire Y, etc. But unfortunately, we don't have this information. And as explained by Mohammed, transparency is critical for Takaful, for Re-Takaful company. I have to say, and I'm sorry to be critical again, but we lack transparency, especially when it comes to deficit, when it comes to wakala, when it comes to surplus distribution. I know companies for the past 20 years making profit. I keep visiting them, I did not see them making any surplus distribution. Why? And this is the question. There is one last question here, please.
Can I
yeah, sorry, Mohammed.
have a small...
Just before the question, if we can, Mohammed, if we can comment.
Yeah, just a clarification. Actually, transparency is an issue who has different aspects. Publishing the reports is not the only aspect of being transparent, because I believe any regulated company has to prepare and publish its financial statements in a way or another. That is a legal requirement, including for most of Re-Takaful operators, including Africa Re-Takaful, for example. Transparency can be also done through different issues. For example, having some of your clients on the board of Takaful operators, this is part of the transparency. Actually, some Sharia modules require the Takaful companies and the Re-Takaful companies to have some kind of participants supervision or participation in the board of directors or the general assembly as part of the transparency. And I believe that if we just go to say, okay, this is the only form of transparency, I don't know any Re-Takaful operator who has clients on board except Africa Re-Takaful, for example. And going for this issue is not actually giving a lot of benefit of the industry, because we trust that all Re-Takaful operators are facing a lot of challenges. The challenges are not to publish their reports. It is part of the challenges, but also how to really provide the required Sharia compliant kind of operator that is the clients or the cedents are looking for. having the participation of the participants is an important part. Following Sharia principles and requirements is another important part. Dedicated to Takaful portfolio is also an important part of being compliant. For example, if we have a Sharia a Takaful window within a normal insurance company, conventional insurer company, we have concerns about such type of providing Takaful. Also, if we are Takaful operator and write all types of insurance and Sharia compliant products, this is also another issue. Transparency can be achieved through everything. We are professional, we are in the profession, and all information available, I believe. And we can't say just out of the box that this the published and this is the transparent, and those the rest are not transparent. Thank you.
Gentleman there.
Sorry, Monzo. Hello. Sorry, mine's a very quick question for Mr. Bagshaw, if I can. And it picks up on the whole transparency issue, which I know he highlighted. I mean, given the fact that Cobalt has a foot in both camps in terms of being Sharia compliant and also enmeshed in the London market, do you think that London has a lead to play in driving some of the, in aiding the wider Takaful and Re-Takaful market in how it needs to sort of, deliver transparency both to its clients and obviously more importantly to the international regulators?
Yes, very quickly. The answer is a simple yes. The regulators obviously are very keen, whether it's conventional or Sharia compliant world, to be as transparent as possible. Those standards are being driven by a number of parties. We in the London market believe in transparency in its totality. Full disclosure of the wakala fees is critical along with everything else. So the model we followed is a model of full transparency, which is over and above the FCA's own rules. So we believe that that will eventually be something that the conventional market will catch up to and therefore will apply to everyone. So it goes to your point.
Thank you very much.
Thank you.
Please join me to thank the three speakers for their very valuable presentation.
My name is Dawood Taylor. I'm the moderator of this panel. I'd like just to take the opportunity, being the moderator, to just comment on just one of the points. I have so many comments I could make about today's session, but I'll just make one comment for your absorption. Modern day Takaful is not a cooperative, it is not a mutual. Modern day Takaful is a hybrid of proprietary and the participants. We have cooperative mutual principles within modern day Takaful, with the risk sharing that goes on within the participants fund. But we are not cooperative or mutual. I believe the best Takaful operation in the world would be a pure 100% mutual with Islamic rules and regulations. So I'm not against it, but until a mutual company comes along, or a philanthropic Saudi perhaps, that gives $300 million, $100 million to a group of people, or a government agency, all right? I can't see in this modern day and age how we can move away from the model we've got of the shareholders providing the capital, looking for a profit, and it's not a dirty word because it's in Islamic finance. Looking for a profit within the proprietary hybrid model as the IFSP has defined modern day Takaful in their corporate governance documents, which were released 4 or 5 years ago. So I don't want anyone to go away thinking that because we use the words cooperative, which can differ between Sudan and Saudi Arabia, or we use the words mutual for modern day Takaful, that we are cooperative or mutual. We're not. To repeat myself, we have the principles of cooperation and mutual within the modern day Takaful, which is encompassed by the risk sharing that goes on between the participants in the participants' risk fund, which is managed by the Takaful operator. With that, that's the opportunity I've given myself. I will now get into the session. All right. Could I just point out that Salah Eldin could not make it from Sudan, and Majid could not make it from Saudi, and we have replacing them Omar, who was on the last session, I believe, or last but one session, who will speak on Sudan, and Ajmal Bhatti, who is very close to Saudi Arabia, as I am, will speak on Saudi Arabia. The title of this is Mature Takaful Markets. As I mentioned, we will not have any presentations. We'll have interaction with the audience and interaction within the panelists. And we have Tamizi from Malaysia, who along with Omar, one could say Sudan and Malaysia are at the forefront of mature Takaful markets. And we have Ajmal in Saudi Arabia, which is catching up or is bigger in numbers on the cooperative model. And Ali will also comment on, he asked me to say, he'll comment on the Middle East. I'll ask each of the panelists in turn just to say a few words on mature Takaful markets before we get into the Q&A. So perhaps I could just start with Ali, to just comment on what your feelings are about mature Takaful markets.
Yeah, as you said, I'll focus on the Middle Eastern part. I think a lot of the key characteristics of the region have been flagged throughout the day. Lots of competition, which makes it very challenging for the Takaful operators to build up a sustainable business position. That said, we have seen some success stories, and these have been primarily supported by shareholders by either providing business or making sure that the Takaful companies don't just go with the flow of cutthroat pricing environment.
Tamizi, if I could ask you to just, from a Malaysian perspective, just give some background on the maturity of, or lack of it, of the market in Malaysia.
Thank you, Brother. Speaking in my personal opinion on Malaysian market, people talk very highly of the Malaysian market, very mature, but it's all relative. Relative to the other Takaful companies, we appear to be very mature because we have a very balanced portfolio. Our life business is much bigger than general, and we have a very comprehensive legislative framework. We have good laws. We have all the dispute resolutions, all the trimmings of a matured market we have. And of course, a lot of people say Malaysia is very successful and all that. So later on, given opportunity, I want to go beyond this very nice complimentary thing. Not that I don't like Malaysia, but I think we should have a reality check, because if people keep telling you you're good, suddenly you forget. And also, thank you for telling Malaysians that they are the leaders. I'd like to share you a different perspective afterwards. Yeah, thank you.
Ajmal, if I could ask you to comment on Saudi Arabia, if not Dubai as well, leave it up to you.
Well, I think I'll talk about Saudi Arabia, having come from there just fresh back to Saudi, to Dubai. Saudi market, I think, is really very promising market in terms of the potential it has, but it has a lot of challenges. It's not really that easy. Challenges of so many different types. Challenges that some of the companies have been sort of waiting for their products to be approved for more than a year. That puts big pressure on companies' top line. You don't have a top line because you don't have the products, and you're running a big expense bill on that. So that has been something that the markets or the companies have been actually struggling to overcome. The challenges, and that's why I think in the early part of today's presentation, you saw a lot of sort of red numbers. But I think again, also there's a domination. It's very fragmented market. Domination of few players, 4 or 5 players, taking bulk of the business because they have been there for longer than other companies. There are about 35 companies now, and the new players. When they came into the into the operational aspect, other companies were already entrenched into the market. So the new companies had a lot of challenges. 75% of the business is motor and medical, and 25% is something that every company wants. So there's fierce competition going on, or was going on. I think it's getting better now because the regulator has actually been very active on that side. Actuarial reports on pricing and so on have been the key feature of this market, introduced last year for motor, 2 years, I think, since 2 years, motor and medical. So that has actually helped to bring some stability in the pricing of these lines of business. And it has also actually, SAMA has been very active in actually asking the companies to ask for more information when you're taking new business on the claims experience, which helps the companies or the underwriters to price it better. So these things are very actively being promoted by the regulator, which is a good thing. The regulator also sort of is very conscious of the fact that insurance needs more awareness. So they are getting into that, into talent development and all that. Saudization is a big issue there for the companies, so that there is this thing that you do need the local talent, but then not enough is available. So you have to actually sort of see how best you can actually balance the expertise that you need to do various things in terms of the technical part of the business. I think that's perhaps okay for the introduction. Yeah.
Omar, you've been very kind to take the place of Salah from Sudan, who unfortunately couldn't make it. So a lot of people see Sudan as the first of the Takaful operations from 1979, and Malaysia following a few years later. We do know that Sudan has been and still is very strong on the general insurance side. The life side came a lot later, this last 6, 7, 8 years. But if you could comment on Sudan from your experience, I'd be grateful.
Thank you. Actually, it's an honor for me to speak about Sudan, because I am very close to the market, with friends there, with even the main market for Africa Re-Takaful. And also from last years and since beginning, I believe Sudan is almost the only market who is struggling to stick to the principles of Sharia or of Takaful as they formulated the first company in 1979, and since then they are struggling. They started without requirement of capital when it is the only country, in my knowledge, who is obliging all the insurance operators to be Takaful compliance or Sharia compliant companies. And since then, when they started, they didn't require any capital, because they stick to the mutual concepts as the main incentive of the Takaful industry in general. But with the pressure from everywhere, especially with the limited size of the market, they have to to now require for minimum capital, so it will be an additional protection to the policyholders and reflect the commitment of the shareholders, because some of the main concept of Takaful can't be successful unless you find the pioneers or the shareholders are ready to support and to sacrifice their own benefit for the concept itself. And without the capital involvement, that proved not to be correct. And that's why 3 or 4 years ago, the Sudanese market started to require minimum capital for the insurance companies, so they will guarantee minimum involvement of the shareholders. But still, the market is not fixing any wakala fee at the beginning, but it is the actual costs, which is very close to the principles of Takaful, and this is also very unique to the market. Thank you.
I'm going to start with an internal question, but I will open up to the floor for any questions that you may have on mature Takaful markets after this question, and inshallah the participants will be able to ask questions of us. Perhaps, Tamizi, I could ask you, what are the main factors that contributed to the success of Takaful in Malaysia?
Thank you, Dr. Success. It's relative. In Malaysia, we have this term called Jagoh Kampung. We are champion of our village only. Globally, we are still a long way to go. So I always tell my Malaysian friends, never mind, people give us complimentary, it's okay, we accept, but don't take it too seriously. There's so many things we need to do. But of course, not bad. First of all, my own opinion is that we are relatively successful despite not being a full-fledged Muslim country. This is the first thing. People always say Malaysia, Muslim country. Actually, to get the right perspective, 60% Muslims. Population 28 million. So 60% is 17 million, 17, something like that. I think there are more Muslims in Mumbai or in China. If Malaysia is a Muslim country, they deserve to be called Muslim country. Okay, so let's get the perspective correct first. Why I say this? Because we've done very well for a small country. Okay, if we can do well, then Indonesia should do better, Pakistan should do better. This is a challenge. Okay, of course we will try to do better. But as we heard this morning, it's slowing down. It's slowing down, and when people talk about penetration in Malaysia, they quote a figure which sounds not bad, better than others within the Takaful market. But actually, the figures actually include the non-Muslims who took conventional insurance as well. Okay, let's take for example the penetration for life insurance. Okay, Takaful alone is about 15% only of the population. Okay. If you add the conventional life insurance, then you have maybe 58% or something like that. Under the new life plan, we hope to have a 75% penetration. So actually, if you look at the Muslims alone, actually it's a little bit better than other Muslim countries only. But the figures people quote actually include the non-Muslims. Okay, so it's not as successful as we would like it to be. Okay, but we're working on it. But there are many things going for us. One, government support is very strong. The political will is there. I think that's bottom line. So if you look at our government support, this is because in Malaysia, it's a multiracial country, multi-religious. We have to compete with conventional head-on. It's easy if you are 100% Muslim or 99% Muslim. We are only 60%, so we have to compete. So when the going get tough, the tough gets going. So we have to fight. We have to really compete. So that brings out the best in us. And the government have given a lot. They try to make it level playing field, change the laws, tax laws, to make it so that Takaful will not have any disadvantages. In fact, they even give advantages. There's a kind of a micro insurance paid for by the government for the poor in Malaysia. Household income about $900 per month, they qualify for this. The premium is about 300 million ringgit, all given to Takaful. You know, so if you see nice figures, it includes these figures as well. So, yes, we do have made some inroads because there are a lot of uninsured Muslims. We made some progress, but still the basic issue is still not addressed. Awareness. I think this is the problem with all Muslim countries, the awareness of the importance of insurance and Takaful. But at least our advantage, at least they have heard of insurance. You know, they've seen insurance. So it's easier than to go into people who have never heard of insurance. It's not in their culture. So that has helped. Okay? And then of course our laws. But the other thing that I just want to shortcut government, and then the way we approach Sharia law. I think this is also, to me, the successful factor, because we take it step by step. We don't try to go full-fledged, 100% pure. We take it step by step, and as we go along, we tighten it. Okay, we tighten it. Take for example, Darurah, and now it's tightened up. And then we have, for now, as you know, as Azman said this morning, Sharia law, some things cannot be changed. Very true. The ones that can be changed, changing little by little, so that it makes business sense. So, for example, in Malaysia, the Takaful issues do not go to the Sharia courts. It goes to the civil courts. And the civil courts, okay, who has the final say in Malaysia? The law says the Sharia Supervisory Council of Bank Negara. So it's defined. So you don't have ijtihad problems of this ulama say this ulama say this. What Bank Negara Sharia scholars say, the Sharia compliant, the Sharia compliant. So there's no different opinion. This helps. Okay. Just one other thing that I want to comment on the success factor is that in Malaysia, Takaful is commercial. Takaful tijari, business. So that's why, I mean, there's nothing wrong with making profit in Islam, as long as you don't cheat, you are transparent. So that's why it's very successful, relatively successful, because we approach things in a commercial way, and our regulators also make sure all the prudential framework is there to make sure that the money is there, the capital is there, the claim can be paid when it should be paid. I think for a start, that's good enough.
Thank you, Tamizi. As I mentioned, this will be a different session from the sessions earlier in the day, and I have other questions for the panelists, but I would like to open it up to the floor and have a little bit of an interactive session if there are any questions. And we do have this hand over here was first, if I may, and then we'll come back to you.
Assalamu alaikum. VIII Kassar. Any of the panelists can respond to that. Looking at the Takaful industry, I think it's as big as Islamic banking itself. And I fail to understand what is really the blocking factor for its growth. It has not really taken off in this country. I'm sure lots of people, Iqbal Asaria, Brother Dawood, Brother Ajmal, and so many others, obviously you've been striving to make it happen. But I would like to know what are the three main blocking factors, And what are the three main suggestions that you would have that could stimulate the growth, not only in the European market, but all across the globe?
I'll ask Ajmal perhaps to comment first, but I will just give you one comment about Saudi Arabia. I believe in Saudi, the rules and regulations that came out 10 years ago were leaning towards the general insurance industry, which was really the only industry in Saudi Arabia at the time. There had been failure on the part of conventional life insurance companies to enter the market. 10 years after the laws came out, I think the figures are something like 96% GA, 4% life. So to answer your question, partly on Saudi before I ask Ajmal to comment and then go through the panelists, we could see a significant growth in the business in Saudi Arabia if we could get the life industry moving forward. Why that's not the case? There are many reasons, regulatory reasons, not allowing new companies into the market whilst they sort out the 35 companies that they have. You heard the problems earlier today with 3 companies taking 70% of the business. We have to something has to happen about the other 32 companies, and this seems to be taking the regulators' attention at the moment. But simply put, I believe Saudi could expand rapidly if they could move up from that. It's 96% GA business, 4% life business. But Ajmal, would you like to add to that?
Yeah. Just slightly different angle to this thing is that I think the Takaful industry got excited, and it sort of went through this process of so many companies being set up in small markets, and they ended up competing with each other like anything. And when you have that, the management has got a business plan. They have to deliver something that can actually then satisfy their shareholders, and that we have in a Takaful company. We have the shareholders there asking for returns, and the returns are not really there. The management is going crazy to go look for business, and the whole thing sort of really goes into a spiral. Kuwait has got so many Takaful companies. Saudi Arabia has got 35 companies. Only few are very established players, but the rest are really sort of having this issue. So I think maybe that's one thing that actually has not helped the Takaful companies to get stable and therefore be able to actually proceed in a better manner. Then I think there is also this thing that the return to the shareholders compared to the conventional and Takaful. If you have multinational, then a multinational getting into the Takaful side, then they start comparing, what is the return on the Takaful business that they have compared to the conventional. And if you have a window, then there is this thing that the two sides actually veer more towards the conventional side if you have a window. And because that is actually going to create more revenue or the returns eventually to the shareholders. These are the kinds of things I think, and perhaps this is also the models that we have been talking about today. There are sort of certain issues that we need to actually look at. How can we actually maybe tweak? I think we don't really need to sort of go too much in making drastic changes, perhaps. It's only the tweaking part, perhaps, to the model that we need to actually look at. We need to actually look at, if you go to a Takaful company and, talk to the staff there and you ask them, what is ethical about it, you wouldn't get the right answer there. So, what is ethical, when the staff themselves don't know about it. These are the issues. The curve is a problem, I think, there, and if you can sort of solve some of these issues, which actually can satisfy perhaps the shareholders in a better way, they can actually get a better return, and the wakala fees can somehow be sort of be put in sort of better perspective in terms of capping, perhaps, in terms of just serving or paying for the expenses to manage the business, rather than having this built up of the extra margin in the wakala fee to pay for the qard perhaps. These are the kinds of things we need to actually look at as an industry perhaps, and perhaps that would be opening doors to maybe facilitating the Takaful company's operational aspect better, perhaps for the European markets.
Omar, do you have any comments on the question of what's holding us back in terms of Sudan? Is there any comment you may have?
Yeah. Actually, I just mentioned this. I believe that the main challenge of the country in general, that the limited size of development, this is the main challenge. The new investments, which will drive the insurance industry, usually is not there. That's why the burden now is trying to develop in the market. They are trying to compete for developing medical business or motor business, motor compulsory, and those usually are prone to a lot of losses. The market is not expanding in the same ratio of the increased level of living, so it is also another challenge. That's why the market have challenges, and they are trying very, very hard to survive, as I can say. I believe that with the changes in the economical conditions, the Takaful market in Sudan will boom, because the companies will be relieved from the intensive competition to survive, for the daily surviving, to look after making better future for them. Thank you.
I won't go through the same question with each panelist to allow questions to be asked. I believe you have a question. Yes?
Assalamu alaikum. My name is Ibrahim. I'm from VIII in Nigeria. We're just a startup company. Actually, my question deals with two issues, which I feel the last questionnaire did ask. What is impeding the growth or establishment of Takaful in Great Britain and Europe? That is one. Then when the speaker, I've forgotten the name, when he was talking about Saudi Arabia, there was something that really confused me as an accountant, because you said they were building up costs, and there was no regulation to guide product development, so there were no premiums, if I could get it right. I don't know what, that was the thing, that is why Saudi Arabia insurance companies, Takaful insurance companies are sustaining losses. Then I feel from the management point of view, if you don't have a license, why should they incur costs? Because that's what we have in Nigeria now. For 2 years, we've been trying to get a license for our VIII Takaful. The MD of African Re will be aware of our situation. African Re-Takaful could be aware of our situation. But what we're not doing is, until we get a license, we're trying to sensitize the population, because we are an affiliate of the first Islamic bank in Nigeria. Now, until we get a license, we can't run costs. Okay, it is we directors that bear the cost, but we're sensitizing the population. So maybe if you can help me look into all these three. It's a 3-in-1 question: the Nigerian experience, the Saudi Arabia experience, and also importantly, why is there no Takaful in Great Britain, for instance? Thank you very much.
Yes, please.
Saudi question. What I meant actually, for example, when you develop or when you want to have a product, you want to actually get the approval from the regulator for those products. You develop everything about the product. You have to have people, first of all, to develop that product, so you incur costs there. And then you feel that, once you've got that submission to the regulator will look at it, and he'll come back to you either with questions or approval. The example that I can give is for my own company, where we have been waiting for more than 1 year to get approval for the life products, 5 products. We haven't got that yet. And the first time the regulator came back to us was about 8 months from the date of submission. And that is something that you don't actually factor. You think that the approval will come shortly, but it's still 1 year and the approval is still not there. So you incur cost. You have the staff, you have the system, because you don't want to sort of spend on the system after you've got the products. Because part of the approval is, do you have a system? Do you have this? Do you have that? So you have to have all of these in place before you give to the regulator that here is a product, we have everything, please give us the approval. So you have incurred that cost. So that's what I meant. Yeah. I'm sorry? Great Britain. Why Takaful is not in Great Britain? Okay, I think this question was actually discussed in the masterclass, and we had very good discussion on that. I think that there was this company that was actually established in UK, Takaful company, and it took 1 year for that company to actually then become insolvent, and then it had to sort of disappear from the scene. The reasons for that company to have been established and then not going forward, to my mind, and I think generally it's accepted that they went into motor first, motor product. Now motor is a very capital intensive product. You need to have serviceability for that product. The premium comes in because if you have the right price, the people will buy, because you want to sell. So they will buy at the right price, which is actually the right price for the customer, in order for you to compete in the market. So business will come. It comes in like a flood. But then the claims also go out. So you need servicing aspect, and therefore you incur cost for that. And this company actually, unfortunately, was sort of involved in a huge IT development that actually was very, very expensive for it. So soon, its expense bill was into millions, and the top line was only sort of like 2-3 millions. So there was this dichotomy of this thing, and the regulator didn't really allow this to continue, and it was actually touching the insolvency threshold. So it was about the products. It was not about the Takaful model. How you actually went into pitching yourself with a product which was actually more loss-making. If you had gone with other product, 62 million pounds of capital would have been quite enough for some other products.
If I can just elaborate a bit on that, I think the broader challenge is to bring awareness. I mean, unfortunately, this part of the world, even in Middle East, insurance is seen as a tax. So I think one of the key areas that would perhaps lead to development of the Takaful product in particular, or generally the insurance penetration, would be for the government, for the regulator, for the insurance companies, for unions, or making sure that they are in touch with the different industries to bring awareness to the customer. Because we saw that in the classic example in Middle East, the reason that we saw this significant increase in medical business in Saudi Arabia or neighboring countries is because of the regulatory requirements. So I think the governments, the regulators, the insurance companies will need to do a lot to facilitate the penetration, in particular for Takaful business.
Hello. If I could just go back to an internal question to Tamizi. 16 years ago, when I first got to know the Malaysian market, General Takaful was at the forefront, and Life Takaful was playing catch up. Over the last 10 years, we've seen specifically international companies like my own, Prudential and Sun Life and HSBC, come into the market with the life development. And now we see a slight stagnation on the general Takaful side. I wonder if you could just, within the market, which we've already discussed is mature, relatively speaking, if you'd just like to comment on that.
General as well.
Yeah.
Okay, general, we have to look at the customer in two levels, the individual and the corporate customers. They behave differently. Corporate customers, they always think of cost. Sharia compliant is number 2. Okay, so they will look at cost first. Individual customers, those who are conscious about their religious belief, they will look at Sharia compliance. Okay, so that's why for general insurance, Moto is doing relatively well. Moto, I think it's like what 70% portfolio is Moto. They just take Takaful because it's Sharia compliant, and it's not because of the value proposition or anything like that. It's just a necessary evil. Government you have to buy it. Right. As for corporate clients, those days you were talking about, Takaful Malaysia was very successful in the sense that they gave back this experience refund, which was substantial. So many of the customers kept coming, irrespective of religion. So it was not the Sharia compliance with the value proposition, it was just the return as the value proposition. I think this is something we need to address. I think speaking as a Malaysia, I think we fail this. If you ask, and I did a survey in the year 2000, and I asked Takaful customers, individuals, have you heard of the word tabarruk? 99% have never heard of the word tabarruk. Okay, this is Malaysia, the successful country. And when I asked, have you heard of the word mudarabah? 99% yes. And that was what they were looking for, profits. Okay, in spite this being a protection product, and people come and say, I want to insure my car, Takaful, how much return do I get? Which is really a silly question for protection. But anyway, I think we have failed this. We have failed to bring out the beauty of Takaful, the tabarruk, the solidarity. I think that's where we have failed. We try to be like conventional. If you come to Malaysia, a big 5-star hotel like this, you go for breakfast, it's all halal, and you'll have beef bacon, you have everything that a conventional will have, but it's halal. It's beef bacon, it's turkey ham. It will never be as good as the real ham. I don't think so, but I've never tried. So we try to do this, and because this is what the market wants, I think we should be brave enough to come out and say, look. They are conscious, no? It's just they're not aware. They always ask, how good is Takaful? What's so good about it? I say, are you asking me about this world or the next? I think that's what we should answer. Are you looking for good in this world, good in the next? You can ask Sharia scholars, when you tabarruk, Surah Al-Baqarah, verse 261, you give one, God will give you 700 back. That is 70,000% return, guaranteed by God Almighty, not by Goldman Sachs, not by Deutsche Bank. We never talk like this to our clients. Here's my money. If somebody else died before me, use this money to help the family. Use this money to help to pay for the car repair. We don't talk like that. We are always trying to compete. Turkey ham, beef bacon. I think we should be brave. I was like this. Now I'm retired. I talk like this. So because I don't have shareholders already, to please. But I think we should start creating this awareness. Bring out the value proposition of Takaful. that this is really good, this world and next. Why is there takaful? Because insurance cannot meet the spiritual needs of the customer. Insurance can give everything for this world, nothing for the next world. I mean, it is for the believers lah. It's for the believers. Of course, we should try to go for the non-Muslim as well, but there's a big Muslim market. Why go the difficult way and look for the non-Muslim customers? We have to start at home first. I think this is something that we should really do. Okay, and we don't compete on the same level. We compete about transparency. We compete about brotherhood. And then when the Muslims get used to this, then we get in the non-Muslim, because helping one another is not a Muslim thing only. It's also a human thing. When Aceh had tsunami, the whole world helped, not just Muslims. So it's innate in our human to help one another. This is beautiful, but we never do this. We go for the easy way. Money talks. Anyway, I'm being idealistic, but I can't help it. Old man, retired, it's easy to talk.
Thank you, Tamizi. I can see Ajmal is most anxious to comment.
No, I think there's another aspect to this, and that is that when you are talking about the goodness of Islamic finance or takaful, we are actually also saying, where is the use of that money? Where are we investing it? And that's very important. I think that's also not there going on in the industry. I think what Zainal was saying in the masterclass, look at it from the regional aspect, the regions. If a takaful company is working within a region, then if it were to be investing in that region for the people who are in that region, and that's actually Muslims and non-Muslims alike, then this institution is doing something good socially by investing in projects and so on, which is good for people around there. And perhaps, it might also get good returns. So I think this is one thing which actually is missing, perhaps.
We have time for one question from the floor. I'm going to look over here, because I took two questions over here. Is this lady here? There you go, it's a lady. My apologies. Could we? Actually, I was pointing to this lady here. Sorry, so many hands went up, which is always a good sign of Q&A, but we are stuck for time. Please.
Anila Mather Khan from AM Best. I just want to ask, in these mature markets, have there been any insolvencies? And if there have been, what has happened to the deficit in the takaful fund?
Has there been any what in mature markets?
Insolvencies, sorry.
I'm going to start at the end with Omar. Have you known of any solvencies in the Sudanese market?
Yes, for sure. And that's why I mentioned the requirement for minimum capital. Some of the companies went for liquidity, and those companies, fortunately, they were very small, so the market effect was not much. But when they went to solvency, the net assets went to a liquidator, and this, as you know, this long process which takes years to be finalized. But the takaful concept is really requiring people who believe in the concept itself. Yes. It is a matter of faith, and this is the only genuine difference between takaful and other mutual or cooperative insurance. Yes. And if people believe in the concept and do it in the same way, I believe that insolvency of takaful company will be removed. Okay. But in absence of this, we will face the normal things. Okay. Also, I know about some takaful window who stopped. They started, and after 1 year or 2 years of bad experience, they stopped because they also went for wrong products at the beginning, not in Sudan, in other places. And actually, those are parts of the challenges who are facing the takaful industry, to find shareholders who look for the long-term investment, and when they suffer, they can support the industry and to continue.
Moving along, very quickly, any comments?
I'm not really aware of insolvencies within Takaful companies, except for perhaps the UK. There was one example. The regulator is, very well, prepared for creating all kinds of reserves that could actually then satisfy the customers. But it was a one-year contract anyway for the motor. But apart from that, I think maybe possibly one case in Saudi, but still, it's close to insolvency.
Okay.
But nothing has happened so far.
Tamizi, anything on solvency in the Malaysian market? Quickly.
For Takaful, no, but there were 3 insolvencies for motor conventional companies. All 3 motors, they went belly up. Yeah, that was before Bank Negara came into the picture. But I just want to say one thing about risk management. Very good, but we forget that, for example, riba. If we indulge in riba, in the Quran it says God and the Prophet will wage war against us. So this is part of risk management, I mean, if we really believe this, we can do all the risk management. So there's a hadith say if you pay zakat, you'll be protected. So part of the risk management, pay zakat, don't do riba, don't just do Sharia because you're afraid of the convention of your reputation. Be afraid of Allah first.
Yeah, just very quickly, I mean, what we do see in Middle East in some places, the temporary suspension of licenses, if the regulator thinks a company is on the way to insolvency. But, most of the time, we do see signs that the shareholders are willing to put the money in, because they have a wider interest in the finance sector or beyond the finance sector. So, and as you would know, capital is not scarce. But there isn't one particular company where we can pinpoint to a real-life insolvency, like we see in the US in particular.
I'll just further comment on Saudi. It's already been recognized and presented today that of the 35 companies, 70-80% of the business is between 3 companies. That leaves another 32 companies that, in theory, should be moving towards solvency. What's going to happen, I'm not sure. I do know that the governor announced in a meeting we had with him 18 months ago that he was going to try and change the law. The law at the moment is you must IPO as soon as you want to enter the market. And we've always thought that's a highly dangerous situation. I call them the acronyms. The companies who weren't in the business, who are just starting a business, they're competing with the Medgulfs, the Boopers, the Taiwanese, and they've not made any progress. The problem at the moment in Saudi is that the share prices of these companies is far too high. It's unrealistic. Right? There's been no mergers, there's no acquisitions. The governor is getting fed up of rights issues. In a sense, it's almost like throwing good money after bad for some of the companies. So, to partly answer your question, we should know shortly what's going to happen on the solvency issue in Saudi Arabia over the next couple of years on these 20-30 companies who just cannot survive on the level of business that they're undertaking at the moment. I've overrun by 5 minutes, Iqbal, with apologies. If I could ask you to put your hands together for the panel.
عليكم السلام ورحمة الله وبركاته. Assalamu alaikum everybody. والصلاة والسلام على سيدنا محمد وعلى آله وأصحابه وصحباته أجمعين. أما بعد, thank you for coming back to this second day of the International Takaful Summit. And as a way of wrapping up what happened yesterday. You may remember that 2 days ago we had this master class where we established a link between the Takaful provisions and the pension funds. And we explored the way that Takaful may make contributions to European societies where we are living. Second take on the masterclass was that the model itself is under strain for a number of reasons. And third, we explored this very huge area, environment of, I would call it, friendly society dash mutuality dash cooperative insurance, where for a number of changes in the regulatory environment, Takaful could fit in. And this is perhaps the best way to proceed in the near future. Yesterday, we delved into a number of those issues, and the remaining issues will be taken care of today. My take yesterday, we had two very interesting presentations. I found it very interesting. One was the one that was moderated by Jafar and where Shakib and Sohail delve into the problems. You know, they just had a shopping list, bullet points of problems. And late in the afternoon, we heard some solutions proposed into a session, the one that was moderated by Tuan Haja Tirmizi, and the other one moderated by Shakib as well, where we provided some possible solutions. My second take yesterday was that the role that London can play for the development of the Takaful market. I was very, very pleasantly surprised. I didn't know anything about that. And the presentation of Cameron on the structure of the Lloyd market, and he went into a great details and showed us that most of the provisions of the Lloyd of the structure of the Lloyd market are just Sharia compliant. I mean, Sharia can fit in very, very easily, which is of course is a key development if you want to proceed with the Takaful agenda in our countries. The other take is that in this country there is a political backing for Takaful and for Islamic finance, which is a key development and a key issue, because in so many other European countries, this lack of political backing is hindering the development of Islamic finance. This said, today, you can see on the program, we will go through a number of key points. And the first session we have now is on the investment and Takaful contribution pools. And it's my good pleasure to ask the CEO of CMB Principal Islamic Asset Management, Ramli Kamsari, to please come to the floor. He will be a moderator, and he will introduce the other speakers. Thank you very much, and please greet Ramli.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Wassalatu wassalamu ala ashrafil anbiya'i wal mursalin wa ala alihi wa sahbihi ajma'in. Assalamu alaikum and a very good morning to one and all. Welcome to day 2 of the ITS. It's a great pleasure to be invited back, this time to moderate on panel for investment and Takaful contribution pools. May I first invite the esteemed panel to come forward and take their seats. We have Dato' Noripa Kamso, board member, BIMB Investments, really no stranger to almost everyone here. We have Bindesh Shah, co-CEO of Amiri Capital, and John Gilbert from Hogan's Lobert. I think for me, while the esteemed panel members is taking their seats and get comfortable, just to set the scene of where we are, or rather where we have been for the last 12 months. 2014 was a very tough year within the investment community. Very challenging environment, compressed markets, fund managers like myself were under tremendous pressure to deliver the expected return despite the marked shift in the fundamental market. It gives me great pleasure, therefore, having that insider's view to share with you. I'm not going to steal the thunder of our panel members. The emerging trends that we have seen amongst the sophisticated investors, also some takaful operators. Beginning middle last year, there was an apparent shift, started as a gradual shift, markedly increased in its pace from third quarter onwards, away from benchmark or relative return strategy. Yeah. We saw that investors have increased appetite towards absolute return strategy, and you can't really blame them. Given the challenging environment, they want to maximize return potential on their portfolios, and you can see that there was a preponderance towards unconstrained portfolio. Yeah. And this allows them to attain maximum or the best risk return reward. Yeah. This cuts across all the client segment, across the several investors, and it began to gather more pace beginning into 2015. In the unconventional asset class, real estate, we saw the allocation to real estate also began to increase, and this will be gathering a lot more pace. Obviously, Bindesh can touch more on that later. We see that gathering more pace and momentum this year. Not just for the diversification benefit, but clearly, being part of a multi-asset portfolio, it will give the investors enhanced return. There is a virtual need for them to attain yield and, as far as possible, regular income. Yeah. And clearly, the attractiveness of the real estate investment, say relative value to bonds, sukuk, fixed income instruments, provide that value proposition for the real estate asset class. And therefore, in 2015, my prognosis is up to 40% of global investors is expected to increase their allocation to non-listed real estate funds. I mean, clearly in a low interest rate environment that we are now, with the uncertainties and the marked volatilities in the global markets, investors are seeking income-oriented solution. And this is where multi-asset portfolios, multi-asset funds and products are coming more and more to the fore. Like I said, they want monthly, regular and stable income. They want to achieve a degree and a good degree of insulation from all these unexpected market events and volatility. And for them, any potential of generating returns in excess of cash is good bonus. Yeah. And obviously, hopefully, preservation of the capital in itself. So with that preamble and having set the scene, for today's panel session. The panel members needs no further introduction, but like any good portfolio, it's a diversified construct by way of background across the various asset classes. Yeah? Like any good portfolio with risk overlay, we brought John into the equation to see whether from the non-traditional perspective there can be potential solutions or even synergies between mutual insurance society or the sector in itself with Takaful providers. And looking across the panel members now and their experience, there is an element of duration play in this portfolio. Long experience, experts in their own class, and hopefully we will be able to construct a very insightful, engaging session for this morning. And certainly we would want to see interactive engagement with the audience given time, hopefully later during the Q&A session. So without further ado, I invite Dato' Noripa Kamso for her presentation.
Thank you very much, Ramli. Good morning, everyone. I've always looked forward to attend this London International Takaful Summit. This is actually my 5th attendance to this summit. I've never been a Takaful expert, but I think I'm progressing to take over the place of some of you all. The interesting part from my perspective is that I'm meeting captain of industries, decision makers, who have so much energy wanting to capture and control the world of Takaful. Congratulations to Brother Iqbal. Allah bless him for all this initiative. When I was approached by Brother Iqbal to talk on prudent investment management of Takaful contribution pool, I sat down and I said, I have been speaking on this probably for the last 4 sessions as well. But as I started to listen to the speakers in masterclass as well as the speakers yesterday, I'm on the same page with them. That the challenges for the last 6 years, if not most, all of it is still not yet overcome. Or as Brother Tamizi mentioned, he's from Malaysia, he said, are we still living in yesterday's story? So on the issue of managing the investment of contribution pool, I heard it being mentioned yesterday by many speakers as well as in the masterclass. There's this articulation, there is a lack of innovative investment vehicles. And Mr. Zainal, he mentioned that there is actually a need for a suitable investment product. He said the Takaful operators want certainty, and with certainty, then you can place the pricing, or else you all will mark up on the premium. And Brother Shakib, he also mentioned there is high wakala fee, but very low investment return. So even Brother Mahesh Mistry shared with us the importance of the strength of the balance sheet of Takaful operators, which will grant a good rating. And ladies and gentlemen, it's worth remembering that the yields of your investment also forms part of your balance sheet. So back on the topic of investment on contribution pools, we saw yesterday that the contribution pools by Takaful operators in Malaysia and the GGCs differ a great deal. Has the gap of unconscious bias towards equity in the GCC actually changed, or has it remained unchanged? Does the low tolerance to failure still exist in the GCC? Thus, if you look at my subtopic, I mentioned, is it still yesterday's story? Or have we started to reboot our investment in the contribution pool before we move to the next step to improve yield through diversification itself? So, ladies and gentlemen, I have, against that backdrop, a precise agenda. One is protecting contributors' fund from regulators' perspective, and to make these regulatory guidelines relevant against the investment landscape, I actually can't avoid but to talk to you into diversification of asset classes and diversification into geographical, and then I'll talk about a simple solution. So in trying to ascertain whether yesterday's story remained unchanged or whether it has changed, I extricated two of the same slides which I presented in the previous ITS, in International Takaful Summit. And this visual was the same one I presented in 2010. You would agree with me, the basic remains unchanged. Takaful operators generate shareholders' returns through a number of key drivers, and investment management and composition is one of them. The other slide, which I also extricated, was from my 2011 presentation. I talk about asset allocation. The asset allocation here on conventional insurance has been tried and tested for close to 100 years. And it looks like the classes or the asset allocation, if you look at liquid asset class or debt instruments or equities or alternative, they have not been wholly adopted by the Takaful operators yet. For example, if you look at the debt instruments in the insurance book, it exceeds more than 50% of its total investable portfolio. But the Takaful and those in the GCC is still unchanged. The Sukuk investment is much lower than the 50%, and the focus is still on high returns, so-called high returns, but on equity. So to establish there is progress in the GCC, I was reminded by the presentation by Susan in the masterclass. She actually presented 7 key reforms in the UAE that has been recently introduced. And she mentioned 2 out of the 7 is on investment management and on the solvency requirements. So while the Takaful operators practices a wait and see, there are fundamental change in the market taking place. Investment trends, like what the moderator Ramli mentioned, shift more quickly than ever before. As I'm speaking with you now, the investment world would actually change as well, as oil prices moved up, for example. So as market becomes a lot more volatile, it can be an enemy to the Takaful operators. It can be a friend to asset managers like Ramli. They love volatility. But it is an enemy to Takaful operators. And a pivotal approach to protecting the contribution pool is to have a different risk charged for each asset classes to ensure A, no deficiencies in the reserve, and B, you can strengthen your balance sheet. And as such, in this next visual, I talk about protecting contributors' funds. If I use Malaysia as an example, each asset class has got a regulatory risk charged depending on the volatility of the asset class. For example, in Malaysia, the equity asset class is actually charged a higher risk charge of 16% of investable amount than the sukuk, which is believed to be less volatile, and sukuk is has got a risk charge of 7%. However, the Central Bank of Malaysia said, dear Takaful operators, if you actually invest out of Malaysia and the risk is something which you probably are not familiar with, we are going to give you a guideline that there will be an additional risk charged on offshore investment made by Takaful operators on your contribution pool. And as you can see from this visual, there is an additional 8% on the 16% on equity and also 8% on top of the sukuk. There was a question by Susan as well. How do you treat a surplus or deficit in the contribution pool? Great minds think alike. I actually had a slide on that. Another prudent management practices is the sharing of investment income shared with the contributors. So what does the operator do with surpluses of investment income? In the interest of transparency, it is placed in the savings account. And in the interest of fair distribution of income, these surpluses are shared with the Takaful operators as an incentive and also with the contributors as a benefit to them. If I can quote an example of this sharing of surpluses, the largest, the public listed and the oldest Takaful company in Malaysia, Syarikat Takaful Malaysia, the chief executive is here, Dato' Hassan, and the chairman is also here. They uses the 60-40 sharing, 60% on the operator side and 40% on the sharing with the contributors. And if the contributors do not have any claim in that particular year, there has been practices where Syarikat Takaful Malaysia give back 15% of that surpluses. So this is to ensure participants are treated fairly in the spirit of Islamic principles. So if we relate these prudent practices with the current investment decision or practices by the Takaful operators that grants low yield or even erosion in the amount invested, in some cases in GCC, it's time to rethink, and that is in tandem with the topic today as well. Why? Now, that is because, if you recall, in the 1990s, we underestimated the weakness of Takaful in investment. And then, in the year 2000, we overstated their investment strength. Example, there was so much of concern and complaint. Example, in the masterclass, for example, that there is not enough long-term sukuk instruments to be invested by the Takaful operators. Now, on my side, I view this as untrue. I beg to differ, because just in 2014, there is 602 issuance of sukuk in the market, totaling US $70 billion. And if you say there is no long-term sukuk, the recently issued Saudi electricity company that was issued, it has a 30-year sukuk maturity. And the longest sukuk maturity comes from Maxis, which is a telecommunication company in Malaysia. And the largest is a highway company in Malaysia called Plus Highway. In fact, if you talk about supply from sovereign government, Oman, for example, is looking into coming up with US dollars 300 million to 400 million of sovereign sukuk with a maturity of 5 to 7 years. And you have Indonesia, who's looking into 22 times of short issuance, totaling about 1.2 billion to the retail market. And as you know, Hong Kong listed its 1 billion sukuk in Nasdaq Dubai. And you are in UK issued its 200 million euro sukuk. And Luxembourg issued the sukuk in September and is exploring further additional sukuk. So that is some thought-provoking concern that could probably be mitigated. Now, the investment of contribution pool can't run away from the current investment environment. Having accepted the additional 8% risk charge on geographical diversification, let's understand where and which region remains attractive, as mentioned by the moderator. The gravitational pull in key asset classes will guide investors to the West, to developed market. This is shared in the research of Principal Global Investors and Create Research of UK when they actually sought the feedback from 104 pension plans, sovereign wealth funds, pension consultants, asset managers, and fund distributors in 30 countries. They actually asked this question: which regions are most likely to offer the best returns over the next 3 years? 47% said USA, 45% said frontier markets in Africa, 41% says the rest of Pacific Asia, 34% says Western Europe, and 34% said China, 28% said Japan. Why USA? All of us know USA is going through a continuous recovery, and we can see there is still weakness in the Eurozone and weakness in Japan. And when this question was asked, what factors will drive asset values in developed markets over the next 3 years, whether the factors are positive factors or negative factors, 74% said improved prospects for economic growth will drive asset value. 60% says the end of quantitative easing programs in Europe and US will have impact on the asset values. 40% said easing of the euro crisis, 31% says reform of public finance, and 26% said no resolution to the debt crisis. So having covered the developed market, let's briefly see what the emerging market has to offer. For a start, not all emerging markets are created equal. So to the question asked in this research, what factors will drive asset prices in the key emerging and frontier markets over the next 3 years, whether the factors are positive or negative? 62% say slower economic growth will drive asset prices in the emerging market. 53% said the end of the quantitative easing programs in Europe. And 43% talk about emerging urbanization and the rise of the middle class. That's actually very important. Malaysia, where I come from, for example, was trapped in the middle class, but we are seen to be getting out of that middle class trap, as one example. And 34% said liberalization of domestic controls and capital flow, and 23% said the social unrest in the face of growing inequalities and fewer job opportunities. So now that we have covered the diversification on both asset classes and geographical, how do we navigate contribution pools to capture benefits of this distribution? Now, many of the speakers yesterday also mentioned that Takaful operators are so fragmented. They come in small outfits. And these are actually the consensus from all in the hall. Over tea, someone told me there is no investment department in his Takaful outfit. And another person also told me the finance executive is managing the investment management of their contribution pool. And Mahesh, Mahesh is from AM Best, he mentioned he's concerned on concentrated investment as well as the low investment yield due to restrictive investment policy. And I also agree with Azim Khan in the Master Plus when he mentioned one solution to all these challenges is actually to pool together all these fragmented funds in this small fragmented Takaful outfit into a consortium, into a bigger pool. And I can't agree more. So with the rapidly changing environment and opportunities, you fear being left out? No, if you fear you're being left out, you need to reboot your investment portfolios, asset classes, and diversification. If you do not have the skill set to capture this growth for the next level, you can't appoint a trusted investment partners. You can just outsource it. And make sure it's a portfolio with a mandate asking for a long-term investment strategy. Like Mr. Zainal mentioned, there must be certainty, so there must be long-term commitment. And these portfolio managers, like CMB Principal Islamic, Ramli there, for example, will have a very disciplined execution, unlike the finance executive or the chief clerk that is doing it. They will have to navigate to make sure the risk management is being handled, portfolio construction will give the highest return, performance measurement will be shared, the asset class diversification will be done against the risk charged. And the strategic asset allocation will also assist you in taking advantage, whether it's absolute return, as mentioned by Ramli, or whether it is a real estate investment by Bindesh, for example. So, in conclusion, a famous Latin quote says, "You add a little to a little, and there will be a great heap." Thank you very much.
Thank you very much, Dr. Noripa. This issue on capacity, this was brought up by Brother Chakib during his presentation, is a perennial issue. What we have seen over the last 18 months, that it has been mitigated somewhat by the expanded investment universe, say for Global Sukuk. 3 years ago, you would struggle to find up to 10 good credits for Global Sukuk. 3 years forward, lo and behold, the investment universe for Global Sukuk is now 51 names strong. So the capacity issue is slowly and surely getting out of the way. Brother Muhammad Akub also professed to having a good, liquid, conservative, diversified portfolio as somewhat of a holy grail for Takaful providers. In a sense, liquidity is still an issue. We see at primary levels, new Sukuk issuance are snapped up very, very quickly. You can see, multiple oversubscriptions on the investment grade credits. There's clearly a long-term buy and hold strategy amongst the investors. And this is something that, in a sense, ourselves, asset managers, are still grappling with. Do we have the same liquidity issue for real estate? That is a question that Bindesh will help me to answer. Interestingly, in and about March last year, out of nowhere, there was this frenetic spurt towards global REITs. This originated from actually large Malaysian institutions seeking exposures in the global real estate sectors. Clearly, this is a new capability that we are trying to build. We were very, very close to having a Sharia wrapper to a listed global REITs fund. However, that did not materialize again due to limited investment universe issue. Is that something that we can work together with Bindesh, for example, to try and provide an alternative for investors on the unconventional assets? So for that, let's hear the perspective from Bindesh.
Thank you very much for that kind introduction. I've been asked to speak on this topic, but I can safely say I'm an expert on one part of the topic, which is real estate, but I wouldn't consider myself to be a great expert on Takaful because the experts in this industry are right in front of me. So if I make some mistakes in the way I talk about it, please excuse my issues. But before we talk about how we go about constructing a Sharia-compliant investment pool, it might be worth just reflecting why and how insurance companies generally approach the investment of the contribution pools they have. First of all, they have to look at the profile of liabilities. As always, insurance companies deal in the long term, and they're continuously thinking about how do they match the incoming contributions and investment returns with the liabilities, which are often very long term and long duration. The second is looking at the total asset universe and the risk return profile that they face. So as well as looking at the long duration of their liabilities, they've got to consider what does the investment universe offer in terms of duration and risk and return. And the third factor in how they approach their investment strategy is regulation. As you know, the industry over the last few years has become far more regulated. Regulators are taking a very deep view on how much capital should be held back by the insurers. So these create certain challenges about how you approach creating an investment strategy. So where does real estate fit in, given those decision-making matrices? First of all, it's important to understand that real estate is generally less liquid, it is quite lumpy, and it is also quite long duration in most cases. But it does offer two things, and this is why it should be as part of any investment strategy. One is often and usually quite stable and predictable returns. And the second aspect, and this has been shown by numerous studies, the latest one which I picked up was by Oliver Wyman, that if you match a risk-free government bond of the same duration to a real estate asset, the bond would yield about 3% over the term, and the real estate assets would be yielding around 5 to 6%. So you get the extra yield for same duration and quite similar income flows, albeit there is some risk. But I think the challenge is exemplified in there is that real estate isn't a liquid asset class and it is quite lumpy. So how do you approach it for Sharia-compliant investment pools? Well, first of all, you need to identify whether there is funds out there. And one of the things that Ramli spoke about is when they looked at the global REIT market last year to see if they could create a Sharia-compliant investment pool, it was quite limited. The reasons for it are pretty obvious. A lot of the REITs will be highly leveraged and they will be investing in a number of Sharia uncompliant activities. So that makes it very difficult to go to a conventional set of REITs, put a wrapper on it, and then allow Takaful operators to invest into it. So it comes to this thing that something actually needs to be created for Sharia-compliant contribution pools. But that brings another challenge, the scale of the industry. Last year, according to the Global Family Takaful report, there was gross contributions of $3.1 billion US. Generally, in the conventional sector, for example, the amount that gets allocated to real estate is circa 3%. 3% of 3.1 billion incoming flows, albeit there is also a pool of pre-existing flows, would only allow about 100 million of new investment into real estate. Clearly, that is a very small market. So what does this lead us to? Well, first of all, but those contribution pools are growing. So it makes it quite difficult, the investment universe, the scale of the industry, to create those real estate investment class for Sharia. The approach which I would advocate is something that Datuk Nirupa put together is, we can't wait for people to start offering that product. Takaful operators need to come together into consortiums and pool their investments so that you can create the critical mass in order to be able to create the investment pools that can benefit from real estate. This isn't easy because every Takaful operator has different requirements. They're at different stages of growth. They have different contributions pools. But at the same time, this can be done, and it has been done in many other industries where operators across different geographies and within the same geography, even though they're competing, come together in order to be able to unlock an investment class. If it were to be done, it's very important that it has 3 or 4 different elements. One is that it builds a pool that invests across global real estate, not just limit itself to certain countries. Secondly, it needs to be able to build scale quite quickly. That means that I would advocate that there is over-allocation into real estate. So I think I mentioned that there is a 3% allocation, usually with conventional, but also there are a number of other areas they invest into which are off limits, for example, hedge funds and certain types of private equity. So instead of investing 3%, I would probably say it may be better to be investing circa 5 to 10% into this pool. Thirdly, at the initial stages, it's very important to be investing into liquid, transparent real estate assets. So, for example, if we were doing this in the UK, certainly I would be advocating commercial real estate, office buildings, and such like, versus engaging in some activities that certain insurers have been doing, which is developments. And then finally, it's about approaching it so that it is a very open pool, which is quite important. And what that means is investing in a way that is less lumpy. So the size of assets that are being acquired for the pool need to be of a size that allows when new contributions come in, it's quite easy to invest those. So for example, if you were looking at a pool that added up to 1 billion, rather than investing in 4 properties of 250 million, you're looking at circa 20 or 50 properties of a much smaller scale, which means that as the contribution come in, it's very quick to invest those. So those are my thoughts. And the concluding remark is, I think if the industry is going to succeed in this space and in developing an investment proposition, it will have to come together rather than waiting for the market to come to it. Thank you.
Thank you, Bindesh. That was all done in 8.5 minutes, so hopefully there's still time later, Iqbal, for Q&A. Real estate, just bringing back to what we see last year amongst the large institutions in Malaysia. There was a clear increase in their allocation towards real estate. Not only that, there was also increased limits on their international exposure. So you could actually see a rush of these institutions, trying to get exposure in global markets in Europe and especially in the US. We were glad to be involved in some of this roadshow, bringing them to major cities like Boston, San Francisco, and Chicago. And you can see the uptick in this sector is on a virtual rise. Coming to something else altogether different, mutual insurance sector, totally new to me, quite alien, I must profess. But what's always in my mind, is this a growth sector? Is it in decline? John will help us to answer that. I know John is very excited about the potential synergies between the Friendly Society, mutual insurance, and Takaful providers. He's in fact working on developing now a Sharia-compliant insurance product using UK Mutual Insurance Society as a vehicle. Let's see where he is towards developing that and where can be the potential to try and marry that with the Takaful community. John, if you may.
Thank you very much for that introduction. I've found it quite fascinating listening to the previous speakers who've covered quite a wide range of issues. By contrast, I'm going to have a very, very narrow focus on a aspect of friendly societies which I hope is going to give a great opportunity for further investment in them and to take off for Takaful in this in Europe and in the UK. A challenge of 8.5 minutes. I'll see if I can beat that in what I'm going to say. The general theme we have is that of rethinking Takaful, and this is a new opportunity to do some of that rethinking in a very old legal vehicle, but one which I think is strongly aligned with the principles that underlie Takaful. So to move on, just to recap very briefly on why I think UK mutual insurers have got such potential. They are, first of all, as I say here, a ready-made legal structure for principally for life and savings products, although mutual insurers can provide general insurance products as well. That legal structure has been in existence with a few tweaks over the time for over 200 years in this country, so it's really very well established. There is an incredibly strong alignment with the Sharia principles which underlie Takaful. We heard yesterday about compatibility with of the Lloyd's model. I think there is just as much compatibility, if not possibly more, here. First of all, you have the concept of mutuality on which UK-friendly societies are based. You have the idea of tabaru, the voluntary contribution into the friendly society, and you have a permissive regime which allows surpluses to be either redistributed back to the participants or indeed to be used for social and benevolent purposes within the pool of participants or the affinity group to which they may belong. There is a favourable tax regime, which I won't go into the details, but friendly society investments are generally treated by the taxman rather more favourably than investments in other vehicles. They tend to be small, flexible, innovative organisations, and again, that's partly tied in with their responsiveness to affinity groups, but also to the fact that many of them operate in a regional background in a specific regional area. But in contrast to that, they have the potential for operating on a much broader scale through the European passport rights. Once a friendly society has been established with the hurdles of the UK regulatory regime, it's very easy for it to operate, or comparatively easy for it to operate elsewhere in the European Union. And finally, friendly societies have a mutuality generally has the backing of all the major UK political parties. It was a plank of the coalition agreement between the two parties who are in government at the moment. But the main opposition, Labour Party, is also very keen on promoting mutuality, and in fact draws its own origins from the cooperative movement way back in the past. So, if that all sounds too good to be true, there is some drawbacks. The first one is that most friendly societies operate with profit funds, which are regulated in an extremely restrictive regime, which isn't entirely appropriate to the way in which they are structured and constituted. And that is going to be made worse on the 1st of January next year by the introduction of Solvency II in Europe, which will bring further restrictions and ring fencing of funds. There is the risk of contamination through unpermissible investments in existing friendly society funds. Most of them, in fact all of them, invest to a large extent in interest-bearing bonds, and also they will have investments in other industries which are not approved from a Sharia point of view. I know there is a debate about the permissibility of windows, but certainly in the start-up phase, mutual insurers would have to rely on capital support from existing funds. And in practice, those friendly societies which have looked at launching a Sharia product here have found difficulty in finding suitable Re-Takaful operations to support the capital they need. So what's the way forward? Well, there is a legislative change which is in the final stages of going through the UK Parliament, called the Mutuals Deferred Shares Bill. And that has been generated by something known as Project Chrysalis, the attempt by the industry to grapple with some of the restrictive regulatory regime that I've mentioned. The bill is a collaborative project between the industry and government, and I was privileged enough to be involved in the drafting of it and have seen at first hand how enthusiastic government ministers have been in backing it. That means that, God willing, the bill will become law. It's going through its final stages in the legislative process early next month, in time before the Parliament dissolves for the general election on the 30th of March. And what it's all about is that it's a very short act. It's a piece of enabling legislation that enables regulations to be made, which will have all the detail. It allows mutual insurers to set up what will effectively be permanent share capital. That capital will be fully transferable. There will be restrictions on voting rights, particularly in relation to a demutualisation, and part of that is that it'll be on the basis of one member, one vote. But there aren't any restrictions on how investors can be remunerated, and therefore that can be structured in a Sharia-compliant way. So, what are the next steps? It's a matter of gathering investor interest in these shares, which might be used to establish a fund to launch a Sharia-compliant product, and then going on to draft the regulations which will implement the bill when it becomes an Act of Parliament, which will involve the investors themselves, industry representatives, the Treasury, and the financial services regulator. So there's a lot of scope for moulding this in a way which is going to be Sharia compliant. So that's a very brief run-through of this, what I think is an exciting opportunity. If you'd like to find out more about it, those are my contact details. I'm currently with the law firm Hogan Lovells, but as from May, we'll be setting up in a consultancy practice, M&G, which I've given the details on the slide as well. So thank you very much.
Thank you, John. Clearly, you have done a lot of work in terms of putting up an interesting proposition, and I wish you well towards that front. We have managed to claw back some time for this session to allow question and answers from the audience. Brother Iqbal, 5 minutes maybe? Yeah. Please.
Thank you, Ramli. I have two questions. The first one, you mentioned that there is a focusing by the investor, the investing community on maximum return strategy. My question, is there any room for private equity fund to be invested into by the Takaful operators? And my second question is for John. How can a friendly society, which is by definition locally, regionally based, could use the passporting to work on other European countries? Thank you.
For the first question, the potential opportunity for PE fund to be offered as another new offering. Panel members? Dato'?
Yes, certainly. Private equity funds is actually available for any investors, including Takaful operators. But the challenge for Takaful operators in private equity is the illiquid and also the higher business risk that they are entering into. So I think in the interest of protecting contributors' money, we have to be careful in the percentage of risk that is being allocated into that particular asset class. But I think Brother Alberto's question was relating that to your maximum return strategy. So you might want to link that into the maximum return strategy, because this thing about maximizing return strategy in the current scenario, I mentioned about the emerging market, that they are not created equal. Some, if not most of the emerging market are now confronted with double deficit. At one time, we were very much wrapped into a flavor called BRIC, Brazil, Russia, India, and China. And even we created the word MINT, M-I-N-T, which is Mexico, Indonesia, Nigeria, and Turkey. So that kind of grouping doesn't exist anymore for you to achieve a maximum return strategy. There is violent outflow from these companies, from these countries, emerging market. So the best now is actually more on a stock pick of different countries, if you're talking about equity, instead of putting it into a pool of jurisdictional portfolios.
Yeah, thank you, Dato'. If I just may add on, private equity fund, we saw proliferation of that fund 3.5 years ago in Malaysia. Started as very much a thematic play, and then it lost its luster as you could see some erosion in values, especially from a risk overlay perspective that did not quite achieve the goal from a portfolio construct angle. So we saw that there has been efforts to sort of make a comeback Recently, there was a launch of infrastructure fund by Turkey. Everybody is now trying to develop itself as an Islamic financial center, and Istanbul is one. And part of that agenda, the authorities is launching a $1 billion infrastructure fund to help fund that initiative. So, we are seeing, pockets of interest coming back, but the longevity to me remains a question when you look at the overall, risk perspective of having PE funds as part of your asset allocation strategy. But that's just my point of view. That's right, yeah. That does not quite help in terms of delivering the investment objective to begin with. Yeah. To the second question on friendly society, John?
Yes, friendly societies and mutual insurers generally have drawn their origins from specific regional areas, and that's reflected in the names of some of them as Liverpool, Victoria, Royal London, the Manchester Unity, Friendly Society, and also from faith groups. There is the Wesleyan, which is a branch of Christianity, and the Rachabites as well have got faith origins. And they lend themselves particularly to working within those enclosed smaller geographical areas or faith groups, but also have the potential for much broader expansion, and particularly in Europe through what's known as the passport rights, which are a common framework of regulation that allows a insurer which has been approved and authorised in one country to operate in any of the countries of the European Union with some further regulation, but actually quite minimal. The prudential regulation is dealt with by the home regulator.
Please stop.
Can you give me a practical example? Friendly society, not called friendly society, but the structure of this one. So how can a friendly society be somewhere in the UK? I know the passporting rule and regulations, okay, but how can a society based in the Liverpool area, for example, which draws resources from this area, go and work in Lambert, for example? How practical is this thing?
There are no real barriers to doing that, and the proof, I think, is in the way in which it has in practice happened. One of the friendly societies in the UK in particular has been particularly successful in expanding overseas throughout the European Union, and that's a very small society, a very specialist society providing a form of private medical insurance called the Exeter Friendly Society, which sort of limits it to a relatively small town in the southwest of England, but in fact operates and draws its members from across the European Union. It has a large number of members in Spain, I believe a significant number in France also, and also in Cyprus. So it can be done.
I think, sorry, Brother Akub has got a earlier question. Yeah, go ahead.
Whenever we talk about investments and investment profiles, the fundamental issue that we hear is maximizing returns. My question would be, should we not be maximizing rather than the returns, but the understanding of the liability profile, the risk volatility, and the capital haircuts we take on high risks, emphasizing that
rather than maximum returns, because I would suggest that in the business that we are in, we should be looking at equitable returns rather than maximizing returns. That's a question to the panel. How do you see that?
Vindesh?
Sorry, that's a very good question. I don't think we're advocating maximizing returns. I think it's in the isolation. I think it's about maximizing returns with an asset allocation mix, which takes into account duration of liabilities, the risk-return profile, and the regulatory framework. And within that context, the argument is essentially that certain asset classes enable the Takaful operator to improve its returns to shareholders. So I think it's very important that if the message was coming across, let's just maximize returns, that is not, I think, the message we're trying to give out. I think it's about maximizing returns within the framework that the operator faces across those elements of an investment strategy. So you're absolutely right, and that is exactly what we're saying. And I think the point we're really making is different asset classes, such as private equity, such as real estate, enable returns to be improved over and above just investing in, say, sukuks and equity.
I think, if I may, there's a mutuality answer to that question as well, in that in a conventional proprietary structure, there is inevitable shareholder pressure to maximise returns. But within a mutual structure, you have the possibility of the members coming together with different objectives, and management being given the freedom to pursue those ethical objectives without the shareholder pressure to maximise the returns.
Mm-hmm. Okay. Dato, you have a response to that?
I couldn't agree more with Brother Yaacob, but I come from the perspective of enhancing shareholders' value as well, and Takaful operator is very much managing, the CEO of a Takaful operator would very much be looking into managing the capital at the end of the day. If the investment from the investment return from the Takaful from the contribution pool isn't giving that sufficient surplus, then the capital will actually, need to be topped up, for example. So there has to be a balance, not like Brother Bindesh said, not exactly maximizing the hold of your investment initiative, but to make sure there is a balance, to make sure the return on equity is the biggest that would push the shareholders' value.
Brother Shakib, you had a question?
In fact, my question is for Mr. Bindesh. You were saying, to consolidate the fragmented pools in a consortium, talking about real estate. Honestly speaking, I'm very skeptical, as usual, how can you pool, let's say, different companies, different Takaful operators, knowing that when a Takaful company, when a startup Takaful company want to invest first in real estate, automatically they will acquire their building. And then they will acquire some of, let's say, their group real estate. This is how things, happens in reality. But now to convince them, to invest in a pool, I don't think that they will do it easily, knowing that we have different companies having different investment strategies. Some companies doesn't have any investment strategy, to be honest. This is number one. Number two, you have different regulation. For example, if you take, let's say, North African countries, you cannot invest in a pool in Malaysia or in Europe or whatever, It has to be local. This is something which is limit, the pool. And finally, I do not understand how can real estate investment, how can this be liquid? Honestly, for me, real estate investment is not that liquid. And if it comes to my experience, I'm not an investor, I'm not an investment specialist. Honestly, you know, I'm very skeptical about real estate, about equities. Very skeptical. Thank you.
I think you make quite a number of good points. First of all, about consortiums of investment. I don't pretend there aren't challenges bringing that together. I think that's the challenge for the industry. It has to come together, because unless you do that, what I'm saying is you become very idiosyncratic in your risk. That means exactly what you described. A Takaful operator goes and buys one building because that's what it can afford, and essentially it's allocating all of its real estate investment into one risk asset. That doesn't make any sense, and I totally agree your skepticism in that context of investing into real estate. I totally accept the point, and I did say that there are regulatory challenges to be overcome. There are different investment philosophies, and some don't have any, as you said, and different duration of liabilities. But unless the industry does make an effort to come together, those challenges will always remain. And it's worth reflecting on the conventional insurers and pension funds. That is exactly how most of them invest into real estate, not into a mutual investment pool, but into private sector ones which have been created over time. And the other point I was making is, I'm not advocating a significant proportion of assets of a Takaful operator into real estate. I mentioned the statistic, it's generally around 3%. It does enhance returns, and it does provide a long duration of cash flows because of the nature of the asset. They are buildings, they are rented, they create very predictable cash flows over a long duration. So I totally accept the challenges that you have put forward. I'm not saying they're easy to overcome, they have to be overcome, but I do personally think that real estate does have a role to play, and it is a role, it is not the majority, within the contribution pool for investments.
Which is two comments. Brother Shakib, very good question, but I'm going to approach it from a standpoint of executable action plan on this suggestion. We embrace those challenges, the challenges of different investment agendas of all the fragmented Takaful outfits. But what we are trying to say here, there are currently existing funds. For example, the easiest I can remember is the three Dublin funds that is available, offered by CMB Principal Islamic. It's a global equity, it's an emerging market, and it's an ASEAN fund. So whilst you are concerned on the jurisdiction challenges, a UCITS compliant fund has got the highest and the most robust risk imputed into that fund. So if 4 or 5 of the Takaful operators are actually keen to invest in, say, an ASEAN equity fund in the Dublin series of CMB Principal Islamic, so that would resolve your jurisdictional issue, that would also resolve the different investment agenda. And if there are Takaful operators who are interested to invest in global equity, there is an existing fund, which is also in Luxembourg. I mean, there are many fund managers that is registering the Islamic funds in Luxembourg or in Dublin or in global platforms. So you just need to choose what your investment agenda is, invest in those existing funds, and that fund is actually already in a pool of other Takaful operators and other investors. So that would, I think, from an actionable standpoint, in a way resolve your concerns and challenges. I hope it makes sense.
Thank you, Dato, for that nice pitch. Couldn't agree more. I mean, collective investment trust.
I'll send you the bill.
It's something we have pioneered, and to add to that point, we will be introducing a global sukuk fund as part of that umbrella under the UCITS platform, and this is UCITS regime 4, which is as robust as you can get. for passporting into the EU region. So if a global sukuk alternative that will give you also the ability to have a balanced portfolio as part of your asset allocation mix. Probably one last question, no? Can we? No? I'm sorry, brother. I've got a firm signal from Brother Iqbal to close the sessions. I hope you have enjoyed the session. It has been insightful for me as much as I hope for you too. Many learning points. And I hope being the first session, this can be a catalyst towards more engaging participation from you with the panel in the subsequent sessions. With that, if I may invite you to join me in thanking the esteemed panel, Dr. Noripa, Bindesh and John. Thank you very much. Thank you for your participation, and I wish you a pleasant day ahead. Thank you.
We're very lucky to be basically joined today by three very distinguished and knowledgeable people, I think, in the field. We have a mix of practitioners, academics, Sharia scholars. So I think we're going to get a very interesting perspective across the three speakers about the different issues. And I think, as I alluded to already, the different jurisdictions around the world present different challenges. So I think it's not one size fits all, but we'll be getting an international perspective on the perspective and the potential of pensions and Takaful-based products around the world. So without further ado, we've got till about 11:30. I'm going to introduce our first speaker. That's Safdar Jaffer. He's the MD and Consulting Actuary of Milliman. Safdar I've seen around over the years in these Takaful summits and master classes. I know he used to be at Swiss Re before and now has a wealth of experience, especially in the Middle East and in Africa, in advising on Takaful-based products. So Safdar, please take the stage.
Thank you very much. Good morning and salamun alaikum. Just a little story before I start. The inspiration of a little publication that we have done on pensions came from this conference. It was Iqbal's idea 3 years ago, I believe 2 years ago, 2012. When we presented the second Global Family Takaful report. I can see some of them floating around. That was produced more than 2 years ago. I shared a platform with Sheikh Faisal, and the subject was on pensions, and it was Iqbal's vision that let's talk about it. Although we don't see annuities, Sharia compliant annuities out there, we need to start talking about it. And Faisal presented an idea on longevity sukuks. So after that session, he said, why don't we do something together? And that resulted in a humble and modest report that we have produced last year, exploring pension Takaful proposition. Milliman worked in conjunction with Sheikh Faisal to produce this report. And this is literally the first publication that you may see on pension Takafuls, but it's, as I said, a humble start to hopefully a vision that will materialize. As we heard Ajmal last night, if you believe in something, continue to persevere, one day something will materialize. So with that, I begin this session. What I would like to cover is literally just to give a quick introduction. I will be covering the aspects of the report from a demographic perspective in terms of the potentials out there, the demographics of the Muslim communities, and aging and longevity risk in itself, and then give a few views towards the end of my presentation. So, I mean, historically, Muslims have relied on social arrangements to support them during their old age. We have a culture of joint families. The elders live with the youngsters, and the sustainability of our parents and grandparents is on the current generation. But things have changed. Things are moving very fast. As you know, living in today's environment, the joint family system doesn't exist as robustly as it was, and hence the whole question around how are you going to support yourself when you reach that old age. You used to have the Bayt al-Mal concepts, the Islamic treasury supporting the aged, that doesn't exist. And then you have the endowments and awqaf, and again, that in today's world is difficult to find. So, it comes back to that point and that tradition of the Prophet where he said, tie your camel and put your trust in Allah, is how do you cater for your needs when you retire? This particular slide that you see was a conference. It actually emerged from a conference that was organized by Swiss Re, the Future Human Longevity Breaking the Code. And this conference was organized in 2011 in Zurich. And you had different stakeholders out there, and the conference reached that conclusion that the onus of that longevity risk is literally now in the hands of individuals and the insurance industry. The government is, through the state pensions, is reducing or rather passing the buck to the individuals to reduce benefits. The employers, on the other hand, with the traditional defined benefit schemes is moving away. It's too expensive to manage that, moving away towards either closing those schemes or giving incentives towards a defined contribution scheme. So the onus shifts back to the individual. And everybody wants literally to transfer that risk to the insurance industry. So this is a challenge but an opportunity for us as well, particularly for Takaful operators, to try and drill down and see what can we offer out there, as the entire focus of both the state and the employers is towards the private sector. So this three-pillar concept of retirement funding, where pillar one is the state, where you provided the minimum pension, and which is publicly managed. The pillar two is the occupational pension schemes, where the employer and the employee contribute towards their future. And then ultimately you have the private pensions. Now, at the moment, as far as the Takaful space is concerned, and I unfortunately was not there at the master class, but the point really is that most of the products out there in the Takaful space are literally saving-oriented products. They are not annuities. They are not actually pension products. They may be labeled as pensions, but they are very similar to wedding plans or endowments or sort of educational saving-oriented plans with the label of retirement. So this is where the challenge is. Now, just to share a few demographics with you in terms of what's out there in the Muslim countries, and we have selected 5 countries in our report. Malaysia, Indonesia, Pakistan, Bangladesh, Turkey, and Saudi, 6 actually, the populous Muslim countries. I don't want to bore you with all the statistics there's lots of numbers out there, but just focus on the median age of the population. It's a very young population out there. The average age in Turkey, as you can see, which is in fact the highest over there, is 30 years of age. The average age in Pakistan is 22. So you can clearly see there's a very young population out there. And the next 2 columns there, the old age support ratio. The old age support ratio effectively is the number of people aged between 15 and 64 over the number of people over the age of 64. So the younger population sustaining the older one. And you can clearly see that in 2012 that support ratio was floating around 11 or higher, and projecting that to 2050, literally you are talking of an average of 5. This is serious, and this is an average across all the very populous Muslim countries. And compounded to this challenge are the last 2 columns, where you see the life expectancy is increasing. And people are obviously more health conscious. The fact that the health industry is prospering and people are living longer adds to the challenge. So you can clearly see, whilst the life expectancy is pretty high out there, the retirement age is still relatively low, below 60 in some countries. And that challenge continues. Some of the other sort of statistics, I mean, here I don't want to share all of these with you. As I said, that there should be a report out there. If you don't have copies, then there are a few copies left if you want. In terms of the numbers out there, the active civil servants and government pensioners in selected Muslim countries. So this is just giving you a synopsis of the current active civil servants versus those who are government pensioners. And again, you can see in Indonesia and Pakistan, for example, the numbers are extremely high. If you look at this particular slide, the government pension benefit payments in selected majority Muslim countries, again, you can see there, what is interesting on this slide is the annual growth. The annual growth of pension benefit payments made by various countries, the average is around 12.5%. Turkey and Saudi Arabia in particular are very generous with their pension benefits. So you can clearly see that Turkey and Saudi Arabia stand out. But how are they going to sustain it in the longer term? That's the challenge out there, which obviously an opportunity for us to reflect. In terms of assets in government-managed private sector pensions, Malaysia stands out by far. So clearly the awareness of managing that is more prevalent over there, and you can see the numbers speak for themselves. Again, I'm just brushing through these numbers because of time. The active participants and pensioners in government-managed private sector pension schemes, as you can see there, again, these are large amounts of money. And on this particular slide, what is interesting is, again, the fact that you have Indonesia and Turkey with pretty high active participants relative to the pensioners. This particular slide talks about the pension benefit payments in government-managed private sector pension schemes in selected Muslim majority countries. Again, that's the annual growth in the government-managed private, the private sector pension benefits, and this is even higher than what we saw on the government front, and that's an annual growth of benefits of over 16%. So to put all this together, really, the key message that I want to drive here is that there is a clear need for pension solutions out there. Now, I want to leave you with a few points here before I hand over to the next speaker, and that is that these two key points that come out in terms of the accumulation phase and the decumulation phase. The accumulation phase is easy. How do you manage these assets? Yeah, we just talked about the sukuks out there or the other instruments that are Sharia compliant. Okay, the returns may not be brilliant, but at least it can be managed. It is Sharia compliant. There are solutions out there. The challenge really is the annuities. It's the annuities. Now, I just want to end here with a few points and few thoughts because I'm not a Sharia scholar. I cannot comment on annuities per se. Faisal has provided some input in the report as a kind of research where there are potential solutions out there. To my knowledge, I do recall a presentation that Zainul had made a few years ago where he did talk about some solutions in Malaysia, the state provident fund. I don't know whether that exists anymore. It was stopped, I believe, after 18 months. No? I mean, it appeared to be a successful model, but it was stopped. And I'm yet to hear any other successful model out there as far as Sharia compliant annuities are concerned. So that continues to remain a very big challenge for the industry, long-term sukuks. The other is the model, the value proposition of pension. That needs to be defined very clearly. The third is the challenge we find here in the West and in Europe in particular with Solvency II. because under Solvency II, additional capital is required to back annuity liabilities if longevity risk cannot be hedged effectively. So the whole issue of hedging comes up. We heard Mahmoud Akub asking a very brilliant question around how do you manage the volatility on the liability side. You know, when he talks about hedging, Sheikh Taqi Usmani issued that famous ruling that shook the market when it came to hedging, that it's not permissible under Sharia. But this is something that we need to revisit seriously. There are potential academic discussions out there that talk about managing or replicating portfolios which may not be explicitly hedging, but implicitly using mathematical models to manage a portfolio and the volatility of the underlying investment risks. These are just a few food for thought out there, but the bottom line really is that the opportunity is enormous. We are only touching the surface here, and there's a lot of work to do. So with that, thank you very much.
Thank you, Safdar. That was really fascinating, especially the sort of insight into the majority Muslim countries and the stats coming out from there and the need for pension-based products. I'm conscious of time, so I'm going to swiftly move on. We're going to have Sheikh Faisal Manju now come on stage to do his presentation. He's done a lot of research in this area of Islamic pensions and Takaful, and hopefully he'll share his insights with us now. Thanks, Sheikh.
Fighting for time, starting. Okay, my topic is, as you would see, so far what everybody has been talking about is a holistic approach, and I want to approach atomistically. That is, I'm going to take one small problem and try to blow it out of proportion. The reason is my analysis of Islamic finance since 1997, I'm in this field, I see that there is a shortcoming from the legal side. The little knowledge I've got, I want to share it with you. And I've chosen one very specific topic, the nomination clause. And this has been debated in Malaysia. In England, we haven't debated it. In France, I was in a conference in Strasbourg University last year. It was a hot debate as well there. So, before starting, as a humble student of law, it is a disclaimer. Whatever I say here, don't take it serious. Okay. So basically, we're going to talk about life takaful and pension contracts, what they are actually, comparative legal position regarding the nomination clause, and some fiqh debate in the Malaysian law, which is leading it. So what is a nomination clause? All right, yesterday I asked a lawyer, she was looking at me in my face. What is a nomination clause? Okay, basically, very simple. When you have your life takaful, your pension, you will mention, in case you die before the maturity, that money, to who it goes. Okay. So you nominate somebody, there's a nominee there. But why should we discuss it in this conference? Right. There are research, especially for countries like UK, the bulk of your estate, many people don't realize it, is the pension lump sum, the life. If you look at UK, it's about 1.5 million you can have as your pension. Okay? So this gives you an idea. Your house is about 200,000, your car is about 10,000. But ultimately, your life lump sum, your life insurance, takaful, or your pension is actually your real estate. So we have to ponder on that specific issue. So what's the life insurance? Okay, it's a contract between the insured and an insurer or assurer, where the insurer promises, and this is something I want to draw your attention, it's a promise. And this is a big issue for me as a humble student of Islamic finance, when the word promise often is being used for wa'd al-tizami, but when translated in contracts, they're using the word undertaking. You won't see the word promise. This demands full debate. Sheikh, we have to discuss this seriously, because the law firm in London are using the word undertaking for wa'd al-tizami. Right, and there are case laws on that. And I've got professors sitting on the panel with me who will bear with me. So it's just a promise to pay a designated beneficiary a sum of money in exchange for a premium upon the death of the insured person. Okay. So the policy holders are encouraged to nominate someone who will be the recipient of the funds. Now, how does this differ from a pension fund, a pension plan? It is the opposite of life. Pension usually starts after you retire. life, maybe you get it before you die. So this is a type of paradox, but it is ultimately a big lump sum we're talking of. So what is the legal position in England? Very briefly, I'm just chasing time here. It does not fall under inheritance law. Under English law, you can read the slide later on. It's a clear-cut case. The trustee got a mandate about it. You give a letter, it's for pension, and it's not mandatory to make it an inheritance issue. So it's a clear-cut case in UK law. What if you make a will about it? That is a question. As you know, those were in UK last year, the Law Society proposed Islamic will, and you know what happened in the newspaper. I don't have to talk about it. So you can see already, if you are to convert that into a will, what will happen in UK. We got to debate it. I don't think there's no solution, we have to debate it. Under French law, last year there was a colloquium on that in Strasbourg University in June, and I happened to be there. And the Sharia scholars, it was at the Faculty of Law, Strasbourg University, one of the leading universities in Europe, producing at least 3 Nobel Prize winners already. We were debating the whole nomination clause. Under French law, both would be permissible, right? Though, as a general practice, they will say, okay, it's a nomination, it goes through. But there is possibility under Napoleon Code and so on that you can accommodate the inheritance part of it. You make it an inheritance issue. So you either you give this money on trust, or you make it or you nominate somebody where it become a gift. Under the Malaysian law, under the jurisdiction, the nomination clause, the fatwa issued in 1976, which considers a nominee as a trustee and not a beneficiary. This is very important. This is a stating fatwa up to since 1976, but the Takaful legislation is contradictory. We'll come to that in a few minutes. So the question here is just big lump sum. If a person dies, if you make a nomination clause, a debate among the Sharia scholars and lawyers and the legislative provision in different jurisdictions, there are various angles we can analyze it as we discussed. So is it a hiba? Is it a gift? So when you make a nomination, if you die, that big sum of money is a gift to the nominee. Or is it a wasiya, a will, that is up to 1/3 you can give? Or is it an inheritance, which is a highly regulated branch of Islamic jurisprudence? That's a big debate. So what are the fiqh debate? Let us take the case of Malaysia, where there have been a lot of academic papers on that. Under English law, okay, no problem. Malaysian Takaful Act 1984 used the term proper claimant as a recipient of the Takaful benefits. They use the word proper claimant, which needs to be ironed out. And then the Insurance Act, 1996, a nominee is always a trustee. That's the Insurance Act. And the latest act in Malaysia, the Insurance Financial Services Act of 2013, a Takaful participant may nominate an individual to receive Takaful benefits. So do you see the different issue here on the legislative approach? This is why many people in Malaysia, including from INSIEF, which have benefited some article from some professors, lecturers in INSIEF as well. So the scholars differ on the proceeds. So first opinion is that scholars differ on the proceeds of Takaful and of course your pension as to whether it should be subject to inheritance or can it be gifted. Bank Negara Malaysia resolved that Takaful benefit can be used for hiba, that is a gift, since it is a right of the participants. Therefore, the participants should be allowed to exercise their rights according to their choice. That is one approach. But remember, Bank Negara is not the High Court. Keep this in mind, neither is the Parliament. Dalla Baraka states, it is also permissible to distribute the payment to a particular individual as specified by the participant on the basis that the benefit is a contribution of other participants to the beneficiary and not his estate. You can see the inclination of it to be a gift. The fiqh issues about being hiba, how to make the hiba of something which is not yet realized. You are making somebody a nominee, but you haven't realized it's just an actuarial value. Those in the industry knows what I'm talking. Those millions that we're talking, or thousands we're talking, is just an actuarial value. Upon maturity, only which is going to be realized. In a valid hiba, the ownership is transferred to the recipient. if it is a valid riba. Those which are defect will understand all the jurisprudential issues regarding hiba. What the recipient does, if the recipient dies before the policyholder, what happened to that? This is another issue we have to look into. Does it become his or her estate if he dies before you? Hiba attributed to all after death is a will. Can the hiba be made for an inheritor? So these are practical issues which you got to look into because it involves a lot of money. We cannot just put a simple nomination clause, and when this matter goes to court, we are facing problems. The other groups, another group opines that a nominee is just a trustee whose duty is to receive the benefits and distribute them according to miras law, law of inheritance. So the objective of takaful may not be achieved. A non-dependent inheritor may become rightful of the money when the non-inheritor dependent will get nothing. This is a practical problem if we take that route. An element of riba, it is argued by some scholars also, there is an element of riba in there. And on what basis does the money form part of the state? It is not yours yet. It's promised to you. You'll get it in 40 years. Okay. Okay, the position in UK, which opinion should we adopt to be adopted for takaful and pension companies under English law? As it stands, it is a hiba, if I can use it, but it can be debated in court. There is no legislation as far as I'm concerned on that. It would seem that the hiba approach is more appropriate in my opinion. That's my opinion. You can differ with me. Law of the land based on consistent case laws. The money accrued in the pot is for the person concerned as it is a personal right. It is a personal right at this moment. And actuarial value, especially in case of pension, it can be construed as hiba, bishart. Now, one of the things which I feel is important, which Malaysia will have to take a lead on that, is, as you know, in Malaysia, the Central Bank Act was amended to give authority to the Sharia Advisory Council to pronounce on fiqh issues, and that fiqh issues is implementable in court. If we can create a case and this be sent to the SAC or Bank Negara, and Bank Negara can finalize this problem, we'll have a precedence for other jurisdictions. But it has not happened so far. We are waiting for the case law in Malaysia to guide us. So for further reading, I'm just leaving two articles for you to read. One is from INCF, so hopefully you'll benefit. Thanks. Jazakallah.
Thank you, Sheikh Faisal. Again, a very particular issue brought up there, but I think for the right people in the audience, something to take up. And these are the sort of things that we need clarification on to move the industry and products forward. Lastly but not least, Professor Robin Ellison, I would like to invite onto the stage. I was reading Professor Ellison's biography. I haven't had the privilege of meeting him before. Very, very impressive indeed. A practitioner, a lawyer, someone that specialized in the pensions area and has a wealth of experience. So I'm very much looking forward to hearing from him. Thank you.
Good morning, everybody. I want to thank the organisers and in particular Sheikh Manju for inviting me this morning. It's a great honour to be here. I'm going to talk about something that nobody in this room is interested in at all, which is the British pension system. Just before we start, Safta mentioned that the ratio of workers to retired people in parts of Muslim jurisdictions is moving from 11 workers to every pensioner to about 5, and this is a great disaster. I have to tell you, in the United Kingdom, it's at the moment 2.5, and it's going to 1, if you look at the projections. And it may be to do with the fact that Englishmen just don't have babies. I don't know what the reason is, but we have a bit of a disaster going on here. If you walk the streets, don't stay in London, but if you go outside London, you can see we are an aging population. Anyway, that's the point. Now, what are we talking about now? A couple of things. What is happening to the British pension system that may offer opportunities to produce Sharia-compliant pension systems? And there are things happening. The changes haven't happened because of the desire to produce a Sharia-compliant system, but they may have the incidental effect of that. What I show on the screen here are two pictures you probably can't see, two pictures of the UK Minister of Finance, called the Chancellor of the Exchequer, George Osborne. Some of you may know the name. On the right is what he used to look like. He had a bit of weight on him and he didn't have a decent haircut. And his wife got hold of him one day and made him have a haircut and lose some weight. And because of that, he's changed the pension system. And we'll see whether it's the good news or bad news. It's rather irritating. So I want to look at the changes and the implications of the changes in the UK, which are going to take place in 6 or 8 weeks' time, and what the implications might be for producing Sharia or Takaful compliant systems. This guy here on the right is the pensions minister. He is the first. We used to change the pensions minister in the UK about, on average, every 9 months. This guy's been here 5 years. The election's coming up in May. He may not survive. But he's done some interesting work. One of the things he's done is, you won't be able to read the slide. The slides are available on the website, so you can look at them in detail then. But the bottom line is, from over the next few years, we are producing a pension for everybody, whether you work, whether you don't work really, of about £150 a week for every single human being who gets to the age of 68. So it's very simple. That's number one. Number two, we're moving away from dependence pensions. So we don't have widows' pensions in the state system anymore. The wives, the husbands, whatever it is, they earn their pensions in their own name. And if there's two of you living together, you get 2 pensions. So it's a simplification of the state pension system. And because of the simplification of the state pension system, which is now going to be much simpler than it has been in the past, they've relaxed a lot of the rules relating to private pensions. And as we were talking about on the platform, we've got an aging population. Pensions are really important in the UK. We're looking at, in the next election, half of the voters, the people who actually vote, will be over 55. So they're worried about their old age. There are some problems with the private pensions. You're not allowed to have, shortly, more than £1.25 million worth of pension. Sounds a lot of money, but it's about £35,000 a year of income, which depends on your social scale. And if you have more than that, then there's extra tax on top. So there's a discouragement of having more than that. But in particular, what is being removed is the obligation to have an annuity. Now, as we'll see in a minute, the annuity problem is the one that's causing issues for sure. Before I get on to that, I just want to mention a couple of things. What we're not sure is what the tax rules are going to be over the next few years. You need to have a proper pension system in any country, what is called fiscal neutrality. You don't want to penalise people for providing for their old age. And at the moment, we have a system that isn't terribly good in the UK, and it's not very good elsewhere. Secondly, the regulatory framework is impossible. There's about 80,000 pages of pensions regulation in the UK. Keeps me in business. I have a wife and children and a mortgage, and I want more regulation. But it's ridiculous. And one of the things we're looking at is getting rid of some and most of that. You can see when you get the slide, you can see the increase in regulation over the last 50 years. It's become excessive. And the third thing we don't know is, now people have been given the freedom to do what they want at retirement with their money. What will they actually do? Will they buy, as the pensions minister said, a few Lamborghinis, well, maybe one Lamborghini, or will they save, will they spend? Nobody knows quite how people will behave. Now they're free to manage their retirement as they wish. Now, I'm not going to go through this slide because I'm not a Sharia scholar at all. Anything I know, I've learnt from Faisal, and we've been working together for a few years, and I've learnt more from him than he has from me, but I don't pretend to know that. All I know is pensions are a problem for Islamic scholars, and I put some of the problems on there. And the question is, are there solutions emerging? And the answer is, yes, there are, and they're coming from unusual situations. But the solutions are, number one, in the UK in particular, not in the rest of Europe, but in the UK, to get rid of the annuity requirement. In other words, that you have to take this gamble with an insurance company, and the insurance company hopes that you will die pretty quickly, and you hope that you will live a long time. That gamble is no longer obligatory. And that's an amazing change. It's a really 180-degree policy change for the UK government, and the unintended consequences, we don't know what they are yet. Secondly, I'm not going to go into investment issues in Sharia law. Those have been explored for years and years. That's not for me to look at. I just want to mention one thing, though. In that the UK, because we're members of the European Union for the moment, you're allowed to move your pensions between member states. So that if you're French or Italian or German or Spanish or Dutch, whatever, where there are annuity requirements, you are now allowed, if you wish, to move your pension rights to the UK, where the annuity requirements do not apply. So the UK is oddly a Sharia-friendly state, probably the most friendly Sharia-friendly state in the European Union. And since people can move their pension rights, one of the issues is, are people going to start, if they want, to move their pension rights to the UK? Not just Muslims, but everybody who wants to take their money out of their pension scheme, just ordinary, across the board. So there are cross-border opportunities. And the other thing that's beginning to develop is a third thing that nobody really expected, which is non-pension pensions, which I know sounds ridiculous, which are things called book reserve schemes. And they are a different kind of system of retirement, and they work for companies. So if you work for a company, in the middle of the 19th century in Britain, making cotton or wool, you worked in one of those factories, there weren't pension systems. This is before pension systems were invented. The company said, in a very philanthropic way, we will look after you in your old age. So while you work for us, we'll pay you a salary. And when you stop working for us because you're old, we'll pay you half salary. And that worked pretty well, except that sometimes the company went bust. And since that time, we've developed systems which are probably not challenging to Sharia law, which protect the company's promise rather than the individual's promise. And the way you structure that may offer opportunities. So it looks like, I'm going to sit down in 2 seconds, it looks like it's over the next 2 or 3 years, it's possible that Sharia-compliant pension systems can be developed because they avoid all the usual technical problems which face those kind of arrangements, in particular using a book reserve systems. And in the UK in particular, we are a jurisdiction now which is very attractive to developing these new systems because of the withdrawal of a lot of the regulatory framework. So thank you very much for your patience.
I'm particularly interested in that because as a UK-based practitioner, financial advisor, I advise on UK pensions and Sharia-compliant pensions at that all the time. So I was even fascinated with the book reserve system, so I'm going to look that up and Professor, listen, take you up on that. Now, we've got, let's check the time, we have 3 minutes, but maybe we can stretch it by another 3-4 minutes. So we've got the chance of asking our distinguished panelists some questions. So can we have some questions from the floor? Iqbal, you have the first right, because you're... Get the mic to Iqbal.
So this is to Maulana Faisal Manju. If you are inclined towards hiba for the nomination clause rather than inheritance, does that mean that this question of, for example, the share of the partner through hiba can overcome the strict inheritance proportions which are laid down in the Sharia? For example, the wife's share through hiba can be anything. It's not the fixed 1/8 or whatever it is laid down.
Thank you for the question. I think it's a very practical question, especially if there's a divorce. I push it a bit further. Yes, I mean, I'm inclined towards the hiba. The reason is very simple for me. It's more stable. The hiba is more stable, number one. And also, we can push the debate further. You can make the hiba be shart with a conditional hiba, which is, there is a provision in the Sharia where you can lay down your conditions. I don't know how the law will look at a conditional gift. I don't know about this. Regarding the inheritance issue, I think you will bear with me, even in UK, the law tells you that inter parte, within the parties, a husband and wife, there's a lot of facilitation from the law. And I don't think, unless you got 4 wives, coming back to your point, but if you got 1 wife, that should be okay. It should be okay if you got 1 wife, don't worry. If you got 4 wives, then you have to debate it a bit more.
Anyone else? Yeah, back.
Just a short comment.
Those who are interested can download my paper on nomination and hibah issues in Takaful, which I have written or presented in the Israel Islamic Finance Conference on in 2009. So nomination and hibah issues in Takaful.
Okay.
Maybe Faisal Manju did not read that paper. Thank you.
Okay. Anyone else for a question? Are we out? No more questions? Going? Gone. Okay. It's exactly 11:30, so there you are. Timing was perfect. Thank you again to the panelists for their valuable contributions, and please do show your appreciation for them.
Bismillahir Rahmanir Rahim. Assalamu alaikum. And still it's 10 to 12, so I can say good morning. Ahlan wa sahlan. Sabah al khair. My name is Shabir Razvi, and I'll be moderating the session today. I hope those of you standing around, please do join us speedily, because I think this particular session, like all the others, would be quite informative, useful, and I trust something for us to think about. As Brother Iqbal has kindly asked me to do the session this year, the same session as I did last year in Abu Dhabi, those of you who were not there, the whole program for this 2-3 days has been to rethinking the Takaful model. And I think the whole concept of rethinking, as I think the previous speakers in the other sessions have talked about, like my good friend yesterday said, it's not Kate Moss's model. It's a model that we need to sort of actually embrace and think about it, because we've come a long way, 30 years, more than that, so new things need to be done. So as the conference is being held in London, and I do want to sort of, symbolism is very important in any kind of business. That's why we have, if you like, trademarks. That's why we have mission statements. That's why we have all kinds of things in businesses, because it's the symbolism which actually ignites the model and makes people think. So today, what I'm going to do is follow a leaf from the Prime Minister of Greece and the Finance Minister of Greece, who have recently been elected, as you know, and they're bringing a new model to Europe, hopefully, of more equitable, more justice, and really thinking about in London, which is the prime center of finance, to evaluate what really means for ordinary people. So I'm not talking about something revolutionary or something which will sort of ignite the masses on the streets, but really to think about where we are moving as a society. And I think Takaful really, and finance, Islamic finance, provides that opportunity, whereby as Muslims and also people who are ethically conscious are thinking of a new model, are thinking of doing things differently, are thinking that we need to provide something for the vast majority of the public that can benefit. So I think what the Greek Prime Minister and the Finance Minister, Yanis, they don't wear a tie. So London is a place where the feminist movement started, and they burned the bra, not far from here. So I suggest today we cut the tie, so we have a different model altogether, so that symbolism is important. So symbolism is the key to it. And those of you who are happy to come and cut the tie, please join me here. Anyway, after that, today the topic, as you know, is on the potential for innovative technology and Takaful provision. Doing the research on the net, there was a report which was published last year, September 2014, by the Boston Consulting Group, and Morgan Stanley Research, which I'm sure some of you may have had a look at it. If you haven't, I suggest all of us who are operating in this space is worth looking at. It's about 150-page research, which talks about how technology is affecting the conventional operators. And as we are aware, that Takaful is only a very small part of that conventional. So if it's affecting the bigger space, where Takaful, what? I think 3% of the whole market is Takaful. 97% of the operators are feeling the tensions, feeling the challenges that are going to be faced by them if they do not embrace technology. So the recommendations in that particular report, I don't want to sort of go through all of it, but what the key aspects, I think, and I think my sort of panelists will talk about, is that the digital transformation journey that is taking place is how the smartphones and the tablets as an access of delivery to channel, cloud computing as a technology enabler, big data and predictive analytics for better underwriting control, and social media as a mass interaction tool. So these are perhaps some of the issues the panelists would address. So what we need to really, at the end of the day, evaluate is that obviously there's a cost, and there was a presentation at the master class how Salam failed, and one of the aspects was really technology. So any new operator that is coming into the market must really think about technology and how to use technology. And when I was in Abu Dhabi last year, and some of you were not here, and I'll give that example again, and I think that focuses the mind very much of what's happening to technology. Last year, January 2014, I gave a book, a colorful book, to a 4-year-old nephew of mine. And you know, the usual sort of book that's there, with beautiful color pictures and just 1 or 2 words, mummy cooking, we going, that sort of thing. And the child, and you'll be shocked, those of you who didn't hear this story would be shocked what happened. The child looked at it for 30 seconds, a minute, 2 minutes at one page. And I was really bewildered. I said, what, is he really, really excited about the color? So I asked him, what are you doing? And he says, Uncle, the page is not moving. He didn't know how to turn a page. He was rubbing his finger on the page, thinking that it will move automatically. So this is what we are talking about 20 years from now, those kids who do not know that pages turn on a book. So how do we deliver information? Information concerning life products, information concerning motor products, or whatever. Do we need to publish books and brochures, or do we need to send some kind of a cheap tablet which will have pictures moving and the writing going up and down? I don't know. All kinds of new areas will come in. So let me not take too much time of my guest speakers, because I know Faisal and others do want to say something much more important than I have said so far. So I would really request my guests to join me on the panel. Brother Faisal, Brother Iqbal, and Brother Dawood, please. Just a brief introduction, which I think is good for the audience. Everyone knows you very well. Anyway, Brother Dawood Abdus Sabur is from the USA. As soon as he opens his mouth, you'll realize that he's from the USA. I mean, nothing, I won't hold against that. I won't against that. He's a co-founder, partner, and director of Takaful Outsource Limited. And he'll be talking about thinking the Takaful technology, copy, stroke, paste paradigm. Please welcome Brother Dawood in a warm manner.
Okay, this is the next, okay. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good afternoon, good afternoon. In the time allotted to me, I want to talk a little bit about rethinking the technology copy-paste paradigm, I call it. And I want to thank the organizers. Iqbal, great job again, once again. Rhonda is running around here and doing a lot. This is my third seminar. Egypt, and then last year Abu Dhabi. One of the things that copy-paste, I can start off with copy-paste. Shabir was here last year, Faisal was here last year. The only one not here is Imran, who was also on this panel. So before I get to it, just to tell a little bit about what it is we do. Takaful outsource. And you hear this word outsource, and say, well, what exactly do these folks do? I'm an actuary. We have other actuaries who work with us. We have product development. My partner, Mukti, is a product development specialist. So we do pricing, we do product development, we develop policy documents for our clients, underwriting guidelines, the standard things. We have most recently been working with some startups in some of the emerging markets. West Africa, we have a client in Nigeria that we've gone through the submission of the application process to prepare for regulatory approval. And inshallah, we hope that will come soon. Also, East Africa, there's the same sort of thing. Most recently, we've been involved in Indonesia. Indonesia has now 43 windows, I'm sorry, and the government has a new regulation that these spin-offs, windows have to spin off. So we're involved in working with some of the opportunities there, as well as developing a new company, both on the general side and life side, the family Takaful in Indonesia. Also recently, we received an assignment in Bosnia to do the same sort of thing. This is a conventional company that wants to create a window first, and then from the window to a full-fledged Takaful company. So that's a little bit about who we are. Quite interesting, a few of the things that were mentioned, discretionary mutual that our friend Zainal mentioned, and right away my partner Mukti saying, hey, that's an opportunity for us as a service provider. We can get in what he's talking about in working with some of these things. So with that, let me move on to what we want to do today. Today's agenda, I want to talk a little bit some of the things I've mentioned there. The Jetsons, 50 years later. Technology is for everyone. Emerging technologies and insurance Takaful implications. Is Takaful different from conventional? Understanding customer needs through product design. A practical example I want to share with you, a really, I think, innovative, and I think you'll agree with me. The copy-paste trade-off curve that I have is number 6. Don't want to share with you too many numbers, and so unlike some of the other presentations where actuaries are really concerned about giving numbers, I'm not going to do that and bore you. Innovation and transformation, the age of the digital insurer, and then try to summarize on the conclusion. So let me start with the Jetsons. The Jetsons, who are the Jetsons? The Jetsons, this is a cartoon actually from the US, and the Jetsons, you see there in a flying car. The Jetsons always had such fun and wacky gadgets and accessories around the house. This was set in the year 1962. And so they had two seasons, 1962 and 1963 at first, and as a young boy I would run home and watch some of the reruns in the middle 60s. But this was ABC's first color TV show. And I thought this was interesting to start this way, being that we're talking about technology. But if I go from left to right, you'll see Jane is the wife there, and she has a robot helping her. And this is a humanoid robot, so the robot could actually cry and laugh. George is there walking his dog, as you can see, on a sliding or a movable walking gadget. The little boy, Elroy, there is being seen by the dentist, but he's been seen, he's not live, as you can see. There's a teleprompter, and he opens his mouth, and the dentist says, you have this. Jane spent a lot of time, like wives do, with their mothers and mother-in-laws, but she's Skyping with her in 1962. And I'll skip and go to the last one. In the kitchen, you see Jane there is cooking for her family, and the dog gets everyone gets their meal. But the interesting thing, and why this is fun to me now, is that I've lived to witness the fact that those early episodes of the Jetsons, that was more than 50 years ago, with the intention of picking out future technologies, exist today. And I've just go down the list there, the televiewer, you can see, video chat, we Skype a lot. One of the ways we deal with our clients, we Skype all the time, 2 and 3 sessions. And even I'm in the US, we're Skyping in Africa, we have in Europe, so these things are very real. The robot vacuum, they had tanning beds, and the talking alarm clock that they had there, this is now the automated telephone menus, push 1, push 2, push 3, that are a part of our daily lives. Voice activation, reactivation software. And the last one, the automatic breakfast, not quite there yet, but this is quite interesting that they did this, and this was to be the year 2000. 2062, 100 years later. Here's a slide that I pulled, and it's called "What Happens in an Internet Minute." And I won't go through it in detail, but you can just bounce around, and these things are familiar with all of us, Google and YouTube. But the point is that the growth is staggering. You see, in Amazon, 47,000 documents in the Internet Minute. I know it's a little small there. Facebook, 277,000 logons in the Internet Minute, and so forth. So these things are rapidly changing the way that we do whatever it is we do, and it's also will affect our Takaful and insurance, and then back to my theme, the copy-paste paradigm. So here's another slide just to show you a little bit about that growth. In the year 2003, there were about 500 million devices. 7 years later, 2.5 times. Now, 2015, 5 times that amount, and then projected to a growth of 10 times that amount by the year 2020. So it's definitely an exponential growth, and you can see that now we have more connected devices than actual people, and the number is about 3.5 devices per person. They use the term Internet of Things. The Internet of Things talks about this interconnection of uniquely identifiable embedded computer devices, and this is just permeating the way that we do things and reinventing. I have down there in red, reinventing. So the Internet of Things, healthcare, all of the industries. I'm a biker, and I like to, haven't been in London a lot of times, but I love to see the bikers. But one of the things that I always wear when I'm biking is a heart monitor. And the heart monitor, now it's Bluetooth ready, it's hooked up to your iPhone, so you can do all of these great things, and you can monitor yourself. So this is very important in terms of how we approach technology and how we use it in our daily lives. Here's a slide that just represents graphically the slide I had a couple slides before that shows that there should be about 50 billion devices by the year 2020. So it's, you can see exponential growth. Emerging technologies, and it's a game changer. This growing proliferation of emerging technologies is considered by many to be some of the greatest change agents since the introduction of the internet. And these breakthroughs are going to change the way that we do business, all sorts of business, but in particular, insurance, Takaful, the value chain is changing. It's being changed daily. Product, underwriting. One of the things that in working with some of the startups that we work with and clients, well, we don't have this expertise, and that's where we come in. We don't have this expertise, so one of the things that people are looking at is systems, replacing some of the human talent that is needed. For example, underwriting. I can put a system with this auto underwriting, and I can do simplified underwriting, medical underwriting, even with people that are junior level, and so forth. Pricing, so much pricing software on the actuarial side exists. Risk assessment, and to the end of it. And what's important, especially for those insurance folks and on the management side and shareholders, is that it's expected to reduce costs, because the average cost per transaction and these things can be simplified. And so that insurers and Takaful operators, I say in point 3, should be actively monitoring the potential of the Internet of Things and considering how their core systems, and I say processes in the US, but here in the UK, I should say processes. And I think that's a better way to pronounce the word. Will handle this additional wealth of data. So we have a lot of data, and what do you do with it, and how you interact. Here's something, I can go through this quickly. I actually have this in my car. One of the popular things now in the US is this UBI, usage-based insurance. And you sign up and you plug this device in, and I actually plug this in my car. And the whole idea is to offer discounts. So you pay your premium up front, and you get a discount based on your risk score. And again, technology. These carriers partner up with the analytical companies that collect the data, they synthesize it, and they give you a discount based on how much you're braking, your age, and so forth. I haven't got a discount yet, and my kids say, Dad, you drive too fast, you're hitting the brake. More brake means more accidents, so the technicians have done this and come up with that. So if I slow down a little bit, maybe and use the brake less, I'll get some type of discount. This has been mentioned as a theme as we've been going along in from the Takaful Masterclass as well as the prior 2 days. You know, is there a difference? What is this thing? Isn't it all the same thing? Isn't it all the same thing? And I don't need to go into detail and give you my answer. There is a difference. One of the speakers said it's different but the same. And so it's important to, in my understanding, the way that I use this term copy-paste paradigm is what is the good that we can copy and use, and then what those unique things that we need to bring in that the Sharia compliance adds to this, to our discussion and our discourse. I just want to say on the Sharia compliance issue, it's not something that it's a one-off, you know, a one-off. The products are compliant, your company is compliant, and then you move ahead. Sharia compliance is not a set of rules that are codified in stone. It's an ongoing daily thing. Am I fair to my customers? Am I honest? I mean, are you looking at your complaint ratios? Are they, someone mentioned mis-selling. Many of the agents sometimes, and they mean well, but you know, they have a financial incentive, so they mis-sell products. So that is important. Here's something, I want to talk about this particular product that I'm really excited about. This is called a livestock Takaful scheme, a pastoral livestock product that is currently being marketed in the country of Kenya. And I was watching Al Jazeera about a year ago, and I was just blown away. I said, this is really exciting. So I had the opportunity to contact the CEO, and I conducted this exclusive interview for Islamic Finance News. And so this is if I could just tell a little bit about this product, because it's technology driven. What it is, and it was understanding for me, when you say livestock, people think of animals fenced in, and it's and that's how the product works. Talking to Hassan Bashir, the CEO there in Kenya, he says, no, that's not it at all. You don't understand what pastoral means. How's my time going? Okay, let me hurry up. Long story short, they move their animals across the savannah. And this is a very this is the culture there in the savannah, thousands of kilos in the grasslands. And what happens many times is that because of the rain and the drought, the animals are either weakened or the animals die, and they lose everything, or they can't sell their animals for the market value. So what happens? They've partnered up with the International Livestock Research Institute, and these folks, they send a satellite twice a month across the savannah. And what it does, what they do, these scientists, they predict the amount of foliage that will be lost. And then based on that, this triggers a claim. So everyone who's in a particular area who has signed up for the product and paid their Takaful premiums, contributions, will receive a claim payment. And so it's not an intimation of claim. They don't intimate the claims. He told me many of these farmers, if you will, don't even know that the claim has been triggered. So I said, well, how do you contact these folks? They're moving their cows, their goats, their camels. He says, through the smartphone. They don't have bank accounts, but they pay their Takaful contributions, and then we tell them to come to such and such watering hole and receive your claim payment. So really innovative, and again, the whole idea is technology. So I found recently that this institute is sponsored by, in the UK here, they are putting the funds together to do this research, and it can mean the life and death for these farmers that make this part of their living. So the question I asked you, can this be replicated in other parts of Africa? Maybe so, and maybe not, and the question is there, but this is something this is a good copy-paste, and this is something that we should be looked at. I want to finish up just a few more slides here, but I call this the copy-paste trade-off curve. And what I'm suggesting there is that the current thinking and the current process is that, you know, you copy paste more, you increase your embedded value. It's a good thing to do. And I should have, I guess, put embedded value in quotes. For an actuary, we say embedded value means present value of future profits. But on the Takaful company, it's not just the numbers. And I won't share with you the particular ayat, but Tun Haji from Malaysia mentioned in Surah Al-Baqarah 261, and the important thing about the ayat there is that if you give this one tabaru, Allah can increase that up to 700 times. 7 ears of corn, each ear of corn has 100. That's 700 times. You can't measure that. So some of that comes not just from the technology, but it comes from the way you treat your customers, your fairness, all of those things help to increase the embedded value that the actuary can't put a price on it, but it has the barakat. And these are the things that, as he said, that we need to highlight these to those who would take up the products. There's an excellent paper, and it's called "Moving from Sharia Compliance to Sharia Centeredness," written by a non-Muslim in Malaysia with one of our IT partners in Malaysia, and so you can find that. Innovation and transformation. I won't read all of this, but what we've been saying along that innovation is very, very important. New business models are being developed. Partnerships with other companies and so these are these niche companies that can help you do the things that you need to do. Our friend Imran is not here, but as he was here last year, and one of the things that he's done on the agency side, he's developed all of very useful applications that he gives to the agents, and the agents can engage with their customers and have everything there right at their fingertips. So what I'm trying to get here to say here is that the copy paste and rethinking this is important, but it needs to be done and not over rely and think that I just copy and I paste this and I can use this and I can make my business grow. So we need thinking people who are able to come up with new and innovative things that are important, and addressing the needs of the people, not just through technology, but through the product development, through the culture. Culture is very important. We're seeing that some of the things that we think can work in one country doesn't work at all. We're looking at Malaysia, for example, and 82% of the motor vehicles are motorcycles. So you can't take that and use that same model in another place just because it doesn't. Next to the last, anyway, I like this particular cartoon. This is a Dilbert. Dilbert is an engineer who quit his job as an engineer, and he's a syndicated columnist and has been doing this for about 30 years. But anyway, this is on pricing, and pricing comes into, we talk about legacy systems and replacing systems. Pricing is very important. So he says, is it my imagination or is your pricing intentionally confusing? And the vendor there says, it's intentionally confusing. That way you can't compare our prices to our competitors' prices. Our competitors do the same thing. It's called a confuseopoly. We all get our fair share of confused customers, and we don't need to lower our prices to compete. We use the profits from our anti-competitive behavior to fund innovation. So don't ruin a good system by trying to understand what you're buying. And Dilbert says, that almost sounds reasonable. Now spank yourself and thank me. So, and we can't do this on the Takaful side. We say the word shafafiyya. Shafafiyya, I should be very transparent. I should let you know what all the charges are, what everything that you're involved in doing. The age of the digital insurer. Digital insurance is around the globe. Some of the countries and jurisdictions are regulating that, and in the West anyway, I can speak of the fact that many of the insurance companies, and it might also spill off to Takaful companies, set up these e-companies. So they have their conventional business, but they have their e-company. Why is that? Because customers now are empowered by their devices that we talked about earlier using. They can comparison shop. They can get quotes right at a fingertip. So you've got to be able to not only, it's not price. You have to be able to give them that value. And so these unique relationships that are now being modified and growing, we talked last year about customer centricity. And so with the technology, these are the things that the digital insurers and soon-to-be digital Takaful operators will be looking at doing. So the conclusion, the final thoughts. The technology is extremely important to further the growth of the Takaful industry, extremely important. But Takaful operators must understand what this copy-paste paradigm really means and how to maximize its benefits without compromising the Takaful unique selling points. So with that, I can conclude, and I hope that I was able to share some of the things. I just have one final thing that I'd like to mention, and this is a company in Sri Lanka, Amana Takaful, and they have what I call full disclosure. We talked about Shafafi and letting folks know. You go to their website and you can find their annual statements, 130 pages. I mean, that's probably more than that most of us want to read, but the point that they're making is that they're putting it out there. They want everybody to see exactly what it is they're doing. Okay, thank you.
Thank you very much, Brother Dawood. Unique selling point, I think the key message in Takaful. How unique are we, how different are we, and how do we pitch to the wider community? Everyone has talked about over the last 2.5 days and previously that sometimes, whether Islamic finance or Takaful, and I wrote an article about 5 years ago and got a bit of flack. I call Islamic products ghetto products rather than niche products, because niche sounds very nice, but when you say ghetto, people start thinking it differently. So really, we have got to come out of that ghetto if we are talking about making it widely available. And technology, I think, will play a huge role. Currently, in London, there's been a debate going on because we are going to be having driverless cars in the next 12 months to 24 months. Now, those driverless cars, and the debate is who will ensure what? Whether it's the programmer, if the accident takes place, will he be held liable? Will it be the road condition? Will it be the designer of the car? You know, a whole host of new problems will arise when we have that kind of, or challenges, opportunities, not problems, opportunities that would arise. So, you know, we've got to start thinking of all these things that are coming up maybe in the next 5 to 10 years. And therein lies the opportunities for Takaful. My next guest is been in technology for providing services to Takaful for, you know, quite a long time. I don't want to put a number to it because that will reveal my age as well. So my good friend Faisal will be presenting the next session. He's the founder and principal of Amana Technology Consulting, and he'll be talking about the role of technology in rethinking the Takaful model. Please welcome Faisal.
Assalamu alaikum, everyone. I'm going to just take a few seconds out of my allotted time to thank Iqbal for organizing yet another brilliant conference. And I have to say that yesterday he presented an award for the outstanding contribution to Takaful, and it quite rightly went to Ajmal. However, in my personal opinion, had I been presenting the awards yesterday, then there would have been an extra award called Super Duper Contribution to Takaful.
No,
and
he's getting a 90.
it would have definitely gone to Iqbal. Now, having said that, Iqbal yesterday embarrassed me. When I arrived, he criticized me and he said, "Faisal, where's your tie?" And I felt undressed, totally undressed. So today, I complied and I put on a tie. And I have to admit, I'm now totally confused because we're now burning ties. We burnt ties in the technology sector 25 years ago, right? When Microsoft came, you no longer wore shirt and tie, you wore designer clothing, okay? So it was designer jeans. So we've been there and done it, and we've come back now with a tie. So having said that, I want to spend another second or two just to welcome to London all of the friends that we've made over the years at these conferences. It's really lovely to see you all here, and we have to thank you for the sunshine that you bring to us. And in particular, I have to say that thanks to your arrival, we've had 2 brilliant days of sunshine. And that comes after 3 weeks of dire, cold weather in which we've had snow, gales, you name it. So thank you for coming. It's rescued our spring, I think, is about to arrive. It's about to arrive. So, having said all of that, I want to start by using a quote. May you live in interesting times. Some people ascribe that as a Chinese saying, although the Chinese don't own up to it. But all I can say is that 40 years that I've spent in technology and in insurance has been the most amazing time. Many of you will know that the third industrial revolution, which is the digital revolution, started about 60 years ago. When we started to digitize things, when we started to use computers to improve the way we do things. It's about 60 years. And I've been fortunate to have spent 40 of those years learning about what technology can do. And I have to say that there is no more exciting time than now. The pace of change is phenomenal. And if you think that the digital revolution is going to come to an end anytime soon, I can almost guarantee you that we're only still at the foothills. We are still to climb the mountains of how the world is going to be different. The one thing that we do know is that in the 20th century, oil was the liquid gold. And people and countries became rich because they had oil. In this century, liquid gold is data. And the good thing about data is that it's not confined to spaces where countries can lay claim to it. Data is now freely available all over the world. You can mine it from anywhere, and you do. When you look on the internet, you're mining data from all different countries, and there's no ownership. So my contention is that the people who will be successful in this century are those people who will know how to mine data, because it is flowing around our planet at a rate that is unprecedented. So a contention that I would make is for insurers, for Takaful operators, knowing how to mine that data is going to be crucial to success in the future. Do I know how to do this? Is this it? So, in this presentation, I'm going to perhaps extend a theme which we've started to talk about already, which is the Internet of Everything. In fact, I touched on this last year, and it is the Internet of Everything which is creating this data, this mountain of data which, if we could correlate it, if we could hypothesize upon it, we would learn all sorts of things about the world we live in and start to understand risk in a much better way than we do today. So I think there's a huge opportunity for us who work on risk in this world. So my second topic is cognitive computing. And this is the up and coming, the new disruptive technology which we need to really understand if we want to know how to mine data and to get conclusions from it which we can't otherwise get. And my third topic is, are we ready? Is Takaful ready to use this disruptive technology to make advances beyond where we are today? So I have 3 topics that I'm going to try and touch on today. Though touched on the number of devices that are either connected or going to be connected to the internet over the next 5-10 years. And pundits will give you all sorts of different types of information. Some talk about trillions, some talk about billions, but it actually doesn't matter. This is another graph depicting the same thing. A company called BI Intelligence. Their claim is that there will be 18 billion connected devices on the internet by the end of 2018. Now that's a huge number. If you think that there are about 7.3 billion people on this planet, we're talking about 2 to 3 times that many people in terms of devices connected to the internet, sending and receiving data. So in this graph, you'll see that PCs, which is the technology that we've all grown up with, is pretty much now a legacy technology. And so it remains it's climbing slightly, but the number of connected PCs is not going to grow that fast. Smartphones, we all know this, total revolution. According to this, we are likely to see 4 billion smartphones connected to the internet, sending and receiving data. And compare that to the 7.3 billion people, half the population of the world will have smartphones by the year 2018. The next area is this thing that's called the Internet of Things. This means machinery, it means parts, it means fridges, it means motor cars, it means parts of motor cars, all of which are sending and receiving data for some purpose. And the question is, can we tap that to help us understand risk? Then, of course, there are the newer things that we've been talking about: connected TVs, wearables, connected cars. The driverless car is coming as well. So if you add all these things up, we're looking at around 18 billion devices sending and receiving data. Now, in case you're wondering whether this is about the future, it isn't. It's about today. Imagine that last year, when we had this presentation, we were at the end of 2013. Now we're at the end of 2014. Just look at the growth in the space of 1 year. And we're now just on that exponential slope, going up towards the 18 billion. We need to be aware of this. This is going to transform not only the way we live, it will transform the way in which we conduct insurance. So this is not about the future, it's about now. I think, Shabir, you made the statement, we have to be aware of what's going to happen in 10 years' time. It's not 10 years, it's happening now. So, let me just move the debate on to the issue of technology life cycles. I used this graph in my presentation last year because I wanted to demonstrate that technologies essentially move from emerging to mainstream to mature. And if we wish as an industry to leverage and grow faster than other industries, we have to use disruptive technologies to give us that leapfrog. And isn't it interesting that when the digital age first started and we had great big IBM mainframes, that was the disruptive technology. And who adopted it? The AXAs, the Alliances. And guess what? They're now global giants. So whereas we would think of computers today as being a mature technology, very little competitive advantage to be had, once upon a time, they created disruption. So as you move down this curve, you'll notice that things like cell phones and digital telephony is now also mature technology. But all of us remember, literally 20 years ago, when direct line disrupted the whole industry using the telephone to talk directly to the customer. But we take that for granted now. It's no longer an emerging technology, it's a mature technology. So as we move down this curve, we're seeing 1 year beyond where we were last year, things moving up the mainstream curve. So things like social media is now mainstream. Last year I talked about a company called Friendsurance. I don't know whether any of you researched it, but they basically insure groups of people who are friends on Facebook, because they feel that they form an affinity group and they can assess the risk of those groups by virtue of the friends they keep. Right? So now we're seeing social media is a mainstream technology being used in insurance. Mobile. We've already mentioned that now you can buy your car insurance based on the assessment of your risk as shown by your smartphone. All right? So you keep your smartphone in the car and it can gauge how fast you brake, how fast you accelerate, whether you take corners too speedily, and based on that will be calculated your premium. And that's not a future. Direct Line, the very people who started telephony, are using that as a way of assessing risk in the UK market. So just moving further back into the emerging technologies. Cloud. People talk about cloud. Cloud is moving now from being something that's going to happen in the future. It's becoming mainstream. What has cloud brought? Basically, it's brought the idea that you do not have to buy big lumps of capital expenditure when you wish to use technology. Now you can buy technology based on usage, right? Software as a service. All of these things come because of the cloud, and they're changing the whole economics of how we can engage with technology. Analytics, the way in which we can use technology to analyze all this data. This was an emerging technology last year. But have a look at this new technology, cognitive computing. This is going to absolutely revolutionize the way in which we make sense out of the data, the mountains of data that are now emerging from all those connected devices. So I'm going to focus a few minutes on describing what is cognitive computing. The statement there says cognitive computing systems learn and interact naturally with people to extend what either humans or machines could do on their own. So the implication is no longer do we have a one-way conversation with a computer. It's a two-way conversation. And it's not a yes-no conversation, it's an interaction. And the cognitive system will respond according to the particular person asking the question, right? So no longer is it a one-way street as far as computers are concerned. They have the intelligence to be able to respond within a context. And that's a very significant difference between computers as we know them today and cognitive systems which are now emerging. Second point, they help human experts make better decisions by penetrating the complexity of big data. So the idea here is I'm an expert, but I have a limited view of the world around me. The computer or the cognitive system is able to analyze mountains of data and give me inferences that I would not be able to arrive at myself. And so this interaction between me and the computer and its ability to analyze becomes fundamentally important. And so in cognitive computing, there are three main elements. Understanding natural language. Many of you probably got an iPhone. You're probably quite aware of Siri. Do you use Siri? Anyone use Siri? Some people do. So you're aware that technology has basically now encoded English so that when you speak it to a computer, it can answer back in English. and we probably take this for granted, but it's quite a substantial step forward in terms of where technology has reached. So that's the first thing. You now talk to computers. You don't have to type. Right? So that's one element of cognitive. Second is that the cognitive system generates and evaluates hypotheses. It doesn't give you one answer. It correlates information. It takes data points from all over, whether it's structured data, unstructured data, and it comes back and it tells you this could be the answer to this degree of confidence, this could be the answer to this degree of confidence, and then you have another interaction with it to try and hone down, get a very specific answer to a particular question. And the reason why this is important is because the computer systems that are cognitive systems are fast enough and intelligent enough to do all that in the background and do it instantly. And the third aspect, which is bringing it more like a human being, is that cognitive systems adapt and learn. So as new information is available, the system also adapts its understanding. And therefore, possibly, if you ask a cognitive system the same question on 2 different days, you might get a different answer because it has different data points from which it's inferring. So, cognitive systems are really going to revolutionize how man and machine work together. And this is where cognitive systems will have disruptive power, because up to now we've had programmatic systems. You had to tell the computer in very difficult computerese language how to do something, and it would always do the same thing every single time. And it was dependent on having structured data. So you had to have data sets very well laid out, and if you didn't, the computer wouldn't be able to understand what you were saying. Difference now is with cognitive systems, you teach the computer, you don't program it, number one. The system learns and improves based on experience. Thirdly, it interprets sensory and non-traditional data. It is said by some pundits that in the coming few years, computers will be able to use the 5 sensory things that we use to detect the world around us. Today, computers can listen, so they're already doing that. They'll be able to see, they'll be able to touch, they'll be able to smell. They'll be able to almost mimic our inputs as we use them as human beings. So that's another major kind of shift forward. And the last point that I want to talk about here is relate to each of us as individuals. So not one size, a program is one size fits all. Cognitive system is not one size fits all. If I ask the question, I'll ask it in my way, and the computer will respond accordingly. If Shabir asks the question, he'll ask it in a different way. Computer will answer differently. So it is very much now about an interaction. So, very quickly then, moving on, what does it mean? We talked earlier in this conference about knowledge and skill being scarce. And cognitive systems can really start to address the issue of expertise. First of all, they can enhance the expertise of an expert through that interaction. So that's the enhancement bit. Secondly, that knowledge or that skill can then be disseminated uniformly around an organization. Okay, so that's about scale. And the third thing is that because the system, the cognitive system, now has knowledge, it can use it to teach the rest of the organization. So the point I'm making here is that we have a real problem in Takaful about skills, about educating the people involved in our industry. Shouldn't we be looking at these sort of technologies to help us get over the skills hump? Now, these systems are being used today. This is not about tomorrow. And I've taken an example here from a presentation by IBM. Their cognitive system is called Watson. And IBM have just invested $1 billion in moving from an early stage investment in cognitive to making this a mainstream division of the business. So they're kind of betting their farm on cognitive being a mainstream technology in the future. And the point here is, I'll just talk to a couple of these. Client engagement. We've talked about it, we referred to it earlier. Your customers are more knowledgeable about the world than any of their predecessors. Through their smartphones, instantly they get information and knowledge through the very techniques of mining data through their smartphones. And the point is, how do we respond? We can respond by using things like cognitive systems that can assimilate data and effectively be one step ahead of where the customer is. And therefore you can give the customer a much more personalized service. So that's at one extreme. At the other extreme, we can talk about compliance. We talk about Sharia compliance. Why wouldn't we use cognitive systems to help us understand where the limits are to compliance? Where are the gray areas? And the system learns and becomes more experienced and offers us advice as well as our own expertise. So that way I think we can become much more, let's say, capable in terms of our own ability to push the industry forward. So I've spent a little bit of time on cognitive. I think it's important that we all know that such technologies are around and that they are disruptive. If we want to use them, we can leapfrog where the rest of the world is. Now I just want to briefly move on to the use of technology and where are we in Takaful. I've chosen a couple of graphs from the Ernst & Young 2013 annual Takaful report. And it seems to me that we are still, as an industry, a little bit behind where the conventional insurance industry is. You know, a combined operating ratio of 102 is not something to be proud of. And it does seem to me that whether you're in the GCC or whether you're in Malaysia, we have some catching up to do. Now, when I read the literature, I learned that this industry was growing at 22% 5 or 6 years ago, and that the rate of growth has slowed. It's now about 14%. So which way is this going? You know, are we slowly but slowly reducing our growth because we've saturated the market? Well, that's possibly one hypothesis, but I suspect it's actually something quite different. There's something about the way in which we run our Takaful businesses which makes us, A, less profitable than the conventional, and secondly, it's caused our growth to slow down. And what I thought was I would research why this might be, and I came across a report which was commissioned by the Society of Lloyd's, and it starts by talking about insurance penetration of a country, in which it says that penetration is defined as gross written premium over GDP. That's quite a simple measure. But what they then said was, we would like to also calculate whether a country is underinsured. So they added some factors. For example, how possible is it that there's a disaster in a particular country, therefore it needs to be better insured. So you get earthquakes in Turkey, there has to be a factor for that. So that's one aspect. The other is it also factored in the income per head in a given country and factored for that as well, and came up with this index of underinsured or moderately insured or better insured. And it's not surprising that the Western nations come out on top, but look at where we stand in terms of the countries where we would wish Takaful to be. Malaysia has only just gone above the benchmark of underinsured. 0 means you're on the kind of tip of the curve. If you're minus, then you're underinsured. So Malaysia is 0.15, United Arab Emirates 0.08. But look at tier 3 countries. They are all the countries where we would wish to be, and they're all underinsured. So my contention is that it's not that we have saturated the market. My contention is it's something else, because the market is huge. The potential is absolutely massive. So the good news is, ladies and gentlemen, may you live in interesting times, because I think we've got great times ahead of us if we can get the model right. And the issue I don't think is the model, it's about the rethink. And so the theme of this conference is rethinking the Takaful model. I don't think we are talking about the model having to change. I think we're talking about thinking having to change. And the thinking, I think, is all around how do we exploit technology. And I think it's a really fundamental question. Because if we use technologies like cognitive computing, we will start to address consumer confidence. We will start to address, are we following principles of Sharia? We will start to address, are we compliant with solvency? And they will all have an impact on sustainable profitability, on safeguarding shareholder value. So, I'm just wrapping up now. So, in wrapping up, I want to say that please don't think of digital as a future. It's about the present. And unless we have embraced it, we are going to miss out and miss the opportunity of that underinsured market we want to serve, because the conventional industry will get there first. So, in conclusion, my thoughts are, how does the Takaful industry respond? And I have a sort of hunch, although I can't be sure, that we certainly, as an industry, are not technology leaders. Right? I suspect that we are technology followers, but we don't know. We don't know. As an industry, we don't know. So when you have a problem, you need to find a way of collecting data and then analyzing what to do with it. So my proposal is that collectively, as an industry, we need to survey, Takaful company by Takaful company, how are they using technology? And we need to bring that all together collaboratively and analyze where we stand as an industry in terms of our capability. And then we need to compare against best practice. Are we anywhere close to best practice? Are we a long way from it? How can we improve to get to best practice? And we need some kind of consultative framework in which we can use technology to do that rethinking the Takaful model. And then try and create a blueprint for how each Takaful company can use the massive knowledge we've put together in order to implement a plan to get to a point where we are leaders and where we are actually leveraging technology better than conventional in order to exploit the markets we want to serve. We would certainly be very happy to participate in something like this, but ladies and gentlemen, it's very much up to you to think through whether you'd like to be collaborative and understand where we sit as an industry and move this forward. Thank you very much.
I know we are running a little bit late, so I don't want to say too much except to request Brother Professor Iqbal Asaria to make his presentation so that the next session...
Assalamu alaikum and good morning, good afternoon.
I don't want to say much. Imran Ali has not been able to come because he's been called to business in Indonesia, but I want to just take a challenge which the technology thinkers have thrown to us. I think that we can use it to our advantage. And let's go from the start. I think that the Takaful spirit of cooperation was always possible when the participants were in geographical proximity. That's why we call them friendly societies or regional societies or communal schemes. When we started to broaden that geographical proximity to global or national operations, then we lost that affinity between participants. When you lose the affinity between participants, you go to what is the conventional model, which is a risk transfer model, because you don't have any affinity with the other participants. Now, what big data can allow us is to recreate that affinity between participants and therefore bring the spirit of Takaful back. So Faisal has already mentioned one particular thing, and I think another one was launched here called Guevara. Faisal, you might have seen it. This is a motor insurance scheme, for example, where you choose which group you want to belong to, and the pricing of your particular policy will depend on the performance of that group you have chosen. So if you want to choose a community group or like-minded group or whatever, if you don't want to choose, they can help you by data analysis to choose a group which suits your profile. So your age, your driving preferences, the number of miles you are driving, and so on. And the results of that group will be reflected in the premiums you are charged or the surpluses which are given back to you. What this allows us is to recreate that affinity group again. And therefore, the idea of putting a tabarru into a common pool becomes much more possible. Fortunately for us, this is not an area where we are behind. Whilst, for example, and we will see in the last presentation I will make, in banking technology, we have only 20% of the Muslim population banked. We have 85% having access to mobile technology. And therefore, this is a much more scalable operation using the power of big data to create communities which then understand that the results of their activities will be reflected in the premiums they pay, in the deficits they incur, or in the surpluses they get back. And this encourages group behavior, which is self-enhancing. There are dangers in big data as well, which we should not be unaware of. There could be malicious use of big data, security issues, and so on. But in every development, just taking from, for example, even the invention of a simple knife, you can use it for many useful purposes, but you can also use this for murdering somebody. Now, that is where we need to develop a moral compass, how you would use new developments in this way. So that's all I want to say, that please think of big data as a possibility to recreate the cooperative spirit of the Takaful. Assalamu alaikum.
Thank you, Brother Iqbal. It only leaves me to thank our panel for having joined us, and also you audience continuing to be here to hopefully take back something. What I think, as a concluding remark I want to make, is someone famously said that we are living in times where you have to learn, unlearn, and relearn. And relearning is always very, very difficult. And therefore, all of us, especially people of my age, we find it very difficult sometimes to unlearn because we are in bad habits. And the challenge therein lies with technology, that how to unlearn the legacy that we have so that we can embrace what is happening, what will happen, and what will sort of change the future of this industry. And the final comment that Brother Iqbal made of using big data. we must also have a big vision. I think that all is very, very important, because in Takaful, we've had a vision of providing it for the Muslim community. But we must have a bigger vision, as I think everyone has been talking about, that if it's good for me and my family, it should be good for my community, it should be good for my city where I live in London, it should be good for my nation. So if it's a good thing, then it should be available to everyone, and we should make efforts with that big vision of using big data. Thank you very much, ladies and gentlemen, and the panel.
Okay, Bismillahirrahmanirrahim. I think Mr. Thanvi has not been able to make it, so it falls upon me to moderate this session. The next session, may I call the 4 participants, Dr. Nihat Khanfar, Lori Chandler, Mohammed Zubair, and Dr. Alberto Brugnoni to come to the stage, please. We have this panel looking and reflecting on newer Takaful markets and some of the issues and challenges that they may face. To start this discussion, I would like to invite Dr. Nihat Khanfar, who is a lecturer in Islamic finance and economics at the Islamic College, to come and make a short presentation on the Takaful industry in Palestine, hopes, reality, and prospective expectations. Dr. Nihat.
Thank you. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum, and very good afternoon for everyone. As always, Palestine is a big question and big story, especially when it comes to Takaful, as in fact I haven't spotted anything about Takaful in Palestine in any Takaful radar since yesterday. So it didn't appear in any statistics, in any figures, in any surveying, in fact. And this is why we needed to shed some light about what's happening in Palestine, which is, as a conclusion, in fact, it is something fascinated me, and it is fascinating, in fact, to be looked at, to see what's happening there, despite of the miseries, difficulties, occupation, the political complications, and so on. It will be very short. I'm not going to burden anyone or to overload with time. So I hope you will enjoy it, and you would be introduced to new facts and new figures, numbers, reflected on the Takaful industry in Palestine. Takaful reality, something related to the establishment, to the progress, and to the figures reflected upon the Takaful in Palestine, started 2008, which is relatively very new. Still, in fact, a crawling baby compared to the conventional insurance in Palestine and compared to the international Takaful market. Capital is also very humble. You cannot really consider it to be significant, but in the same time, it is something to be considered within the Palestinian economic situation. Market share in 2013 represented 13% of the market, in fact, with a serious competition with other conventional insurance companies. 2014 becomes 15%. So we have somehow a significant progress in Takaful industry there. Company is listed in or on Palestine stock exchange market, which is in fact relatively and compared to the political situation there is progressing quite well. But the company as well is occupying a good position in that market. There is strong demand for the company shares. So it is something, in fact, to be looked at, why the people are buying the share and holding the shares as well. The insurance offered as part of the reality, the facts, just to reflect upon what's offered there. Family insurance, which includes individuals, groups, covers all sorts of accidents, disabilities, terminal illnesses, and death. So it's quite like covering a wide range of this kind of insurance. General insurance, which includes air, land, and sea freight, fire, home, construction defects, machinery damages, travel, glass walls, and work accidents. And this is, to some extent, in fact, it's just designed and created to fit the Palestinian insurance market. Medical insurance as well, and car motor insurance, which include the conventional insurance models. Performance indicators, we have the shareholders remain invested, which means that they have good level of trust and confidence, and the share price exhibits steady growth pattern. It usually outperforms the Palestinian or the Palestine index, which is called Al-Quds index. This is due to the following. The profit distribution started from year 2 till the last financial year. So financially, they are doing really very well. The company managed to cover all its startup expenses by the end of year 1, which is, to some extent, it is something impressive, or you would feel positively surprised how did they manage this, which in fact brought more confidence in the progress of the company. A growth in every aspect, which includes the fastest sale growth, which was 30% among other insurance companies. Here we are talking about 2013, 2014. The best in achieving highest growth in the operating profit among other insurance companies. Sales growth 2013-14, which we have mentioned earlier, 30%. The number of investments in the portfolio increased by 26%, which is a significant growth. Between 2013-14, there is 19th growth in number of employees, and this is due to the fact that they established the new branches to cover all areas of the West Bank of Palestine. And this is in fact due to the occupation factors, which the company should be existed physically in all the areas due to the blockades, closures from time to time, where the employees should be in fact on the ground all the time if there is anything occurring as accidents or anything to be assessed or evaluated, and to have, of course, the physical contact face-to-face with their participants and customers. Hopes, filling up the gap of the expertise among the Takaful staff, because in general, the insurance industry facing a serious lack of experience, but in Takaful, this issue is much more serious. They are hoping to redefining the compulsory insurance and its fare, which is related, in fact, to the government and its regulation, because many of the departments, especially when it comes to the governmental departments or public departments and its compulsory insurance, reorganizing the monitoring system. They are complaining about the volatile reactions sometimes by the government and the regulators. building up a sustainable relation with other Takaful companies outside Palestine, and this is in order to gain more experience in this industry. Delegating Takaful staff abroad to get practical training to enhance Takaful experience as well, because they think they have limited access to many different resources and different experiences. Ending the Israeli occupation, or at least improving the political situation, because in fact this will give them a serious push-up forward to be able to improve and develop this industry, as well as to abolish many different political and economic obstacles. Future expectations due to the discussion with the head of the Sharia board and the executive director, increasing the market share to 20% in 2015. And in fact, due to their financial statements and analyzing them, you would find this is realistically could happen easily. In 2016, they are hoping and expecting to have a 25% of the market share. Significant increase to the capital in the next 3 years to meet the demand in the market, because more people showing serious interest to join the company, to be participants. Expand the Takaful activities to Gaza Strip, because they have no presence at all, of course, again due to the occupation obstacles. Expanding the volume of the investment portfolio. And they started on the ground by encouraging another company, which was established just recently, called Ijara Company. And this Ijara Company, in fact, like finding some solutions with regard to the investment of the surplus, and of course in managing the liquidity, and it seems to be working very well as well. Significant increase in the revenue and the profitability, and it seems to be realistic to me according to the financial statements and analysis. And I'm finishing here because I don't want to spend more time. Many thanks for listening, and if there is any question, of course, after the session, happy to answer. Thank you very much.
Thank you, Dr. Nihad, for that presentation. So he's done his job on Palestine. I would like to invite Mr. Lori Chandral to make a few remarks. You can keep sitting on the situation in France, so that before we open the debate, yeah?
Okay. Yes. Good afternoon, everybody. Literally probably a couple of minutes on this. We at EDEL have been involved with Takaful in France for the last couple of years, and it's maybe a market that you're not familiar with or even expect that there is Takaful available there. There's actually now 3 Takaful available in France, and unusually, as we've learned in the last couple of days, the family Takaful has been the smallest segment of most markets that people are familiar with. Ironically, all of the offerings that are available in France these days are actually family Takaful. So there's 3 kind of providers that operate in that market today. Swiss Life opened up what they call Salam placements in 2012. That was followed in late 2013 by VIII Life, which is a Luxembourg life company, opening up a Takaful product called Amani. For those of you aware, VIII Life is actually owned by KBL European Private Bankers, which is actually owned by the Abu Dhabi Wealth. And then Atlantic Lux, which is linked with FWU, is now available in the market. And each one of those products has a different positioning. Swiss Life is like a long-term regular savings plan. The Atlantic Lux is a savings plan that's available with some kind of protections, critical illness and death kind of thing. And then VIII Life is a larger kind of wealth management lump sum plan, as they kind of call it. all of those have kind of are quite new to the market, coming off very, very small bases, and kind of developing. And I think some of the interesting things that have been developed from France and some of the lessons which probably are applicable to all of you in the markets has been how do you actually work with that with clients? And I think the Takaful concept is accepted by people, but it's an interesting one is actually financial education. For that, how do people take that plan and actually use that as part of their lives? For example, what does somebody know if they're saving €100 a month for 15 years? How much is that going to equate to? What are they going to use that for? So it's actually been a very kind of interesting plan. France has also got a couple of financial setup to where it's actually a Takaful is very efficient for a kind of saving method. So you get a lot of benefits for actually using Takaful as opposed to actually going and doing it through an unwrapped route. So that has kind of been very important in the design there. Another thing that's kind of come out as part of the investment story has been clients, when they come to generally see you for family Takaful, don't turn around and say, I'm a European equity investor or I'm a Sukuk investor. They normally come in and say, I am looking for income, or I'm looking for growth, or I'm this kind of risk profile. So the investment options that have been built into the Takafuls have generally been goals orientated. So the more people are buying into investment strategies, which I think is a little bit different from some other kind of markets that operate where it will be, they will offer a product and then they will have a range of different investment strategies, be that equities in America, equities in Asia. So what we've done is actually design financial strategies. So saying this is a growth strategy, this will match your risk profile based upon your risk area. So in short, that's really just a kind of quick view on the French market.
Good, thank you. If I can request Mr. Mohammed Zubair to tell us a little bit about the Takaful industry in Pakistan, please.
Bismillahirrahmanirrahim and Assalamu alaikum. First of all, I would like to thank to the organizer of this forum to give me opportunity to discuss about Pakistani Takaful market. Although we are the late starter in Takaful industry, our first company was established in 2006, but we did our tremendous growth in our product innovation, product structuring, and Sharia principle of Takaful. So far, we have 5 full-fledged Takaful companies in Pakistan. Among them, 3 are working for General and 2 are working for Life Takaful. And we also have a window operation. We have 4 conventional companies who have Islamic Takaful windows. And the total size of Pakistani Takaful asset is about 800 Pak rupees, which is about 9 million USD. The major area and major innovation in our Pakistani Takaful industry is micro Takaful. We have innovative micro Takaful product. We have micro Takaful products for livestock, for crop Takaful, and we as well as some Takaful, micro Takaful product for health insurance. In 2007, we did a study that what are the reasons of the poverty in Pakistan. As you probably know, Pakistan have about 2 million population, and among them, 60% are living below the poverty line. So what we investigated that the major reason of the poverty in Pakistan and the reason why a non-poor person dip into the poverty, that the health issue, that if there is a health problem in the poor family or either in non-poor family, they sell their assets, they sell their livestock and etc. and dip into the poverty. So in Pakistan, we have micro Takaful product for health. Even the product price range is $5 to $10, and in which a family cover for health, in which the maternity also cover, the accidental death also cover, and health problem also cover. And other area is the Sharia sensitivity in Pakistan related to Takaful. We have 4 tiles level to ensure the Sharia mechanism in the Takaful industry. In the first tile, we have
Sharia board at the Security and Exchange Commission of Pakistan, which is the regulator of the kafir industry. And there are about 8-member Sharia board is working to ensure the Sharia compliance. And the second level, it is necessary for each and every Takaful company to have an internal Sharia board. And at third level, it is necessary to have a Sharia audit for the whole the mechanism. And at the fourth level, we have a Sharia review on the annual basis of our Takaful products. And as per concern of the micro Takaful, as you people probably know that zakat money cannot be utilized for the financing purpose of all Islamic microfinance, but zakat money can be utilized for the micro Takaful. So in some organization in Pakistan, they collect the zakat and develop the micro Takaful product for the poor, which is distributed among the poor. And we also have some very good knowledge hubs. We have about 11 universities who are providing master and postmaster level program in Islamic banking and Takaful. This is some brief of Pakistani Takaful market.
Thank you very much, Mr. Zubair. I would now like to invite Dr. Alberto, who has spent some time in Afghanistan looking at Takaful. So we just want to see how Afghanistan is moving from Tawakkal Allah to Takaful.
Assalamu alaikum, Jama'a, and bear with me 5 minutes. I'm fully aware that I'm just standing between you and lunch. I spent a couple of years in Afghanistan between 2012 and 14. Before that, I was working in Palestine, in Ramallah, providing musharaka mutanaqisa mode of financing to Palestinians living in the West Bank. Before that, Russia, and before that was Central China. The beauty of Islamic finance is that it's like water. When you pour water in a color glass, you can see it red, white, yellow, but at the end it's always crystal clear water. Let me share a few thoughts about Afghanistan. It's a landlocked country, as you know, in the center of Asia. And it's a country that has been at war for the last, since the mid-70s, which means that all people that you will meet in the street in their 50s, they're all spent their life through wars. Perhaps it's not known by the distinguished audience here that Afghanistan is the richest, not one of the, but is the richest country in the world, is the richest country in the world in terms of unexploited mining, which means that all metals that came across your mind, from the basic metals like lead, zinc, gold, whatever, to those funny metals that we need to operate, cell phones or these things, are in Afghanistan. They have been mapped by different agencies through satellite, and they are worth perhaps something between 2 to 3 to 4 trillion, not billion, trillion dollars. All those things are unexploited metals, and this perhaps is telling you why there is a war in Afghanistan. Forget about the Islamic and Taliban things. Afghanistan has just 4 areas, highly populated. Kabul, Kandahar, Mazar-e-Sharif, and Balkh, and Herat. And most of the population lives in very small villages scattered across the countryside, which is a very beautiful countryside, perhaps the beautiful in the world. We do have 3 major mountains chains. The Himalaya, the Karakoram, and the third one that is just converging in Afghanistan, which means that we are really, valleys and peaks all across the country. I work for 18 months with the Ministry of Rural Development, crisscrossing the country and providing Islamic finance products to villagers. And before that, I worked for about 5 months with the Minister of Finance on Takaful, and I want to share with you a few thoughts about this first experience on Takaful. It's a country where the social divide between the have and have-nots is very strong. Let me just share with you a couple of figures. We had 600,000 new graduates in Afghanistan, and none of them is able to find a reasonable work. We have 340,000 civil servants that earn $70 per month, that even in Afghanistan is a very low figure. The GNP of Afghanistan, the unreported, which does not mean that it's a criminal, but is unreported, GNP is perhaps 3 to 4 times the official GNP, and is a society based on tribal codes, kinship-based behavior, and this must be factored when you talk to them and speak to them about Islamic finance or Takaful. It's a multilingual society. In Afghanistan, you speak at least 5 languages. The 2 most common are Pashto and Dari. Dari spoken by Hazara, and Pashto spoken by the Pashto community. In the countryside, Mullah will speak Arabic. Most of them, they got a training in Medina Munawwara. What about Takaful? What about insurance? When I came to Afghanistan, I found no Takaful at all. A strong pent-up demand, but not Takaful. I found a lightly regulated conventional framework where we had 2 pieces of laws, actually, one enacted in January 2009 and one in July 2008, that set a few basic rules for conventional. We had difficult to understand, to get figures on the premium, because there was a lot of non-admitting insurance and a lot of fronting. So it was really difficult to understand the numbers. In Afghanistan, we had just 4 insurance companies. One traditional old Afghan national insurance company, state-owned, incorporated at the time of the king in 1964, and then 3 new companies. One, the Insurance Corporation of Afghanistan, managed by some professional coming from London and living in Afghanistan, highly efficient. The Afghan Global Insurance and the Insurance Group of Afghanistan, all conventionals. What was the no broker at all? No brokers. So the products were advertised through billboards in the major places, in the major cities. What were the products of this conventional insurance? Most of them were general product. We had professionals. We had, let me see if I can see, commercial lines, mostly transportation, aviation, constructions, a lot of motor fleet, and some product on the liability side. And then we had some personal lines, home insurance, some health cover, and car insurance, which is compulsory in Afghanistan. I'm not really sure how many people are complying with this insurance. Most policies were group policies for a simple group insurance, for the simple reasons that there were no income available for personal policies. Life insurance almost almost not existent for religious reasons. There was a strong opposition by local Sharia scholars and mullah. So what I did for the 5 months I worked on this program, I worked with the insurance authority that was working under the umbrella of the Minister of Finance, and we wrote bylaws, and they could have been used to propose to the Parliament a Takaful bill. And I understand that those bylaws, they went through a number of sifting processes in different agencies. And I understand that with the new parliament, the new election, the new government, they are now discussed in different committees in the Georg Merga in the lower house. At the same time, I started working with the 4 companies, and we made a general presentation on what Takaful is and how the system works and the different schemes. And of course, I did not tell them that the system is under strains because this would put them off the mark. And then we ran a lot of seminars on what we call the building blocks, which each and every company. So, for example, talking about the segregation and treatment of funds, design and pricing, actuarial concepts, claim management, actuarial control cycles, and so forth and so on. So we think that we built a number of platforms that could be used to develop products. At the end of the story, we developed also 2 products. We takafulized a conventional product for insurance of property. To be used by Islamic banks. We do have Islamic banks in Afghanistan that used to issue Islamic financing, for example, to buy property, and they need a Sharia-compliant insurance, not on the credit, because this is until recently has been not allowed by Sharia scholars, but on the real estate itself. So we takafulized this product. And also, we takafulized motor fleets of the taxi drivers in Kabul. It has been a very long process, and it's still an ongoing process. This hopefully will create a winning proposition, mingling Islamic finance and Sharia-compliant insurance. Thank you so much.
Thank you very much, Dr. Alberto. I was wondering what you were doing 2 years in Afghanistan, but now I have a slightly better picture of your activities. We have about 5-7 minutes for questions, so if anybody wants to put questions to any member of the panel here, I'm happy to take that. Yes, the mic is coming to you.
Yes, thank all the panelists for the information. It was very good. The doctor from Palestine, Dr. Kanfar, could you talk a little bit more about the number of products you have and the growth? I mean, the numbers sounded very good, but a number of products that you might have in the Palestine and in the company that you talked about.
Just if you could repeat the question.
The number of products or the number of participants, the number of that you're working with?
In general, it's covering all sorts of insurance, in fact, because this is typically what's happening in Palestine, even in the conventional market. So
how many participants? I said products.
Participants.
Participants,
well,
I'm sorry.
I don't have the figures, in fact, the exact figures, although it is available, in fact, online. In their annual financial statements and reports. So it is there. but certainly it's growing rapidly and steadily as well, and they have a lot of positive expectations to attract more participants in the future.
In Palestine, we have 2 Islamic banks in the West Bank, and we have 1 Islamic bank in Gaza. And Gaza, of course, is impossible to get there. But the 2 Islamic banks in Beirut, actually, in Beirut and in Ramallah and Beirut, they are providing, they're very active, very successful, and they are providing a lot of Islamic financing, not only to real estate, but to SMEs and to those things.
Well, they focus more on إجارة منتهية بالتمليك, in fact, and diminishing مشاركات.
Absolutely right, and they just push forward these things of takaful. The big drawback in Palestine, if I may add, is that you cannot issue sukuk, you cannot fund these things. For a very simple reason is that the Palestine monetary authorities, which is actually the central bank, is not recognized by anybody. So you're talking to them, telling them you should issue sukuk, maybe in shekel,
because you have multi currencies really to be used in the
but
market.
The thing is that nobody was able to rate the sukuk, for a simple reason that the entity itself, the Palestinian Monetary Authority, is not recognized as such.
That's right,
I think actually that is the investment returns thing is from most of the presentations we've had has been one of those things that has really kind of shone out. There's been a lot of data again this morning, and there's you can build the product, you put it, but the Takaful funds, the shareholder fund, the policy funds, where do you go and put the money to work? For example, in Pakistan, you can only use the money from that within the local market. Do you have actually those vehicles of sukuk? Is a sukuk that you bought in the Middle East in 2010 the same as it is now with the oil price at kind of the half? The one advantage that the guys have had in France is it's quite an open capital market. So they can pretty much go anywhere in the world with regard to looking for investment opportunities, of which there is a lot of good products from be it CIMB, from some local guys, Sukuk, the UK. There's a big investment opportunity, but that investment return and getting access to it, I think, is a really challenging factor for a lot of Takaful businesses to tackle.
Thank you. Yes, Phil.
In relation to Pakistan, Palestine, and Afghanistan, I'd just like to understand how you are able to attract customers, given the fact that there must be a risk premium to be paid through instability, political and conflict-wise, and also from the perspective of France. We've seen some instability in France relating to Muslims. Is there a risk premium to be paid, and therefore is it affordable?
Fascinating enough, actually, in Palestine, that it seems to be that the ordinary people are very much convinced really to switch to the Takaful. And Takaful company in general, they are spending quite significant resources in promoting the Takaful, where you find usually the head of the Sharia board, in fact, just going around the West Bank and holding a lot of sessions, workshops, and presentations, and this is what they do. So they have a very active promotional, let's say, activities almost every week. They have a lot of sessions on the local TVs, on the radios. They have convinced 2 universities to establish Islamic banking and finance departments, and it seems to be working to them. So the risk issue, in fact, it should be out of context in this case, because they've been really adapting themselves for the last 50 years under the occupation. So this as a financial factor, it's very much related really to the culture, which was like always not difficult, as a misery, in fact, for the last 50 years. So this is how it
certainly
it works.
risk exists only, if I may add, only if you tap financial resources from outside. But if you tap financial resources from inside, there is no risk premium, because there is no risk as such, because there is risk. I don't know, you see what I mean?
Yeah.
I mean, a risk is a question of, no, really.
It's
a risk
incorporated within
absolutely,
the whole
it's a question
process,
of perceptions, you know. When you live in Kabul for a while, risk, I mean, you want to be streetwise, but risk is not there any longer.
Yeah.
It's true. It's the reality of things, yeah.
Zubair?
Yes, as per the Pakistani perspective, when the Takaful companies was emerged in 2006 and 2007, the price of the Takaful coverage was much higher than to the conventional insurance, because the Takaful company do not have a investment avenue at that time in Pakistani market. But right now, as Pakistan is utilizing Wakala Waqf model in the Takaful companies, usually the Takaful coverage price is lesser than to the conventional insurance, because in Wakala Waqf model, whichever is remaining at the end of the year as a surplus, again distributed to the participant. So the Takaful company have a strategy to already reduce the price to take out the much market. And as per the marketing strategy, when the Takaful companies were merged, they designed a marketing strategy in 3 levels. Number 1, the people who were religiously sensitive and do not utilize insurance product. They tapped a lot of such companies and organizations who have $1 billion of Pak rupees business but do not insure. The first strategy was that. Second one, those people who were insured but religiously sensitive. When the Takaful company come, they switch their business into the Takaful. And third level, unfortunately, Pakistan have very less insurance penetration. We have less than 1% to our GDP as insurance penetration. So we have a big market to market the Takaful product over there.
Just one point to add, in fact, with regard to Palestine, the pricing issue is playing a very crucial role here, because it is much lower than the conventional counterparts, much lower. And I think, sorry? Well, whether bad or good, this is how it's working and progressing, and it proved really profitable.
Okay, just wait one, yes.
Good afternoon, everybody. I want to talk from Nigerian perspective. Nigeria is a country of about 140 million people, the self-acclaimed giant of Africa, a growing economy. As good as our economy is, the average Nigerian has a very great apathy to anything insurance, especially to conventional insurance. When you want to introduce Takaful to them, because of the crisis of confidence that they've had in the conventional insurance, they don't want to fall for it. They don't want to go near it at all. I want to throw it to the operators here. What can they do to explore the market potentials in Nigeria? In Nigeria, we have vehicle insurance. Most Nigerians will go for the third party because it's compulsory for you to have it, to have insurance. Otherwise, no Nigerian is interested in having insurance policy. Why? They believe that if you have a claim to make on your insurance company, they ask you a lot of questions. They want to play smart on you. They may even ask you to go and bring your great-great-grandfather to come and testify that you have incurred a loss. So the average Nigerian doesn't have interest in insurance at all. I want to implore the insurance operators here to look in the direction of Nigeria and see how they can penetrate the market by introducing Takaful to them fully. The conventional one, once you tell them about insurance, they say, no, I don't want to. Go and do your research. The average Nigerian doesn't have interest in insurance because of the crisis of confidence, because they believe that they are swindling them, that when they want to make a claim, they don't get their claim easily. That's okay. Once we want to talk about insurance, no, we don't want to talk about insurance. Maybe they can see the beauty of Islamic insurance in the context of Takaful. I think most of them will be interested in it. It's a market for the insurance operator to penetrate. And we have about 140 million people. It's a growing economy. The problem they are having with conventional insurance, if they can see companies that can...
Okay, brother, I think, please, we will take it on board. Next, yes.
Regarding the Takaful industry in France, do you have a specific regulatory framework for Takaful? If not, how do you manage the Sharia issues?
The framework that has been set up there is the classic kind of Takaful setup. The 4 layers that they spoke about operating in Pakistan is exactly the same with regard to a Sharia board that is an external board that's been appointed to the Takaful, and then on the investment side they do exactly the same 4 levels with regard to reviews and setups for there. I'm not that familiar with regard to the actual physical setup of something for the VIII Life setup or the Atlantic Lux, which is FWU's product, but the setup that's been done there is a kind of classic family Takaful kind of operations. With what it's being done there is to fit in with the local legislation that kind of sits so that you get the advantage of local financial planning rules. And I think the ultimate point, if you take it to the highest level, is nobody should be excluded from financial services because of their belief background or anything there. So what this has been for Swiss Life is providing a product to suit a particular kind of community on there, and the fact that it's been developed since 2012 will mean that nothing is really going to be changed with even the latest kind of political situation there, that this has been designed as part of the broader financial services principles to actually give people access to things. But I think one of the things that is challenging with the Takaful is whenever you build it, you have to build it for the local market, be that Nigeria, you've got to build something that kind of suits to it. And I think in the telecoms industry, they call it what's called the last mile, which is always the relationship between the person and the client. And that last mile is the most critical thing that is kind of important, and that's where I think you always do need the local experience. If that is actually spending 2 years into the field there, you need to be going out and kind of really experiencing it. You can't design any financial services product by sitting in a boardroom. You need to be going out and doing a lot of kind of client engagement and taking best practices. But I think everybody would agree to that broad principle.
Okay, thank you. I think, Shakib, we will postpone the task of analysis of this underpricing potential and the time bombs which it may create.
Well, lower pricing, not underpricing.
Okay. Lower pricing. So I think that's fine. We will take it up at some stage and we will know the results soon. I think both Pakistan and Palestine are challenging in terms of pricing. Okay.
Assalamu alaikum. Assalamu alaikum. So I think we're running a little bit late, but we'll try and do a bit of catching up. Thanks for everyone that's managed to stay the distance. You've done really well. The session that we've got today is financial inclusion, micro takaful, and innovative use of zakat. So it might not be quite appropriate to talk about micro takaful in surroundings such as this, and also the lunch that we've just had, but it is quite appropriate when we're talking about rethinking the takaful model. Because at the end of the day, we have to look back and see why takaful was introduced. Why is takaful allowed? And the idea is that it is to protect the most vulnerable in society. This is the whole concept of why takaful is permissible under Islam. It's not to make profit, and it's not wrong to make profit, but the whole essence is to help those that need help. And that's the basis of Islam as it is. So I think this is quite an important topic, and this is something when we're talking about rethinking takaful, repositioning takaful,
Why is Takaful not realizing its potential? What is Takaful's linkages to mutuality and cooperativism? Well, mutuals, as a representative of the mutual movement, mutuals are there to support and address people's needs. So the question is Takaful addressing people's needs? And whose needs is Takaful addressing? Is it the people that need it the most? So I think these are real critical questions, and I can see some familiar faces in the audience who've been talking about micro Takaful for almost a decade and the need for the Takaful sector to do something for the underserved population. If you look around the world, I've been taking Africa, there's 1 billion people in Africa, over 50% of the population in Africa is Muslim. A majority of those are low-income population. They need help, they need protection, they need support to get out of poverty. So it is the responsibility of the Takaful movement to address these needs, and we are still talking about it, and we're hoping that certain actions can be taken with the support of regulators and other stakeholders to develop a concept called micro Takaful. So with that, I'm going to ask our friend, our brother Iqbal, to come on the stage and talk a little bit about the subject and some of his ideas in terms of how we can rethink the Takaful model, reposition the Takaful model, and actually do what Takaful was originally developed to do. So, Brother Iqbal, I'd like to bring you on the stage.
Thank you, Sabir, for that. In fact, Sabir has been an inspiration. He has been beavering away in this sector whilst we have been talking about big Takaful and big ideas. Sabir has always believed in the cooperative model on the small scale, helping people who have no access to that. But we have developed this theme a bit more further, as reflecting on 30 years of involvement in Islamic finance. It suddenly struck me that actually we are talking to a small minority of the Muslim population. And we started to think about it, and the more you think about it, the more obvious it becomes. So let us see this. What is the unbanked population of the world? We see that the total adult population of the world today, we are talking about adults, so those people who can access financial services, is about 4.7 billion people, out of the 7.3 which Faisal mentioned. Out of that, more than half are just unbanked. They have no access to financial services. That means that we are addressing a very small proportion of the population with all the Islamic finance, banking, Takaful, however successful or not we are talking about. In fact, if we drill down, and we will drill down to some of these figures, we will see that for Muslim countries as a whole, my estimate is that only 25% of the population is banked. Which means for the target market, we have no way of reaching 75% of our potential market because they are not banked. And all the models we have depend on people having access to financial services. The situation will change and is changing, but I just want to lay out this challenge that if we don't address the unbanked sector, we're not really doing a service. Those who are banked already have the capacity to tailor products for their requirements, most of them. It's the unbanked who don't have the capacity to do that. And some of the other figures are like, if you go to India, for example, and you look at a population potentially of bankable is about 760 million. 48% of that is banked. But generally banks, if you go to banks, they will tell you that anybody on very small incomes is unbankable, really. We don't want to take that risk, and they are more bother than this. However, India defies that. People who have more than $5 per day of income are only 20 million. 345 million have got less than $5 per day. But still, 48% are banked, which means that fully 30% of Indians who are banked are under $5 per day. India has done something which is more interesting than just telling banks, do what you like. They have actually got a rural banking program which forces banks to declare the percentage of population banked in their areas, and state kind of funding facilities are only available on making those possibilities there. So India has done something quite serious in this. The other question is, you have a lot of unbanked people who are mostly in rural areas. So if you see the constitution of many countries, you find that maybe 75% are living in rural areas where they have no access to any banking facilities. The urban population has greater access. But when we say banking, Takaful or insurance follows banking, because it doesn't sort of it doesn't arrive before banking facilities. Yeah, you need to have access to financial services to be able to do that. So look at now the Muslim population. You have 200 million in India, 160 to 200 million in Pakistan, 160 million plus in Bangladesh, 200 million Indonesia, 91 million Nigeria, 74 million in Egypt, 53 million in Ethiopia, 22 million in Sudan, and say 22 million in Tanzania. These are Muslim population, not the overall population, okay? And so if these are your target markets, what is the banked population? So in Arab states, we have a banked population of about 33%. So countries like Oman, where, for example, it's 33%, including 71% of the urban population is banked. Yemen, on the other hand, only 14% of the overall population is banked, 27% of the urban population is banked. Go to South Asia, the average is 42% because of Indian weight. But look at Pakistan. Only 12% of the overall population is banked. 35% in urban areas. So when our brothers are talking about spreading this thing in Pakistan, they are reaching only a minority of the population with all their efforts, and the small share they have, so it's a minority of a minority. Sub-Saharan Africa, overall banked is about 20%. Again, look at places like Kenya, which is 10%, Nigeria, which is 15% overall, 48% urban on the other hand, Nigeria, but that urban-rural split in Nigeria is bigger. If you look at, in contrast to high-income OECD countries, 92% of the population is banked. So you can see the contrast here between. So if you are looking at spreading Islamic finance in London, yes, you have a banked population. Then it's your industry and your positioning and things which will determine your share. But if you had only 12% banked, as in Pakistan, not very far you can go, even if you get 100% market share. So Arab states, things like Saudi Arabia, 62% banked, 81% in urban areas. Egypt, 41% banked, 43% in urban areas, not very much different in Egypt. Iraq, only 17% banked. Okay, 67% in urban areas, but a lot of population is living in rural areas. Now, by many calculations, you can say that the Iraq population in per capita GDP terms is potentially the richest population on earth, given the oil reserves they have. But you can see they cannot access any of that. South Asia, Malaysia has done better, 60% banked, not very much different from its urban population. Indonesia is way down, 40%. India is 48%. Now, India is not as rich as other countries, but it has, because of this policy, that's good. Bangladesh, in contrast to Pakistan, is 31% banked instead of 12%. And actually, only 25% of Bangladesh population is urban. So what has Bangladesh done to create that increased bankable population? Okay? And we see that Bangladesh in particular, I want to give you an example of that, because of the presence of microfinance institutions, things like Grameen Bank, BRAC, and so on. The Islamic Bank's microfinance program is also strong in Bangladesh. This has created a greater number of bankable population. So the absence of these things in Pakistan, for example, or Yemen, or so on, has actually held back the number of people who have access to banks. Now, how can you create bankability? There are ways in which certain countries are thinking. For example, in Iran and in India, you have a legacy of very high levels of subsidy for petroleum, for foodstuffs, for other things. This is like now embedded in Nigeria and places into the structure. Now, obviously, you can't remove those subsidies at any one point. If you remember the kind of riots we have had in Egypt before, when the subsidy on wheat was removed, or things the IMF imposed conditionality and so on, you can see that it's not an easy thing to do. What they have done, and this is also commended by the World Bank itself, they have said, okay, the subsidy per person, for example, in Iran, works out at $40 per year, per person. Now they said that we will remove the subsidy, but we will give $40 to each and every citizen if they have a bank account. Which means you are trying to create 100% bankability, whilst also addressing the question of subsidy, and slowly you can reduce that $40 down as you reduce the subsidy. But everybody, now in a place like Nigeria, that would work magic, because most of the subsidy is captured by vested interests who sell the subsidized products across borders at full price. Now that will go. That is why it's not introduced in Nigeria yet, because vested interests will prevent it, but that has to be done. Okay, so these kind of things will create greater bankability. Now you can see that every 10% increase in bankable population will increase your GDP growth by 1% per annum, permanently. So if you do 50% bankability, you are looking at 5% increase in GDP growth just from that factor, by creating inclusion, financial inclusion, okay? So what are the other methods? Fortunately, we have these developments in technology which can help in bankability, because you do not need now a bricks and mortar delivery system to rural areas. Particularly as we see that whilst only 20%, 25% of the Muslim population is banked, 85% is using mobile technology. So the argument that poor, illiterate men and women cannot use mobile technology is totally, demonstrably false. They are using it very successfully. And if you go to places like Kenya, where they have one of the more famous mobile platforms, which is called M-Pesa. M stands for mobile, and Pesa in Swahili stands for money. So this is mobile money. And you see that 85% of Kenyans are using mobile money now. Money is being transferred from urban centers to rural centers via mobile technology, and even you can see older women, for example, waiting on their mobile. They get a message from their son in Nairobi that I have transferred so much. They get it on the mobile. Immediately they phone and send the money to their grocer for their monthly bill. So the whole banking solution is delivered on there. And we saw from Brother Daud Sabur that in Kenya, this Re-Takaful platform also delivers the claims of the livestock holders through mobile technology. Okay, so I think there are possibilities within technology now to deliver a service which was not possible before. Before, a rural banking service was too expensive. And that's why if you look at the Grameen model, when I had the naivety, I must admit once, to challenge Professor Muhammad Yunus. We were visiting a conference in Malaysia, and as a young idealistic student, I said to him, "You are charging riba, 30% you are charging." He said to me, "Young man, you are an economist, so let me explain to you. Do you know what is the delivery cost of these funds to these people?" He said, "It costs me fully 25% to deliver the money. It's not going in my pocket. My intermediation margin there is 5%. Have you got any problems with that?" I said, "How come?" I said, "Think about it. How do you take this service to the rural areas? Ask the banks." In fact, if you study, that is the problem. However, what this technology allows you to do is to remove or reduce your delivery cost. If you reduce that to 3%, then the microfinance operator will charge you 8% or 4% or 5%, depending on how far they want to go or what sort of loss provision they want to do. Even with that, if you look at the figures for Grameen or BRAC, there's a book he has written later. It's called "The Poor Never Default." He says, "My default rate is 0. So all your banking calculations about building in 5-7% default rate, forget it. If I reduce my delivery cost, I am actually going to be able to do this at minimal cost." In fact, one of the first ventures which Grameen has gone into is mobile technology. If you go to Bangladesh and ask anybody which mobile phone SIM card I should buy, they'll tell you Grameen. Grameen is the best, most widely available and cheapest SIM card. So they have actually built a whole business on their requirement for mobile technology delivery. Okay? So platforms change, technological change, can help us get there in terms of increasing the bankability of the population. We have seen Bangladesh is almost 3 times as well banked as Pakistan. The both of them started off nearly on the same level at the time of independence. And this is why change has come. Look at 1995, internet connection in Africa, the green areas. And look at even 2001, almost universal. And now we have the undersea cables all around Africa as well. So connectivity is becoming not only universal, but affordable in many places. So this, as I said, is the policy environment and policy benefit of creating bankability. Now we come to our own question. Even with bankability, you need to have a robust microfinance platform to start people on the path to actual enterprises, right? Now, one of the key problems with microfinance is the default rate. Not because of the ill intention of the borrower, but because of the change in circumstance of the borrower. Because the borrower's health, for example, is absolutely critical. If the health fails, the loan will default. The health of the borrower's family is absolutely critical, because in most places, for example, if somebody's daughter or son falls ill, they want to take him or her to the next nearest city for treatment. They might have to stay there for a week with the daughter or son in the hospital. By the time they come back, the cow has died, or the crop has flooded, or whatever, and so the loan will default. So the next step up is where we come in Takaful world. If we now can cover those natural risks through micro Takaful, we can increase the credibility of the microfinance operation manifold. Because the microfinance credit rating then will become much better because the default rate will slow down. And that's where microinsurance and increasingly micro Takaful has come in. Obviously, micro Takaful needs to be funded. Those people may not even be in a position to pay a decent contribution for the micro Takaful pool. Now here is where I think we as Muslims have got an inbuilt advantage. We have this obligation to pay zakat. Traditionally, we have used zakat as a firefighting measure to just help the poor in an immediate need. If you think a bit more wider, can we use zakat for micro Takaful premiums? Imagine the leveraging impact of that zakat in terms of creating sustainable employment and empowerment of the poor. And I know Alberto has talked about this before, but the obligatory nature of zakat gives you a pool which can be used to fund those premiums, which can in turn create that much more bankability, that much more inclusion, and that much more growth in the economy. I know that different schools of fiqh have come to different conclusions on this. In Malaysia and Indonesia, the scholars have welcomed this kind of use of zakat. In Pakistan and India, the scholars have been much more conservative. They have tried to say, no, you have to stick literally to the uses of zakat which have been historically practiced. In other places, we are experimenting. But if you can find a way to get the use of zakat for that purpose predominantly, then I think we are looking at an economic empowerment program which is extremely powerful. And the base of it is micro Takaful. Now, that is for the Takaful operators to design programs and products which will cover the needs of those populations. So we saw the livestock program, which Daud Sabur mentioned, which covers the need for livestock depletion or droughts. We have, of course, agricultural crop protection necessities. We have all kinds of natural disasters which need to be covered by the use of micro Takaful. And micro, of course, insurance where Takaful is not applicable. And people like Brother Omar Goda with his Africa Re are placed to think about these things and mobilize zakat, I believe, as a platform. Because it cannot be a commercially funded platform. It will be difficult to fund it commercially. But we are not talking about commerciality here. We're talking about the Takaful operator's knowledge to mitigate risk. We will pay for it. We don't have a problem with that. But we can build a chain, value chain, which can be very, very useful and productive. And let's see now if we can see a very small clip which
often
Thankful Sabir showed me.
Usually unseen. The right to peace of mind and safety of the low-income population of Sri Lanka is no different to any other person. Given their lifestyle, financial protection is seen as a dire need to help weather difficult times for a people who find it hard to earn their daily bread. However, ironically, help still seems a far cry, as many don't consider them as a viable segment to provide the basic need of protection. Out of a population of 22 million in Sri Lanka, nearly 12.1% live below the poverty line. Surprisingly, only a minute number of them have access to financial protection to safeguard their families against risks related to health and life, leaving a large gap that needs to be filled through appropriate Takaful solutions.
With experience, we realize that credit-only operation will not help them to improve their life standards, and also it will not help us to meet our objectives. So we conducted a small survey and we understood there is a huge need for insurance service as a financial product.
The low-income population is unique in the fact that they lack the understanding of how to mitigate the many risks that life can throw at them. As it is true that financial protection has forgotten them, they too innocently do not realize the needs and value of a Takaful solution that can help them through difficult times. The fact remains that those who belong to the low-income segment are people who are most exposed to the harsh realities of life.
ஒரு இன்சூரன்ஸ் போனாலும் எங்களுக்கு இன்சூரன்ஸ் கைதாரல எனக்கு இன்சூரன்ஸ் செய்யலாம்ண்டு அப்புறம் இப்போ புதுசாக இன்சூரன்ஸ் நிறுவனம் வந்து அது ஓகே சொல்லி இப்போ இன்சூரன்ஸ் பண்ணியிருக்கேன் இந்த நிறுவனத்தில். பிறகு நான் இப்போ கொஞ்ச நாளாக ஒரு 3 மாதம் வரைக்கும் வேலைக்கும் போகையில் மஞ்சள் காய்ச்சல் வந்து ஹாஸ்பிட்டலில் இருந்தேன்னா இருந்து இந்த நிறுவனம் தான் 1000 ரூபா காசு හොස්පිටල් එකකට උදවි செய்தாங்க.
මගේ යාළුවෙක් කිව්වා මෙහෙමයි ස්වයං රැකියා කරන්න එහෙම ණය දෙනවා කියලා මුස්ලිම් එයිඩ් කියන සංවිධානයේ විසින්. එතන හිටියේ මුස්ලිම් එයිඩ් එකේ මහත්තයෙක් මට තෙන්දි මේ ෆෝම් අරගෙන ඔක්කොම පුරවලා ණය දෙන්න එයා පොරොන්දු වුණා. ඒ පොරොන්දු වෙන ගමන් මට කිව්වා සමහර විට ඔයාලට අසනීප වෙන්න පුළුවන්. හිතන්න නැති දේවල් වෙන්න පුළුවන්. ඔයා කෝකටත් අමානායකයේ ඉන්ෂුරන්ස් එකක් කරගන්න කියලා. කැමැත්තෙන් උනත් මම මේක කෙරුවා එතනදී.
நான் 3-4 மாதத்துக்கு முதல் 3 நாள் ஹாஸ்பிட்டலில் இருந்தேன். நான் அந்த டைமில் தண்ணி அடிக்கிறதுக்கு வந்து ஏழாத அம்மா பக்கத்தில் இருக்கிறார்கள் உதவியாக்களை பிடிச்சி இன்னொரு உதவியால் பிடிச்சி தான் 3 நாள் வேலை செய்தது.
These brave men and women struggle on a daily basis to ensure that they and their families have just enough to survive. Sadly, however, what is considered to be a minor health expense could in reality threaten their very existence.
ඊට පස්සේ මම රැකියාව කරගෙන ඉඳි මට අසනීප වුණා එක දිගට. කොහොම හරි ඊට පස්සේ එහෙන් දැනුම් දුන්නාන් පස්සේ මගේ වෛද්‍ය සාතිකයක් ගෙනලා දීලා දුන්නාන් පස්සේ ඒකෙන් මට රුපියල් 7500ක් වැනි විශාල මුදලක් අමානායකෙන් මට ඉන්ෂුරන්ස් කරපෙකින් ලැබුණා.
Convincing them to subscribe for these micro level policies was very challenging. In that context we partnered with Muslim Aid, who had the channel and who also had a lot of experience in the field, and they know the art of communicating with these people.
The lifestyle and understanding of this segment was very different from the norm and required an innovative approach in product design and delivery. A strong nexus between Amana Takaful and Muslim Aid was thus needed to develop a mechanism to deliver value to this exclusive target group in terms of easy payment and immediate claim settlement. As a result of these efforts, Amana Takaful Navodaya was introduced as a micro Takaful solution to help serve their needs. Education also played an extremely important role in this effort in developing the understanding about the need for Takaful and how it could help them. Meetings were held for this purpose, coinciding with collection dates, which were held regularly and provided a good opportunity to interact with the people.
முஸ்லீம் எய்ட் மூலமாக அமானா இன்ஜிலோன்ஸ் என்ற ஒரு திட்டத்தை கொண்டு வந்தாங்க. கொண்டு வந்து ஒரு 3-4 பேர் வந்து மீட்டிங் வச்சு இதுகளால் இருக்கிற நன்மைகள் இதுகளை பற்றி எங்களுக்கு சொன்னாங்க. எங்களுக்கு கொஞ்சம் விருப்பம் போல் இருந்துச்சு. அது என்னென்னா எங்களோட குடும்பத்துகளில் சின்ன பிள்ளைகள் இருக்கு, பக்கத்தில் பிள்ளைகள் இருக்கு.
மாதம் மாதம் காசு கட்டிகிட்டு இருந்தேன். காசு கட்டிகிட்டு இருக்கக்குள்ளே மகளுக்கு சோம்லாமல் வந்துட்டு அப்படியே சோம்லா ஹாஸ்பிட்டலில் கொண்டு வச்சிருக்கக்குள்ளே எங்களுக்கு 3 நாள் வச்சு இந்த 1500 தான் தாங்க. இது காசு சும்மா அணியாக நம்ம போய் திரும்ப கொண்டு இருந்த பிரயோசனம் இல்லையாக்கம்ட்டு அப்புறம் இந்த காசு கிடைச்சது போகிறோம் எங்களுக்கு ஒரு நம்பிக்கை எவ்வளோ பெரிய இது இருக்குது எங்களுக்குன்ட்டு மக்கிய மனுஷனுக்கும் இது எடுத்ததால் மக்கிய மனுஷன் நம்பிட்டு இது எங்களால் ஒரு வருமானம் இது ஒரு பிரயோசனம் இல்லை எங்களுக்குண்டு இப்போ மக்கிய மனுஷனுக்கு நான் சொல்லி இருக்கோம்.
அமானா தகாஃபுல் காப்புறுதி நிறுவனத்தால் ஒரு காப்புறுதி ஒன்றை அறிமுகப்படுத்தி வைத்தார்கள். அதன் மூலமாக நாங்கள் காப்புறுதி செய்து வைத்தோம். எனது மகன் சுயினம் காரணமாக வைத்தியசாலையில் அனுமதிக்கப்பட்டு அவர் அந்த நேரத்தில் நான் அவருடன் இருந்த காரணத்தினால் வைத்தியசாலையில் எனது கடை திறக்கப்படாமல் ஒரு கிழமையாக மூடப்பட்டிருந்தது. அவர்கள் அந்த காப்புறுதி ஊடாக எனக்கு சிறிய தொகை சுமாராக 3700 ரூபா அளவில் அவர்கள் எனக்கு அவங்க சன்மானமாக தந்தார்கள். இதில் நான் செலவழிக்கப்பட்ட தொகை 2700 ரூபா ஆகும். அதனால் நான் மூடப்பட்ட கடையை மீண்டும் எனக்கு திறப்பதற்கும் நான் தொழிலில்லாமல் இருந்த நேரம் அவர்கள் தந்த இந்த தொகையை எனக்கு பிரயோஜனம் அளித்ததற்காக நன்றி தெரிவிக்கிறேன்.
முஸ்லிமை நிறுவனத்தில் ஒன்றெடுத்து மார்க்கெட்டில் பெரிய வியாபார நாங்கள் செய்யும் வரும் காலத்தில் என்னுடைய மகன் மோட்டார் சைக்கிள் பிடித்து அகால மரணம் ஆயிட்டான். அதை கொண்டு அவர் அந்த லோன் எடுத்து இதனால அவர் இன்சூரன்ஸ் பண்ணி வச்சிருந்தார். அதை கொண்டு அந்த நிறுவனத்தில் உத்தியோகத்தர்கள் நிர்வாகிகள் எங்களுக்கு ஒரு பெரும் தொகையான பணத்தை தந்து எங்களை ஒரு துயர ஆற்றி எங்களுக்கு ஒரு துணை புரிந்தார்கள். அதன் தொட்டு எங்களுக்கு நிறுவனம் மென்மேலும் பல்லாண்டு காலமாக அது இதையும் விட வளர்ந்து கொண்டு எங்கள கிராம பகுதிகளில் முன்மூலமாக வந்து சேவை செய்து கொண்டு இருக்க வேண்டும் என்று நான் இறைவனை பிரார்த்தித்து அந்த நிறுவனத்துக்கு நன்றி.
அதே மாதிரி எல்லா மக்களுக்கும் இன்சூரன்ஸ் உதவி காசு தந்தால் அது பெரும் நன்மையாயும் இருக்கும், எல்லாருக்கும் உதவி செய்யும்படியும் இருக்கும்.
ස්තුති කරන්න ඕනේ අනිවාර්යෙන් මුස්ලිමේට් සංවිධානයටයි අමාන ඉන්ෂුරන්ස් රක්ෂණ ආයතනයටයි. මොකද මුතුර් කියන වගේ මෙච්චර දුෂ්කරතා තියෙන ගමකට ඇවිල්ලා මේ වගේ දේවල් කරලා අපිට අද දෙපැයින් නැගී හිටින්න පුළුවන් නම් ඒකට එක හේතුවක් වන්නේ ඔය ආයතන දෙක.
அதோட சேர்த்து எங்களை போல நிறைய பேர் நிறைய கஷ்டப்படுறதுகள் செய்யலை. இப்போ நிறைய இன்சூரன்ஸ் வந்து செய்யாமல் இருக்கிறதுடா கட்டுறதுக்கு இயலாத நிலையில் இருக்கிறதால செய்யலை.
When Re-Takaful wanted to step into micro insurance, in our terms we call it as micro-takaful, there was a lot of concern whether it is the right decision to step into this particular area, since it was an unknown area for us. From a business sense, yes, it does not look that lucrative in terms of bottom line, but looking at the concept of takaful, the concept of mutuality, we were very determined that we should step into this area and provide solution for the larger population who are in the poverty line. Micro-takaful is more than a business, it's a noble cause.
These are but a few of the many stories that make up the lives of the low-income community who face challenges with no power or means of overcoming their grief. As a concept built on the values and principles of mutuality, contribution and participation, it becomes a responsibility of Takaful to practice inclusivity in bringing light into the homes of a forgotten people.
So that is what we mean by a gap in Takaful provision, and that is what I mean by rethinking the Takaful model for provision. Thank you very much.
Thank you, Brother Iqbal, for covering such an important topic. So what we heard was that the unbanked population is a huge barrier to development of financial inclusion and financial products for the low-income sector. We also heard that regulation and technology can play an important role in overcoming some of these barriers, and that insurance can be an important tool for poverty alleviation. Brother Iqbal also highlighted the potential role of zakat, utilizing these funds to support the development of micro-takaful. And in the video we can see that micro-takaful can have an important impact on people's lives, be they Muslims or non-Muslims. And in addition, we heard from Amana Takaful that they have taken a different mindset and a different approach to delivering takaful to the low-income communities. This is not a commercial approach, it's not even a benevolent approach, it's a very long-term, need-based approach, which they have really sort of got down to the nail in terms of what is needed by the people. And they see it as a responsibility, as a takaful operator, they see it as a core responsibility of theirs to address the needs of the people that need the insurance protection the most. So thank you, Brother Iqbal. I'd like to just open up the floor. We have a lot of experiences here in the area of micro-takaful, and questions we can ask, starting at the front. If we have a mic, please.
My name is Tariq Mahmood, representing Pak Qatar Takaful Group from Pakistan. I've seen very interesting stories about microfinancing. There are 3 microfinance banks in Pakistan, and as far as that mobile, yes, the Easy Paisa is a very growing segment of putting people into the banking sector. Unfortunately, Takaful companies do Takaful only to the Islamic Sharia with the Islamic banks, and there isn't any Islamic microfinance till today. And there are 3 conventional microfinance banks that they are so until or unless there is some Islamic microfinance bank. Our Sharia in Pakistan, Sharia advisors are very rigid to these things, you know. So it's a pity that we cannot, unfortunately, you know. But I'm very happy to see and to how we can put the net, the poor people into that. But this Islamic, unless or until there isn't Islamic microfinance, the Takaful cannot do anything, you know. That's the unfortunate.
Do you have any response?
Yeah, I agree. You see, my point is everything is relative, right? So if you compare Pakistan with Bangladesh, both from very similar kind of culture, background, whatever, why is one country twice as well banked than the other? So we have been behind in Pakistan for reasons which we need to identify. One of them clearly, as you say, that the Islamic banks haven't been set up for financial inclusion. They want to operate in Karachi and Islamabad and Lahore. They don't want to go even 10 miles out, right? If that is so, we don't need them. We need to find others who will do the job. And that is the point.
Question on the front.
Yes, please. A question and a comment before then. I was happy when the professor mentioned the issue of Grammy Bank, Muhammad Yunus, and stuff like that. When you had the New Orleans flooding, there was a CNN program in which they brought him and Bill Clinton, and they asked him what's the success story of his Grammy Bank. Is that because the people there are religious and God-fearing? That so many floods have happened in Bangladesh, but they don't go on looting. But one flood in New Orleans, and it was losing galore. So what I'm trying to draw out is the fear of Allah that's really there. Now, having said that, I think first I should thank you for your excellent delivery. And one way we need to look at, because I'm from Jaiz Bank, Jaiz Takaful. We've already pioneered the Islamic Bank in Nigeria. We are now going to the Islamic insurance, Takaful. I think one area which I was really impressed with was the way you linked microfinance with the use of zakat. It will be a good selling point for us. You see, some scholars, which you said, if you actually mentioned, disagree with the use of the proceeds of zakat for microinsurance. They insist on the fact that Surah At-Tawbah, Allah has mentioned the 8 specific areas which it should be used for. But I think without disobeying Allah, if you look at the 8 criteria, I think we can improve on it. Brother Patel, I just remembered we were in Sudan last year for your conference. And when we met the Minister for Finance, who is also in charge of their zakat thing, is that they have a system whereby if they give you zakat, inshallah, in 3 months' time, they want to place you up. They want to empower you so that in 3 years, you should also be able to pay zakat. And I think we need to look into this kind of model. I think that's about all I want to say, but maybe in passing, I'm from Nigeria, I'm proud to be a Nigerian. But I also want to mention the fact that when it comes to sub-Saharan Africa, we already mentioned Nigeria. There are other areas, there are other countries there, especially in the northern fringes of West Africa, through the Usman Dan Fodio dynasty, which really brought Islam to West Africa, northern Ghana, Cote d'Ivoire, Senegal, Mauritania, Benin Republic, Togo, Chad, and Cameroon. I think we also need to be focusing on these areas too, in addition to Nigeria. Thank you very much.
You're right that, the whole of the Bilad al-Sudan, as you call it, from Gambia and Guinea right up to Sudan and Ethiopia is a Muslim belt, right? And we need to focus on that. And it's also particularly endangered with both deforestation and extensive overuse of water resources. So we need to focus on that in terms of activity. But you see, the shift in the minds of scholars about the use of zakat will have to come. And we have to play a role in creating that. Because just look at Nigeria, look at the north and south divide. And part of the problems of this Boko Haram and things stem from the fact that poverty is endemic in the north, and this is a problem. Unless we solve that, we cannot solve the other problem. So I think the scholars have to look at maslaha as well, as to where we are coming from in that area. Yes.
Dr. Sharik?
Assalamu alaikum. This session is focusing on financial inclusion and micro-takaful. I come from India, where almost 55% population as a whole is financially excluded. And if you take into consideration Muslim population alone, then 70% plus are financially excluded. That's one aspect. Second is, last 10 years or so, we have seen influx of microfinance companies coming to India, funded by private equity players across the globe. And they were charging interest minimum 24% to 55-60%. And that led to a large-scale crisis of where many hundreds of poor ended up committing suicide, which is easiest in India these days. So entire microfinance sector is going through various crisis period, including lack of regulation or overlap of regulation or too much regulation, and then there is some ban in some places and some states. So in the light of this background, and also keeping in view almost 16% of world Muslim population lives in India. So what are the products that could be suitable, keeping in view the ground realities in India? Number one, my query is this. Second is, what people like us can do to promote and to accelerate the process of financial inclusion. This is second query. And third query I would like to ask is, what kind of support, I'm not necessarily asking for financial contribution, but technical and intellectual and support like that, where it is easier to learn from the experiences rather than going through the process of learning and then coming up to. So these are three queries I wanted Dr. Iqbal Asaria to please share your thoughts on that.
So Sharik Bhai, you have provided part of the problem in a different format. You said that, for example, nearly half of the Indian population itself is financially excluded. But 80% of the Indian Muslim population is financially excluded. So it's a much more higher proportion. So first we have to figure out why are the Muslims more financially excluded than the normal population, overall population of India, right? Clearly, part of the reason is that they think the conventional banking system is haram. So if you bring an Islamic equivalent, we hope that it will address some of this problem, okay? And that is obviously one of the efforts you have been making, trying to bring Islamic banks in there. But these Islamic institutions will have to function on what we are looking at microfinance, micro-takaful sector. Now, India, even in its traditional microfinance sector, got sucked in by private fundraisers who wanted to do IPO and make money out of it. And they started to charge 40-50% rates. And you know, the whole thing collapsed when a ceiling was put on the kind of rate they would charge. I think it was 35% or whatever. And the whole thing in South India of the microfinance, conventional, collapsed. So to address the Indian situation, again, we need to find a Islamic solution, but which is also socially motivated. That is why I brought the institution of zakat in it. Because by bringing public funded zakat contributions, you can moderate the private sector profit motive. Okay? You can balance it because society has a say in it. When you do that, you will create a level of financial inclusion. So today's zakat recipient will become tomorrow's zakat payer. It is a long process, but I think Indian Muslims need to go there. But there are other problems in India, as you know from the SHR report, for example, that there are inbuilt institutional discriminatory measures against Muslims. This will need to be addressed in a situation. And fortunately, what we have seen in Delhi recently, where those of you who are not aware, this party called the Aam Aadmi Party, or the Ordinary People's Party, has captured, I think, 67 out of the 70 seats in Delhi. Prime Minister Modi's party, the BJP, which had an overall majority in the national election, has only got 3 seats in Delhi. Now that shows, and a large part of the Aam Aadmi Party's voting bank in Delhi was Muslim. So there is a possibility of addressing those institutional discriminations through this kind of civil movements and voting. But we will have to get our act together as well in the Islamic Bank. People shouldn't go and say that Islamic banks are more expensive than other banks, right? That will not work in India. So, but if we fill the gap, then clearly Indian Muslim population is as large as Pakistan or Bangladesh. And that is, between the 3 of them, they have a third of the whole Muslim population of the world, right? So we can make some difference.
Is that okay, Dr. Sharik? You can take it offline. Eh? Okay, brother, over here, please.
Yes, thank you very much for the presentation. Not a question, just a shout out, as we say in the States. It was very nice to see the video at the end. The name of that product was Navodaya. I think I'm saying it correctly, and which translates as Dawn of a New Era. But the shout out is to the creator of that product. Her name is Oniza Farine. And this was the first branded Re-Takaful product in the world. We're pleased to say that she is now in the US and she is one of our freelancers. So she's been working with us and trying to do some things. But the fact that she was not able to be here today, and so we can at least say that they showed some of the work that she's doing. Again, her name, and we have a lot of males here, and we don't think that they're females or professionals in this field. We do have female professionals, and her name is Oniza Farine from Sri Lanka.
Okay, thank you, brother. Yes, we know Sister Oniza quite well, so appreciate that comment. Yes, brother, in the back, and then we'll come to the front, please.
Thank you very much. According to the World Bank report, the 46% of the world poverty reside into the Muslim world, while the total population of the Muslim in the world is 24%. So we can say the half of the world poverty in Muslim world. On the other side, if we see Islamic financial industry, which is around $1.6 trillion right now, the share of Islamic microfinance is less than 1% right now. And similarly, in the Takaful, the micro Takaful products consist of the less than 1% of the Takaful market as well. So my question is that either Islamic financial industry is only for do-haves. What is the solution for don't-haves? Second one is that in Pakistan, in India, in Bangladesh, when we are talking about Islamic banking and banking industry, we can see a rich man or any corporate and any other organization can get loan from the bank on 10 to 12%. On the 10 to 12% on the profit or on interest. But when a poor goes to any financial institution, he or she get loan on 30 to 40%. So why financial instruments are more costly to poor people?
$1 million question.
Okay. I think that's why I contrasted India, Pakistan, and Bangladesh. Yeah, all three are very similar situations, but all three are doing differently on those parameters. So we have to figure out what, for example, Pakistan is doing wrong compared to Bangladesh or India, right? And secondly, you're quite right that the operational metrics of Islamic financial institutions has to be challenged. As I said, if they say that we are only for the people who are banked, which is 20%, we say, okay, we don't need you. There are other banks who can do it. Find a way to go to places which have not been touched. And that is why I said that Micro-Takaful offers a way to uplift the credibility of microfinance, and funding of Micro-Takaful from Zakat, which is proving challenging in Pakistan because of objections from scholars, as you know better than me, needs to be unlocked. When we do that, we will open the gates for movement in this direction.
Did you have a question?
Iqbal, the video was very touching and very moving. My question, I have 1,000 questions, but I'm trying to net them down now. I noticed that Muslim Aid was involved, and I noticed that Amana Takaful was involved. I didn't see any technology. So my question really is this a charitable model, or in which case, is it sustainable? Or will it run out when the charity stops?
Okay, with your permission, I think this clip is a bit old. So I'm sure that much more technology is involved now, both in disbursement and claim settlement. So that makes it much more cost effective, right? So as the person from Amana Takaful himself said, that this is not necessarily fully commercial, but it is also not charitable, in that sense that it's not somebody who's putting money into this. That's why I said that if we bolt on zakat onto this model, it preserves the sustainability and commerciality of the thing. They haven't, in that video still, they haven't got zakat there, because as soon as you come to zakat, you will have all kinds of other questions coming up and so on, which need to be settled. Overall, we need to take a macroeconomic view that the use of zakat is best utilized here for Micro-Takaful to uplift the whole poor section of the population. This is the role of zakat, right? To provide a social safety net. But if we want to create a sustainable social safety net, then Micro-Takaful has a huge role to play in there. And if you can use zakat for that, in my view, that is the best leveraging you can get.
So from our experiences, I think in microinsurance, you look at between 5 to 8 years to reach some sufficient scale to reach sustainability. So it's a really very much patient approach, patient capital approach, which I would like to ask a question to Brother Iqbal in terms of, we understand the use of zakat as a potential tool to support those years of development to reach sustainability. You find in the microinsurance community a lot of donor money is going towards microinsurance. The impact is quite debatable because you have commercial insurance companies who are entering into markets who they have no clue about. And they don't understand how to deal with these people, they don't understand the needs of these people, and the products that they're offering are not in line with their requirements as such. So going back to the agenda, which is rethinking Takaful, do you feel that the existing Takaful model and the existing Takaful players, albeit except a few such as Amana and others, are the right providers of micro takaful, or is there a need to think of a new model to deliver micro takaful on the ground?
So that's a good question. I believe that unless these existing operators retool, we will need a new set of operators. And as Faisal outlined, that with new technology, as we know, old technologies and old legacy systems can become dinosaurs in no time at all. So I believe that if we have the focus right, what we want to do, and use the available technologies in our hand, then we can even bypass the existing takaful companies if they do not want to engage in this sector, or their shareholders do not want to engage in this sector. But as you know from your own experience, Sabir, with the cooperatives, that there's a lot of tension between shareholder interests and participant interests. And this has been demonstrated in the takaful model all over. Now, here is one chance for us to skew it back towards the participants' interests, right? If it needs a separate set of institutions, so be it, because the goal is much more important. But the principles of takaful will be applicable, and we have this additional facility that we do not need dowry funding. Zakat is there, which is a beautiful addition to the whole thing.
Any more questions from the audience? So with that, I'd like to thank Brother Iqbal for his wonderful presentation, and thank you for your time. I think
yes, thank you, Brother Sabir, for that. I must appreciate that Sabir came down specially to do this small chairing, because I insisted that we need a person who knows cooperative insurance well to come down. So thank you very much, Sabir, for coming. And now it remains for me to just summarize our 3 days of endeavor. We started out with the theme of rethinking the takaful model. We are nearly 30 to 40 years down the line with the initiation of what we call contemporary takaful. We started operating with quite an optimistic outlook, as did a lot of institutions in the West, which, for example, dabbled in Islamic finance. For example, I remember that when Lloyds Bank was thinking of going into Islamic finance, they thought that as soon as they announce that we are doing Islamic finance, we'll get a flood of people coming, and we don't need to market the thing at all. Then I told them, I said, look, we have created a product. At that time, there was what we call a child trust fund, which was a fund in which the government would put, I think initially it was £250 for each child who was born. So it was given to you, and then you were free to top it up. And then the idea was that at the age of 7, the government will put another £250, and at the age of 14, another £250. And if you put in your maximum allowances, the idea was that by the time the child was 18, there would be enough in the fund to pay for university fees or whatever for the child. Now, remember, in the basic bare bonds, there was no need for you to put your hand in the pocket to create the child trust fund, right? So we created what we call the Sharia baby bond, structure, which means it was a Sharia compliant fund in which this fund was invested. And so naturally you would find, or you would expect, that 100% of the Muslim parents would put their money there. This is not something you have to put from your pocket. The fund at the back was equivalent to conventional fund. You remember, Dr. Noripa, this was the Scottish Widows Islamic fund. And the take-up was 5% of the Muslim population. So I told Lloyds Bank, it is not sitting there for you to get. You have to really convince the people that you are doing something which makes sense, which meets their religious requirements, yes, but also makes sense. We did further research for them to see how and when Muslims will invest. And we found some very interesting results. Clearly, if you ask any Muslim on the street, do you like Sharia banking, Islamic banking? So, yeah, of course. Then you ask the next question, will you bank with an Islamic bank? Then it starts to become maybe.